All right. Good morning. Okay, S&P 500. Oh, you can see these levels overhead, 6750, that large peak to the left in red. Okay, 6750, and one down here, 6475. We're above that level for now. We got a 9:30 expiration, large expiration. Of S&P options. Okay. Bought a little bit of Nvidia, a little bit of Tesla. See, added to positions. I'll see if those bounce. Those are day trades for now. ACHR, just watching that one. Archer Aviation, that might be trying to turn. It's at a level of liquidity. If you look at the daily chart, ACHR. No, that's not it. ACHR. Okay, you can see this large level of liquidity here, this green band. Okay. Okay. OSRH. Yeah, Bill, I see that too. FedEx and UPS in particular, I see a lot of people like local citizens in their own cars. They'll have an Amazon vest on or whatever. Excuse me, a UPS vest or FedEx vest, and they'll deliver packages. I guess they make extra money. You know, they don't have enough drivers. Interesting. I mean, if you're into that sort of thing, you want to make some extra money, maybe contact your local UPS or Amazon or postal, whatever, FedEx, UPS. I do see a lot of people doing that, so I guess they're making extra bucks. It seems to be safer than doing, say, Uber, where people get robbed from time to time, even though they don't carry cash, which is pretty interesting. I guess the criminals probably figured that out. All right, so we had a little drop there in the S&P. S&P just dropped off a little bit. Okay, we're up at 40, and now we're only up 25. We're going into the opening bell about 8 minutes from now. I'm your host, Cazzavetti, coming to you from theclosingprint.com. It's Friday, the 21st, following a rather tumultuous Thursday where we had a lot of stocks breaking patterns out of the blue. There was a lot of different ideas about what caused yesterday's pullback. Everything from the carry trade to crypto, credit markets, margin issues. I don't know how margin would affect it at that 10 o'clock area where we rolled over. But if you were paying attention, that was a really great trade. Watching MACD, enabling MACD on your S&P chart, very helpful. Okay, for entries as well as exits. You can see what we were thinking yesterday. Hedge flows turned over. Right, hedge flows turned over just before that started to hit. If we look at yesterday's action, okay, those hedge flows right here started to peak and they dropped dramatically. You can see all of the red, the gamma building up, negative gamma down below. And then we bounced a little bit. If you recall, we bought and then we dipped right after we bought puts. Actually, we bought puts and then we bounced, right? And we were targeting the 6,700 strike. I believe that's what we're looking at. Anyway, the markets just went crazy. Those options went from $5.20 to $155. Many of you said the same thing as I did. Sold too soon. Still made a nice profit, but $155 for an option you paid $500 for. That's insane. So we don't know exactly what happened. At least I'm not aware of it. There's a lot of speculation. Okay. We've got 4 minutes to go. 4 minutes to go. Okay, so here's my plan. Here's my plan. If we do bounce and you had too much exposure, you were really freaking out yesterday, that's telling you got too much exposure. You got too much risk on, okay? So in those kind of circumstances, what I would do is reduce my risk, however I do that, whether it's selling overhead premium to bring in cash flow, sell a 10 delta overhead, something like, I don't know, Apple, something that's got a lot of implied vol. What do we got? 3 minutes. All right, let me just look at this real quick. All right, so you can see all of the New York FANG stocks over here on the left now. So they're no longer call expensive. JP Morgan, it's a little bit expensive. Okay, Goldman Sachs is back into the middle. All right, so this is telling you all of these things these were over here a week ago. All of these stocks were over here on the right side quadrant. That's telling you they were very expensive and likely to reverse. If we turn on the history, I think you can see all of the history here, where they were and where they wound up this week. So that's important to note. Okay, we got 3 minutes to go. Why is this going so slow? It feels like it's all right. Anyway, so if you have too much risk, if you were freaking out yesterday, I would suggest selling some premium. Not necessarily these names anymore because they're not that expensive, but we'll look at a few names. I did sell an Iron Condor yesterday on Gap stores. I posted that in the spreads channel. Okay, so that's NVIDIA. Didn't post it in the spreads channel? I thought I did. Um, very weird. Did I post it in the Gap Traders chat room? Okay, we got 2 minutes to go. Yeah, I know why I didn't post it. I told you it was a little risky because I wound up selling a 35 Delta. Won't say it was a mistake because the markets are pricing at 11%. So a $2.50 move would be 10% on Gap, and it's pulling back in right now. So Gap, that's fine, Gap. So I did say that this was going to be a little risky, so I wouldn't suggest taking it unless you know what you're doing. $970 in credit. So selling credit, selling premium is one way to reduce your risk. Well, you're kind of increasing your risk, but you're really reducing it and you're bringing in premium. So it's debatable. Depends on how you look at it. If you know what you're doing, it's reducing your risk because you're bringing in cash flow. You could sit in cash, do nothing. One of the other things I'll be thinking about doing is potentially hedging. Brent had some good ideas in the Gamma channel. All right, as far as broken wing butterflies, etc. We need the S&P to get back above 6,700. Okay. Okay, let's see if I can mark this up real quick. Support and resistance. Okay. That was fast. Okay, getting better at this. And we're open. All right, first 15 minutes, I'm taking profits off the table, reassessing the markets. Gap stores, what's Gap doing? Gap's pulling back. All right, so Gap, that's doing exactly what we want it to do. A little profit taking. I'm going to go ahead and take that off. IBL Crush. Okay. Yeah, that's up quite a bit, so I'm going to go ahead and take that off. Okay, $57.
Hi, took alert plus 800.
Okay, I put a limit order in to sell. Buyback.
MNTK, SGPX, UPXI,
Okay.
SPX, IBTA.
All right, so NVIDIA fading a little bit. Okay, there goes Google. I want to do something with Google. I already have Google calls. Let's see how those are doing. Those are up quite a bit, actually. I have January 305s on Google. Google.
MNTK, SGPX, UPXI, IBTA, DIBI, PXIU, FSI, MSTU, SABA, TV.
Okay, so hopefully we get a good setup. It's a Friday, so S&P, I don't do as much on the S&P on a Friday usually. Looking for S&P to give us a signal. All right, the Gap is chopping around here, Gap. Okay, so you know where support is down here. Hedge flows are turning down. We've got a S&P, big AM expiration.
OSRH, NNOX, SGBX, PACB.
Okay, you got a big AM expiration options that are affecting prices at the moment. Okay, Gap stores. Gap back to 24. All right, so I'll be able to get out of this pretty soon, it looks like. Gap.
OSRH,
RIOT. MSTX.
BMNU.
SGBX. DBLT. CRDO.
CYPH. IBDA. BAIG.
All right, we're starting to bounce S&P.
PACB.
All right, if you're chomping at the bit to take a trade and you're looking forward to something that happened yesterday, that was highly unusual. So we won't see anything like that anytime soon. Frano can tell you that you might buy some options, like about $8 S&P. Okay, so I'm all out of the gap at 60 gap.
SGBX. RGTZ. QPTZ.
QPTZ.
Okay,
SRH.
gap.
SGBX. CYPH. TNGX.
OPEN. NNOX. DBLT.
Okay, gap. I'm all out.
PSM.
So that was an easy profit there.
SGBX. CRDO.
Little risky. Generally, you don't want to take a 35 delta iron condor on something really volatile like Nvidia. That would you get your ass handed to you. There goes Google. Nvidia is pulling back a little bit, a little profit taking. So people are a little. I sense people are a little bit concerned.
MSTU.
They may be taking profits off. They may be reducing their risk, like I've been suggesting early. Okay, after what happened yesterday, they just get out of the market and say, "Phew," you know,
SRH.
just about the time that you get UVXY to move in the opposite direction, right? So you guys know how this works. Okay, there you go. This tends to rally for 5 to 6 days, as you can see over here, second week of October, pops up and then reverses the next day. I'm suspecting that this is going to continue to move lower, that we're probably going to rally today
SGBX.
as that expiration rolls off AM. So junk bonds are inside day for now. Okay, if we were talking about this yesterday, if the markets were really concerned about a meltdown, they'd be buying TLT, they'd be buying bonds, safety, they'd be buying gold. Were they buying gold yesterday? Not really. So if you know what to look at, it'll give you a good idea what to expect, right? So while price is a bit random right now, and we don't know what the flow is going to be, what direction we're going to go, we'll watch for hedge flows to tell us. We'll say this: when we drop, the reason why we had that big move yesterday is because dealers to hedge have to sell futures, and that exacerbates the move to the downside. So that's the one thing about negative gamma and dealers selling as prices drop below key levels like the hedge wall or zero gamma, etc. The dealers are going to start selling futures, and that presses things down. We just kept going yesterday without any kind of bounce. Well, we got a little bounce, but didn't last very long.
RIOT.
Okay, just watching hedge flows for the time being. Okay, gap that did bounce, so it turns out I got a good fill on that.
JMIA.
Jumia is on the move. Okay, let's see what Jumia is doing. AC Archer Aviation is moving higher.
BLT.
Archer Aviation.
TNGX. QUBX. MSTU. ASTX. MSTX. JMIA. DBLT.
OSRH. ANAB. IBTA.
NNOX.
Okay, NVIDIA did roll back over a little bit. Futures are starting to move. Futures are starting to move.
BMNU.
Okay, let's look at 0-day. People aren't betting too much today. You see that? There's hardly anybody trading right now.
CMCT may resume in less than a minute. TNGX.
All right, you can see in this live screen here, there's hardly any trades on this right now. Okay, let's look at net open interest. There's nothing down until you get to 6,500.
OSRH.
NNOX.
That might be a nice 6,500. That might be a nice lotto trade if it does start to roll over.
DBLT.
There's a big note at 6,500.
SOXS.
That'd be a good hedge.
CMCT may
The
rest
markets
within
go south quickly. All right, hedge flows are still pointing lower. I tend to want to wait until 10 o'clock. Yesterday we went a little bit early, and as it turned out, that 10 o'clock dip,
NNOX.
we saw a bounce, and then the markets rolled over. S&P. Let me take a look at these 6,500s. See what they're going for. That could be a stupid bet too. Let's see, 6,500. 6,500. Oh, okay. Those are 18 bucks. Wow.
NNOX.
13 bucks. All right, they just dropped 5 bucks. Profits just dropped off 5 bucks. The 6,500. They were 18, now they're 13.
DBLT.
Holy crap. Okay, let's get a little bounce. Maybe we can get these things a little bit cheaper.
PACB.
Okay, we're starting to dip a little bit.
OSRH. CYPH. MCRB.
CRCG.
Still, there's not a whole lot of people trading here. We had this trade came off right just now. Okay, they took profits right there at 65.50. So if we get puts to start monetizing, we could see a nice rip to the upside. So this could go either way. All right, Tesla just saw a little profit taking there. Tesla, Apple popping.
PACB. CRCA.
CYPH. OSRH.
MSTU.
There goes Apple.
MSTX. CRCG.
ECG.
Gap. We're done with Gap. Thank you very much.
EDX.
That was a fun trade.
GEO. NNOX.
IBDA.
DBLT.
Okay, Apple. Okay, we're looking for that breakout on Apple. Apple got whacked yesterday. Looked like it was going to go.
NEBX.
I didn't buy anything on Apple. No, I did not. Okay, good. Apple.
MSTU.
I don't know.
BBX.
I'm going to wait a few more minutes.
MSTX. NNOX.
Meta's starting to bounce. Google following through. Apple. All right, so we got four of the NASDAQ 100, or four of the New York FANGs, I should say. 5
DBLT.
moving higher. Apple looks like it wants to go. What about a scalp on Apple? We're right at supply right now. We had a buy order block. We broke above the pre-market highs. Okay. Let's see what MACD is saying. MACD rising. Looks like it might keep going.
MSTU.
Watch Apple. Future's still stuck here. Okay, yesterday we pointed out how watching MACD was a good tell on top of hedge flows. Okay,
OSRH.
so right now MACD's trying to turn
BFLY.
upward. Okay, let's update this real quick.
MIGI halted down.
Okay, updated numbers. Those will shift a little bit.
OSRH.
Okay. I'd like to get these 6500s a little cheaper.
CMC
Could do a
less
vertical.
than a minute.
You could buy like the 6500, sell the 6450, something like that. 6500. Let's see what that would do.
OSRH.
65. They're $13 now.
ECG.
I don't trust the markets here. It feels like we could just continue what we started yesterday. Tesla, Nvidia, both coming back to stops from those ads. Okay, let's go see what's the markets still look pretty good. S&P, the New York FANG components. We had started off with about 5 stocks red. We're at about 30 right now.
NNOX. DBLT. GSM.
All right, so currently,
NEBX.
what happened there? Okay, currently we've got 65 stocks on the NASDAQ 100. Just over 50% green, but we're losing a few here, it looks like. 360 stocks advancing on the S&P 500. So in order for the S&P to drop off, we need to see that number dropping too. Watch the number of stocks trading on the S&P 500. 370 are advancing out of 500. Only the 50, 30, and 60-minute on buy signals. The 5 minutes still on a sell signal.
SMX.
Apple hanging out at the high. Google hanging out at the high. Meta hanging out at the high of the morning.
And CAG.
Tesla did see some profit taking. Tesla.
TSLQ.
OSRH. INTJ.
NNOX. DLTZ.
And CAG.
SOXS.
Meta.
VIX.
All right, a little fade. Apple fading from the high now. Google still pushing.
OSRH.
Google looking better. Google. I have January calls on Google. So I'm looking for this trend to continue. Google. Getting a little extended. Let me just go to
SMCZ.
And CAG.
SCAG. NNOX. QBT.
Google.
SOXS.
Weekly.
UVIX.
Trending.
ION.
All right, S&P is starting to fall off here. Watch the S&P. That's why those puts were so expensive. I guess they're looking at this 6,500. Okay, this is new. This is new. 6475 is new.
PLTZ. SMCZ.
And CAG.
MIG. I may resume in less than a minute. QBTZ. SOXS. UVIX. MFI halt into the upside.
OSRH.
OSRH.
Okay, so this is new here. That wasn't there a few minutes ago, I don't believe. That was there. Okay. So belay that. That's not new.
DBLT.
6475.
UVIX.
OSRH.
6475. I didn't have 0-day enabled. Yeah, I did. Okay.
AREC.
A little bit of support right here. If we start to bounce, if hedge flows start to turn up, we'll see these levels monetizing.
S. SY.
OSRH.
CRML. NEBX. NBIL. NNOX. NBIG.
AIIO.
AIIO. RGTZ.
Okay, watch that. Haven't done anything yet.
OSRH. AREC.
DBLT.
USARW. CYPH.
TII may resume in less than a minute. NEBX. NNOX. NBIG.
AIIO.
AIIO.
OSRH.
RGTZ.
USARW.
DBLT. IONC.
OSRH.
HUT. TII may res in 10 seconds. DBLT.
Okay, what are we going to do here? We're starting to hook upward. Okay, there's a little bit at 6,600.
AREC.
So below 6,700, we're pretty risk off, right? So you should be thinking about reducing your risk. If you're a short-term trader, if you got options that expire today or next week.
OSRH.
NEBX. HUT. NBIL.
If you're an investor, it's not much you need to be concerned about. Be looking to put some of that cash to work. I'm 20% cash in my 401k IRAs. Still haven't changed that at all. Still looking for a 5. We got the 5%. Still looking for a pullback, a little bit more extended to the downside to add. For now, I'll just keep that cash ready to invest.
OSRH.
NEBX.
Okay, S&P, nothing yet.
HUT.
There's liquidity down here.
NNOX.
Starting to look a little more bullish now.
CFI may resume in less than a minute.
OSRH.
NEBX.
Okay, who has earnings on Monday?
NBIL.
Monday, let's see. Next week we got Baba,
OSRH.
Nio, Abercrombie and Fitch. Probably going to be another one of those. Dell on the 25th. 24th, we've got Zoom.
AIIO.
Zoom on the 24th. Let's take a look at Zoom. Zoom.
NEBX.
Okay, it's sitting on the 200-day. I don't like it. This could snap and drop off.
CODI.
Depends. Maybe the 70 strike for the puts and call side above
THH.
current highs, say 90. We'll see what that prices out to be. They're looking for, what were they looking for? Okay, Zoom.
NEBX.
All right, 7%. So just roll it up to 10%, round it up to 10%. All right, S&P is starting to look good here for a long setup.
may res in 10 seconds. OPEN.
All right, let's see what target resistance looks like on S&P. Let's see, first level is 65.90. Let's see if that coincides with what we see here. 65.90. Yeah, a little bit. 65.90, then 6,600. And then 66.30.
EPSM.
OPEN.
OSRH. USARW.
TZUP.
Okay, we're gonna do it here, or what are we gonna do? S&P futures. We ran into some resistance right here earlier.
OSRH.
Are they gonna rip this? 5, 15, 30, 60-minute on buy signals?
NVIG. OPEN. OSRH.
Okay, I'm gonna take a long here. Gonna take a long. Let me take a look at S&P on call side. Today is the 21st of November. Wow, these are really inflated. Yikes, a bee. All right, so we need to take verticals. 40 delta would be 6,600. 6,600. All right, those are $20. Let's see what that price is out to be. 20, 66,
OSRH.
66, 20,
OSRH.
$6. Only problem is I can't follow those.
VOIG.
6,600s. Okay, we're starting to move here already. Could do SPY. Let me do SPY. Let me take a look at SPY real quick.
AREC.
SPY. Price that out. 660. SPY. Let's see what that looks like. 660. $1.43. $1.44. That's a 30 delta.
DBLT.
Okay.
MFI may resume in less than a minute. SGML. IONC. RGTZ.
Okay. I just bought straight 660 calls. Let's see if this works out.
IONC.
Okay, with a 50-cent stop.
RGTZ. MFI may res in 10 seconds. MIGI may resume in less than a minute.
Okay, so we got that little dip there as I entered, so that's good.
OSRH.
Let's see how that goes here. S&P.
BLT. RGTZ. IONC.
MACD's still positive.
ETZ.
Being a Friday,
MNDR.
MIGI may res in 10 seconds. OSRH.
being a Friday, always scale in.
SGML. IONC.
Okay, Tesla still chopping around here. not looking that great for the ad that I did on TSLL. If it doesn't do something soon, I'll take those off. Same with NVIDIA, NVDX. SPY.
IONC.
Okay. All right, so hedge flows, you can see, are just chopping around. We had a lot of S&P 500 options expiring at 9:30. So that's exacerbating the moves, puts and calls.
IONC.
Yeah, I always use default. There's no, I don't have any special knowledge to change MACD to something else.
OSRH.
Okay, right now, MACD's flattened out again, starting to slope a little lower. This could go either way, you know. Flip a coin. You could also do,
QPTZ.
um,
IONC.
long
SMCZ.
condors, puts and calls.
BMNZ. SGML.
Market's still chopping. You could do a condor. This could go either way.
OSRH.
OSRH.
Signal is not super bullish or bearish.
QPTZ.
QPTZ.
Okay, if we get this to start rocking, that'd be good. Those 660s are going for $1.28 right now, offer. After yesterday's drubbing, I would imagine there would be people coming in pre-market and in the morning, early in the morning session, 9:30 to 10, and taking profits off or reducing their exposure. Apple, no follow through. Okay, I might do that. I might buy some puts just in case. I'll have this ready. That's what I'll do. I'll look at the 650s
OSRH.
just below. I'm going to send that to my
TSLQ. TSD.
active trader window in case this starts ripping and the other dropping off.
SMCZ.
Okay, so these 660s, let me put that here. All right, those are already lost 20 cents, 30 cents. Okay, these are losing. Looks like we're starting to back off a bit.
RGTZ. UBIX.
Still chop, chop, chop. So we'll come back to this in a minute.
UBXY.
Let's see what's working at the moment. Okay, S&P 500. You got Intuit, Ross Stores, DHI,
SMCZ.
DR Horton coming off the low. DHI,
IONC.
DR Horton.
RGTZ. UBIX.
BEAT.
PLBY. UBXY. BMNZ. SMCZ. TSLQ. TSDD. IONC. TSLZ. RGTZ. UBIX.
Okay, DR Horton looking pretty good here, coming off the low. Are the other builders doing this? Let's see, Toll Brothers. Toll, TOL.
UBXY.
I'm looking for a trend after 10 o'clock, so it's only 10 o'clock right this minute. I'm your host, Cousin Benny, coming to you from theclosingprint.com. It is Friday, the 21st. We're waiting for a trend, especially with Trace. No trend yet. We're just chopping back and forth.
BMNZ.
Suck in some bears. Suck in some bulls at the high. Suck in some bears down here at the low. If we do drop 6,500, it looks like a target, 6,500. So get ready to buy some puts.
BEAT.
IONZ.
Markets are very fidgety.
SKBL.
Okay. No trend.
IONZ.
Okay, so Toll Brothers. All right, these are definitely on the move. Builders definitely on the move. TOLBZH KBH XHB DHI. Check your favorite builders. All right, let's go take a look at those. Here's Toll Brothers turning back up. We just talked about DHI, DR Horton, BZH, Beezer Homes, turning off the low, Beezer Homes. TPH, TriPoint, I think they do a lot of work out west, TriPoint. Pulte Homes, PH, they're all doing the same thing. So it looks like institutions are buyers. KB Homes, they're all doing the same thing. Let's look at the weekly time frame. Weekly. Okay, they're almost there. Let's see which ones are above the 10 EMA weekly. Nope. BZH. Nope. DHI. Nope. PHM. Nope. None of these are above the 10 EMA weekly, so it's a little bit risky. XHB. Nope. All right, so put that on your list of things to watch for next week.
SGML.
Okay, we're definitely interested there.
OSRH.
Okay, so they've been off for 3 months. 3-month downtrend. Okay.
SKBL.
S&P are starting to rise now. Okay. What are we doing? Just give it a few more minutes, I would say. See if we get a trend out of this.
SGML.
Oracle is lower again. Okay, Oracle's pissing me off. I need to put buy. I want to buy puts, but I didn't do it yesterday at the highs as it started to move higher because it felt like it was just going to keep going. We lost the 200-day for now. Oracle, in order to save that, we need to see a hammer. Okay, puts are back in. All right, they just keep chopping this up. Okay, you can see there the hedge line sideways. Sideways.
NAIL.
OSRH.
There's not a lot of positive gamma below unless you flip to non-zero day. The significance there is we want support. Positive gamma would give us some support. Now that we have the AM expiration out of the way, we're looking for a direction. No direction confirmed yet. Might have been a little premature taking calls already, given the choppiness.
EPSM.
EPSM.
SKBL.
Okay, so Zoom has earnings next week. Let's look at next Friday positioning.
EPSM.
The 20 delta is a 72. We talked about this already. Zoom with earnings. Okay, so previous lows were right around 70.
SKBL.
It's sitting right at the 200-day. So 70s, 73s, 73, 72 is a 20 delta, 19 delta. Overhead, we've got 88, let's say 90, 90, 90 is a 10 delta. So they're expecting more downside, it looks like. So Zoom has earnings next week. Maybe an iron condor there. We're still chopping around on the S&P. Zoom Monday PM.
EPSM.
Could always wait. Probably, with NVIDIA, turned out in our favor. We did take off NVIDIA early yesterday. But that could have worked against us. Buying the puts. Captain, you asked me about this. Buying the puts ahead of time. That could have worked against us. So I'll wait for Zoom. Remind me to look at Zoom as a iron condor. I was thinking about doing it over the weekend, but I also listened. Okay, here goes the put. S&P starting to drop off here. Okay, I got some puts ready to go. 650 puts. If this starts to drop below the morning low and starts to trend, still hedge flows are still rocking back and forth.
VDAT.
SGML.
VDAT.
SGML. MIGI halted to the upside.
Okay, remind me on Monday, guys. For those of you who like doing those condors, okay, remind me on Monday.
VDAT.
So there, 72. That's where the gap is. 72. So that's a 19 delta right there, the 72. Let me just make a note of this for Friday.
RGTZ.
On Friday, 72 is a 19 delta. 19 delta. 19 delta. On
VDAT.
November 21. 19 delta. And the 20 delta overhead or below. 20 delta below. 19 delta. That was 72, right? Above 18 delta is the 86.
EPSM.
86.
VDAT.
RGTZ.
Okay, so we'll have these for Monday.
GN.
Consider a trade 18 delta. Just chop right now. Just chop. Okay, so that's Zoom. Let me save this in the spreads channel.
RGTZ. SOXS.
VDAT.
IONC.
FMFC.
UVIX. TSLQ, TSDD, TSLZ,
Okay, let's look at Goldman.
PLTZ,
Goldman.
XY,
EPSM.
Goldman. Testing the lower Bollinger Bands in this level here. All right, if you have any Goldman left, you probably want to adjust these. I would wait for a bounce to adjust. You can see stochastics, MACD are almost set up for a turn. If you're anxious on these. Okay, I did take some off yesterday when it popped, so I was lucky to get out then. Didn't know that we were going to turn over like we did. Okay, so these 0 days are just wasting away right now. Calls and puts, losing value. Okay. So if you took shares, you probably stopped out already on Goldman, or you took profits already. These are gone. Okay, these I took off.
And so UNW.
SOXS,
Those I'm out of. Okay. These I still have. We're getting close here. I'm going to wind up rolling those down and out most likely.
OSRH. MNDR.
Yeah, those are December ones, right? Yeah, the end of the end of the year. I don't know. I would find it hard to believe that we don't see some price action back to the upside by the year end. Okay, we're still chopping people up. S&P. Okay. Okay. NVIDIA. Okay, New York fangs are mixed. Apple's at the high. Can't buy Apple here. I keep looking at Apple thinking, you know, I should have done this, should have done that, but decided not to do anything because the Bollinger Bands say, you know, contraction. It's going to take a move here soon. And it's starting to look more, it's still neutral. MACD is still drifting lower. There looks like institutions were taking profits in the previous week into this week.
RGTZ, UBIX,
RSI is just above 50. Maybe a long, I don't know. I don't want to guess on this one. I want to get a signal. So technically, the way I was taught to trade
XY,
is to look for the highs within
BEAT.
and the lows within the period prior to the squeeze. All right. So if you take out the high, you want to go long. If you take out the low, you want to go short. Okay. So you take puts or whatever. Puts, if you drop off, it should make sense. But RSI right now is telling us to look for potential break to the upside.
PLTZ may res in 10 seconds.
MIG.
Tesla's still moving lower.
BEAT.
IONC,
So is futures.
TSLQ, TSDD, RGTZ,
Okay, looks like we're going to move lower here. Looks like we're going to move lower. All right, those calls stopped out.
MSTZ, SMST, SOXS, UBXY,
BEAT.
QBTZ, IONC, UBIX, ALMS, UBXY, SMST,
All right, so Apple, yeah, that's going to break one way or another.
UBIS.
Toll Brothers, these continue to go. Builder's still going.
OSRH. EPSM.
Builders are ripping here. Okay, here's Toll Brothers, DHI. No hesitation, they're still going. DHI. One way to trade it is just take XHB.
BEAT.
XHB.
ALPS.
You could sell premium as well.
RH.
All right, S&P turning back up. S&P turning back up. Okay, so more chop, chop, chop. Kind of like yesterday, we took those puts, almost got stopped, and then the markets decided to drop the puts. We took puts right before it bounced yesterday. Okay, right here. Yesterday, right about here.
NLPS.
Right there, we were taking puts at 10.10. By 10.20, this turned back up, started to get a little nervous, flattened out, and then you could see that the hedge flows dropped off. So the signal was valid, price action just bounced. And then we made just a little bit higher high, and then boom, we got whacked, and the prices just dropped the entire day. Okay, so right now I'm just watching. Chop, chop. I already got stopped once. I can still go long. I can still go long. Puts are turning back up now. All right, S&P's turning. Hedge flow is still not giving us a good signal.
MSTZ.
I'll leave this on 15 minutes. You can see there's not a whole lot of gamma in this area. 0 day, there's some right here.
SMST. MFI may resume in less than a minute. QBTZ.
Tesla dropping more. All right, so I'm going to get stopped out of those Tesla shares that I bought this morning.
VXY. RGTZ.
Okay.
SOXS.
I hate giving back gains from those puts yesterday.
SMST. TSLZ. VIXY.
Apple's starting to push a bit higher.
MFI may resonate.
Apple.
UBXY.
All right, what if the markets start to gain some traction, right? Right now we're showing pressure on the downside. Apple's still sitting here at the high.
SMST. CONI.
MFI.
QBTZ. TSDD.
Apple looks like it wants to go.
MNDR. IONZ.
MNDR.
PLTZ. MFI. MFI halted.
MFI. BEAT.
Apple.
MNDR. MFI.
All right, chop, chop, chop. There goes Apple. All right, so if we can get these New York Fangs to turn up, maybe we get a bounce. Tesla's showing selling pressure, people nervous most likely. NVIDIA, same thing. Google just off the highs. That looks one of the better setups. Check out the builders. Builders look very strong. Okay, Lennar also coming off the low. DHI, Pulte Homes, Builder, BLDR, Builders First Source. So they supply the builders with whatever they need. I'm sure you've seen their trucks driving around. I have. Ulta, turn the corner. Best Buy. Best Buy looks pretty good. Best Buy for the win into the holidays. It's above the 200-day, turning back up. Okay, Apple turning. Okay, there goes the S&P. Back up into the range. Okay, I just shifted this to the 15 minutes so you can see that pretty much just sideways. Now we're bouncing. Can always buy those calls back, S&P.
SGML. ARRY.
Okay, we're starting to go here. You can always buy those calls again. Okay, the 660s.
ALMS.
All right, that was a big drop there.
URTY.
VDX. CMBM.
ENPH.
Okay, we got some resistance overhead at 66.30. We just got rejected at the 10 o'clock highs. Back and forth, back and forth. Those builders look really good. Best Buy looks good. All right, so these are stocks that are performing this morning. All right. Williams Sonoma. Cool. Best Buy. LII. What are the pharmaceuticals doing? Merck. All right, at highs. Merck. I bought the 100 call, by the way. I think I mentioned that. Did I mention that yesterday? I had the 95. I wanted to add the January 100s. I have the January 100s too now. Merck. J&J. J&J. Lilly. Okay, still good. Still good. Merck. Lilly. J&J.
RGTZ. IONZ.
Okay, Walmart. I took some Walmart before earnings. Okay, a little higher today. This is probably going to break out at some point into the holidays. Okay, if you look at the S&P, okay, here's SPY. Here's SPY. Look at the 1 minute chart. Gone nowhere.
PLTZ.
It's going nowhere. So
IONZ. RGTZ.
statistically, we'd want to wait for the breakout, whether it's a breakout or a breakdown. Okay, so this is what we're looking at right now. We'll just take yesterday's low into this morning. We're right in the middle. Right in the middle. Okay. Coincidentally,
PLTZ.
that was at 2 o'clock low.
EPSM.
IONZ.
All right.
TSLQ. TSDD. TSLZ.
SKBL.
QPTZ. RGTZ.
Okay, SPY. We'll just look at this for a minute. Okay, so there you go. There you go, SPY. Chop, chop, chop.
EPSM. SKBL.
IONC. RGTZ. PLTZ. TSLQ. TSDD. QBTZ. SOXS. FOXS halted to the upside. BMNZ.
EPSM. SKBL.
IONC. RGTZ. PLTZ. TSLQ. QBTZ. SOXS. SMCZ. MSTZ. TSDD. TSLZ.
SKBL.
BMNZ.
MNDR.
IONC. QBTZ.
All right, chop, chop, chop.
TSLQ. MSTZ. TSLZ. TSDD. SMCZ.
Nothing's moving. All right, trying to get some momentum out of some of these penny stocks or these cheap names and just watching them. They're not going anywhere either. Looks like everybody's waiting for the same thing, waiting for a direction, which is probably the better idea. Okay, so what we're looking for right now is a move to the upside or move
TZ.
lower.
TSLQ.
Seems pretty obvious. All we're doing is chopping around since the open. And the New York Fangs are not helping. Apple's starting to push a bit more. Apple.
MFI may resume in less than a minute.
Apple, the 270, 250s are going for, what are they going for?
PLTZ.
Just overhead. They're just out of the money, Apple. Or next week. Looking at those calls, the
TSLQ.
21st, April, November 21st. Those are going for, those are 22 Delta. All right, so the 270s, Apple 270s are going for $1.40. That's a 50 Delta. So if Apple does move higher, that'll be good. Microsoft's starting to see some short covering a little bit. I don't see a whole hell of a lot here.
10 seconds.
MNDR.
Okay. Yeah, I like J&J too. Frano? Yeah, I like J&J.
MFI halted to the upside.
Apple.
AT halted down.
MNDR.
Lordy, lordy. Back and forth, back and forth.
FOXX may resume in less than a minute.
Hedge flows, still chopping, hedge flows.
SKBL.
Yeah, Lilly looks good too. Lilly, J&J. Okay, let's look at Dow Jones.
IONC.
Sherwin-Williams, Home Depot with the bounce. Coca-Cola breaking out.
MNDR.
SOXS may res in 10 seconds.
Coca-Cola breaking out. UNH turning off the low, 310.
MCZ.
Okay, Procter & Gamble. Procter & Gamble catching a bid. McDonald's popping. McDonald's, Verizon looks okay. Merck following through. Verizon. MACD.
SOXS.
Visa. 3M. Okay.
MSG.
So NASDAQ.
PLTZ.
I don't recognize any. The QDEL I recognize. The rest of them I don't. QDEL. Coming off the low, mean reversion. All right, so we are pushing lower again.
RGTZ.
Okay, S&P.
TSLQ.
Okay, here we are again.
RZ.
Tesla's still lower.
QBTZ. TSLZ. SOXS. MSTZ. PLTZ. SMCZ.
Futures testing the lows again.
IONC.
The morning, there we go, it's snapping.
UVXY. TSDD. RGTZ. BMNZ. TSLQ. QBTZ. TSLZ. SOXS.
Low of the day.
TZ. PLTZ.
We fill the gap.
SMCZ.
Yeah, looking for London low. Okay.
IONC. UVIX.
All right, New York things look pretty ugly at the moment.
NVD.
Only Apple holding the highs. Holding my breath that Apple holds up there.
BMNZ. QBTZ.
There's likely some liquidity down here.
TZ.
Okay, so if this reverses, don't be surprised. But if it goes right through this liquidity and drops off, there's some stops down here, liquidity. Institutions love to take out liquidity and reverse it. Right now, doesn't look like we're going to reverse anytime soon.
UVIX.
SPY puts, S&P puts.
TSLQ. RGTZ. BMNZ. QBTZ. MFI may resume in less than a minute. PLTZ.
Okay, let's see what VIX looks like. VIX.
SMCZ. EAT may resume in less than a minute.
VIX higher.
VIX. IONC. UVXY. CONI. RGTZ. BMNZ. QBTZ.
FOXX.
NVDX. That'll be a second day in a row to get stopped out of that one. Okay.
MSTZ. SMST. MFI may res in 10 seconds.
Okay, NVDX, I got stopped out.
BEAT may res in 10 seconds. RGTZ. SMCZ. TSLQ.
I see a pattern here. I got stopped out 2 positions already.
SMST.
Tesla, that'll stop out. Tesla. Okay, so giving back some of that
IONC.
profit from yesterday's drop. Don't like doing that. It's a Friday, so looking to reduce my risk over the weekend. We're below 6,700. That's the key level. 6,700. We're way below that. Okay, 6,500.
BEAT.
MSTZ.
Hedge flows, they're pointing lower, but they're not like dropping off like yesterday. Just recall yesterday that the hedge flows were dropping dramatically throughout the day. This is yesterday.
MNDR.
It's dropping.
MNDR.
This could accelerate, I guess, as people know that the dealer is going to be selling futures as we drop, so they could see this pretty quick move down.
MSTZ. MST. NVD.
EPSM.
RGTZ.
MNDR. BEAT.
MNDR. CONI. MSTZ. SMST. BMNZ.
MNDR. HERE.
HERE.
FOXX.
RGTZ. CONI. IONZ.
SKBL. MNDR.
BMNZ.
HERE. FOXX.
HERE.
All right, S&P. All right, took out some stops there.
SKBL. MNDR.
SMST.
HERE. FOXX.
HERE.
All right, so we stabbed lower, took out some stops,
SM.
take out some liquidity. Institutional manipulation. They do this all the time. If you're familiar with what they're doing. Of course, this could have kept going, but at the way it looks right now, it looks like they just took out stops from yesterday's low. People that are positioned down there, you see money talking about all the puts that were down there. I didn't catch the expiration that you were showing, money, but right now could be a bear flag. If this rolls over, then that would be a decent signal. We'd watch hedge flows to turn down too. Hedge flows currently are trying to hold this level. Still back and forth. 0 day, there's really not a lot in here. There's hardly anything trading today. New. Got this level down here at 64.75. We talked about that earlier.
MFI may res in 10 seconds.
FOXX.
MFI halted to the upside.
All right, so looking at what's actually working, NASDAQ. S&P. Ross Stores, DHI, 1, 2, 3, 4. 4 builders out of 10 on the top 10 builders. Most active.
BEAT.
Builders, okay. They're the top 10. Top 10. Okay, seeing a little profit taking there, DHI. Same rules apply. Look for a BNC pivot if you're gonna go long. Look for BNC pivots. Lilly, the pharmaceuticals look good too. Lilly. That's still trending.
RGTX.
J&J. Oops. J&J. J&J. Okay, trending.
BEAT.
Merck. Trending. Merck's about to break out.
IONL. RGTU. RGTX.
All right, Merck looks like it wants to break out. Let me see if there's any.
CCCX.
What can I glean from Merck? Merck. Mm-mm-mm. Merck news. Let's see what kind of news we got. Anything? Sector update. Healthcare stocks softer late afternoon. That was yesterday. No updates today, but Merck is pushing higher. Looks good. Merck above VWAP at the highs of the day. Looks good. Let me see what Merck looks like. I would really like to hold on to these pharma names, J&J, Merck, Lilly. Those three in particular. Let's see what Biogen looks like. Biogen trending higher. Amgen flagging. AbbVie looks bullish. AstraZeneca bullish. BMY bouncing. Moderna, yuck. That's a waste of money. Merck, excuse me. That's a waste of money, Moderna. Just had a max headroom moment there. Okay, we're starting to bounce back up, S&P.
NOXX.
Hedge flows are still choppy. Okay, let's look at Mondo is doing calls at the moment. IWM. Okay. MACD on the daily is still cruising lower. Let's see what the intraday looks like. Trying to turn up right now.
TNA.
OKLL.
Okay. Looks good, Mondo. Looks good.
NOXX.
Here's IWM.
CCCX.
GLGG.
MFI may resume in less than a minute.
SMU.
Looks good, Mondo.
XX.
Mondo likes to trade this IWM.
CCCX.
I assume that you're taking a Friday calls. Looking for a big move. 40 deltas are only $1.15 if this keeps going. 40 deltas.
MFI may rise in 10 seconds.
Okay, looking for this to continue higher. IWM. If we can continue higher, Apple's starting to push. All right, we're starting to see a little short covering in the markets. A little short covering. Short covering.
and OXX.
Hedge flows turning up. Hedge flows back and forth, back and forth. All right, NVIDIA's starting to bounce. There goes Google with the bounce. Google. Goldman Sachs. Okay, that looked really ugly this morning. Goldman Sachs. Let's go take a look at that. Here is the S&P back up into the range. Okay, don't get too comfortable on this bounce. I see Frano took some puts. She's really good at trading S&P options, so be careful. Yeah, so Google. All right, so let's take a look at some of these spreads. I do have some Goldman Sachs bounce now. Okay, so these puts right here just went from looking ugly to much better now. Goldman Sachs. All right, so I might go ahead and close these. Closing order. What? There's no way. Let me see what the limits are. Limit. Okay, so Goldman Sachs, that'll look a little better, hopefully. There goes Apple. Apple's on the move. Okay, Apple at the highs continues. Continues to press the highs, Apple. MACD starting to level off a little bit. Need to see that. It's still got a gap between it. Still looking for that to turn up. Okay, Apple's still pushing. Apple's going more. Okay, that's going good here so far. Looking good.
HERE.
Sing it, Janice.
LAR.
Okay. What's Disney doing? I still have these puts, Disney puts. Okay, right back down to yesterday's low. Disney, I'm going to have to roll these, it looks like. If you have Disney, if you have the puts left over from the Iron Condor for earnings, going to have to roll these out. Have December, end of the year. Can't imagine that Disney wouldn't bounce before then. So look for the bounce. Could have done it Monday, Tuesday. That's the way it goes. Snooze, you lose. Okay, here we go. Still got choppy price action. Microsoft's starting to see a little short covering. If these New York Fangs start to catch a bid, I'll let you know. That would help out the markets a lot. Okay, so let's look at the New York Fang. Okay, so this is losing the 100 period moving average. That's not a good sign. The AI trade is no longer crowded. That's a good thing. Okay, so this looks more like a channel down now. It is a channel down. Okay. And we can clearly see reason to be cautious. RSI is showing strength of the trend is bearish. Stochastics oversold, so that's setting up. MACD could set up. It's still bearish. All right, the average true range is picking up, which you would expect. Okay, so this looks more bearish. There goes Apple again. Okay, Apple turning up markedly now. Apple. Trying to get back into yesterday's range, back above the 21 day. Apple back above the 21 day. That's good. That's good, good, good. Disney.
MSTZ. ETHD.
FOXX.
Okay, Apple running here. Apple ripping. Here goes Apple. Um, There you go, Mondo. Okay. University of Michigan sentiment. That was at 10 o'clock. Final was 51. University of Michigan sentiment was at 51. That's not great.
MNDR.
Forecast was for 50. It is better than what the forecast was looking for. Apple's still pushing. Apple is still pushing. Let's see. NVIDIA looking for a bounce. Apple is ripping there. Apple going. There goes Apple. Apple is going. Going. Okay, while everybody else is looking at the S&P, Apple's ripping. Woo, there goes Apple. Wow, nice move on Apple.
MNDR. FOXX.
All right, S&P pushing a bit more. S&P. Hedge flows starting to rise. SPX hedge flows rising more. Becoming more bullish. Okay.
FOXX. MNDR.
Okay, S&P. There's not a whole lot of resistance overhead.
MFI may resume in less than a minute.
FOXX.
QBTZ.
All right, there's not a whole lot of resistance overhead. That's a lot to do with the AM expiration.
FOXX.
All right, S&P turning back down now. Hedge flow is still rising. Okay. Apple still pushing the high of the day. Nvidia trying to bounce. Tesla still weak. Google trying to push a bit higher too. Google looking good. All right, New York Fangs. Okay, New York Fang, you can see a wick starting to develop here on this candle. But we're below the 100 period moving average there. Simple moving average in descending channel. RSI is still dropping. This is somewhat bearish. As a product or a function of price, I should say, as a function of price, MACD is still diving and momentum. So it's the bears to lose at this point. Apple,
XX.
S&P,
VEX.
S&P still showing.
DR. NOXX. VEX. MNDR.
Good morning. We are 90 minutes into the trading day. Welcome to Trading 360. I'm Jenny Horn, filling in for Marley Caden today, coming to you live from our Chicago headquarters. Now, here's what's coming up on today's show. In our 360 Spotlight, we will highlight growing demand for more cybersecurity in AI as the race to build out data centers continues. Later, we'll look at Intuit as shares rallied after the company beat earnings expectations. Kevin Green will bring us the news and an example trade in our Disruptor segment. And coming off the back of retail earnings, we will look at the state of the consumer in our 360 panel. Now let's take a quick look at markets as we're seeing some green shoots today, but overall seeing some pullback in the NASDAQ. NASDAQ is down about 0.3%. S&P is up modestly about 0.1%. The Dow is up about 0.5%. And the Russell, our leader of the moment and of the session today, up just shy of 1%. Now, taking a look at some of these futures products, we are seeing pretty collective strength here in gold. Gold is higher about now 0.25%, as well as right now the U.S. dollar also up modestly. Then we're seeing a drag a bit on some of the other futures products. Crude down today 2.3%, 10-year yield down about 1%, and Bitcoin slipping below that key 85,000 level, now down, just below actually even 83,000, pulling back today though 4%. But now to shift gears and look at some of these top moving stocks really key on today. I'm joined by Alex Coffey, senior equities contributor, and of course my co-host on Next Gen Investing. We are talking Ross Stores here. So Ross had a really strong report.
SMST.
I think that now adding some fuel to the narrative, really highlighting TJX as this bargain retailer where consumers are still very much seeking value.
No doubt about it. Really, really impressive quarter from Ross Stores. The stock continues to move higher, now up almost $10.50, which is about 6.5%, Jenny. Adjusted EPS $1.58, better than the $1.40 that was expected. Showed nice EPS growth year over year. Revenue at $5.6 billion also was better than expected on growth of about 10%. In the comp store sales, this is really the story.
S&P pulling back in now.
Showing this 7% jump in comp sales for the third quarter. That was way above the 3.3% consensus. This also highlighted a strong back-to-school season that carried through the quarter. Their operating margin was better than expected. So despite the fact that they're a lower cost, more value-oriented merchandiser, they do, of course, have 11.6 margin versus the 10.6 that was expected. They also guided for nice momentum into this holiday season, into their fourth quarter, with comp sales guided for a 3 to 4% increase in EPS projected between $1.77 and $1.85. As far as tariff-related costs, they're anticipated by Ross to be negligible in the fourth quarter after impacting the full-year results by an estimated 16 cents per share. So some of those really big fears that I think really surrounded a lot of these type of names early in the year around tariffs have subsided. There's a number now. There's some certainty around it, and there's some confidence going into this last quarter or last half of this quarter this year in the holiday season.
Okay, and obviously today with a new all-time high, we pulled back, modestly. We're pretty much at those key levels now. So as far as the street's reaction, I've seen nothing but praise here, but walk us through somewhat of the analyst takeaways of this report.
Yeah, you're right. Maintained overweight at JP Morgan, raised the price target to $200. Evercore ISI, a lot of the same, except raising to $195. Telsey, they have a market performance, still have to raise to 175 on this. So one of the key parts of the commentary was just how excessively good the report was around that 7% comp sales, saying even the most bullish of analysts didn't really get to that number. So really, really impressive quarter, and it looks to be continuing to execute at a high level going into the end of this holiday season here.
Yeah, as consumers continue to spend, just
Merck.
maybe more selective with some of those dollars, as they'd highlighted, really resonating with some of their new
Fair value gaps, buy order blocks, break of structure. This is going again.
results that were even ahead of those even more bullish expectations. That's a clear win for retail, but appreciate it, Alex Coffey, my co-host of Next Gen Investing. But now to take a more macro read on these markets, especially following really the substantial reversal we saw in yesterday's session. I'm now joined by Luke Lloyd, the president and CEO of Lloyd Financial Group. And so really curious your thoughts here. Of course, Luke, on really yesterday. Yesterday was wild. I know that we blame NVIDIA, but there were several other factors that I think many believe contributed to the market's reversal. So really discuss what we're seeing as far as this systematic selling by CTAs and this low liquidity. Walk us through your thinking there.
So I think that yesterday was a lot of plays on the derivatives market, a lot of these market makers just selling into the pressure, and frankly, based upon the fact that the rate cut odds in December are now a 50-50 shot. Basically a coin flip chance that we're going to get this rate cut in December. And it's crazy how that small, minute, just one thing can absolutely change kind of the trajectory of the market. But if you look back the past month, there's two reasons why essentially we had some issues coming into the market with selling pressure. And that's one, the government shutdown that got figured out, obviously, but all that liquidity that we spent 40 plus days trying to figure out that shutdown, that's billions and billions of dollars loss of liquidity in the system. That's months. A month and a half of back pay for all those workers and all those government jobs. That's
SPY back down to the low. SPY.
If you take a look at the stock market, the S&P 500, if you take a look at when Jerome Powell and the Federal Reserve members started to become a little bit more hawkish about keeping rates a little bit higher, not so dovish, talking about the chances of rate cut in December not being guaranteed. That's when the stock market started selling off. So I think yesterday was just a reaction to the derivatives market that we might not actually get this rate cut in December. And this is a revaluation of the tech market, and all that money's flowing into these different other areas like we're seeing today, with the RSP index doing pretty well, with small caps doing well.
Hedge flows back down again. More chop.
I think we're going to see that rotation.
More chop.
Okay, you did mention, of course, Fed speaker sounding more hawkish, yet, of course, these rate cuts odds rising. So how critical really is some further rate compression? And right now, how do you sort of justify that disconnect that we're seeing from some of the Fed speak versus the expectations for rate cuts?
Yeah, so we think that the three things here at LFG, it's inflation, liquidity, and growth as a whole. You can look at GDP, you can look at growth and other economic data, but the three main things are looking actually still pretty well. Liquidity was looking really weak there for a few weeks because of the government shutdown, because of the chances of rate cuts going down. That liquidity came back in the market a little bit. So, I think as we head into, again, December, this rate cut, it's going to be something we have to pay attention to because it is going to be a deciding factor, I think, as we head into 2026. Because it's not just about this rate cut. It's about next year. It's about 2026. What are the expectations for next year? If I look back about a year ago, I think November, probably this time last year, I think there were like 3 or 4 maybe rate cuts expected as we head into 2025. We only got a few, right? We might only get a few. So my point is the expectations are what really matters as we head into 2026. And right now, the markets want liquidity. The market wants more government spending. The markets want lower interest rates. They want to keep this tech and AI bubble almost alive. And the fact is, I hate talking about bubbles because are we in a bubble? Are we not in a bubble? What is a bubble? It doesn't matter until the bubble bursts. So far, we're seeing a little bit taken out in the past few days, but I think this is mainly temporary. So we actually sold Ulta today. One of our base core positions that actually held up pretty well over the past few months and have done well this year. We sold Ulta this morning to prepare to buy some of those more techy names last week into the dip, which kind of sold off a little bit even more this week. So I think it's even a better price to buy. We bought OWL. It's like an asset management firm, private equity, credit lines, more of a kind of a beta-ish name that we added to our portfolio. We also added Take-Two Interactive last week, which is more of a beta name in the tech sector with GTA 6 release, more around the gaming sector. So we're looking to add beta into this drop because we weren't very beta intensive into this drop. I'm also expecting Bitcoin probably to do somewhat well heading into probably December. As maybe recovering close to back to $100,000 because liquidity is being turned back on, because of quantitative tightening ending in December 1st, and because of maybe some more optimism as we head into the holiday shopping season.
Okay, that's really interesting that you are right now buying into tech, and I think that you're not alone there. But a lot of the criticism right now I've seen of this market is that tech isn't holding up, and evidenced by yesterday, of course. So, is there anything else in tech that you're liking right now? Because I think it's a really interesting.
There goes Google.
Stance to say, hey, we're going, a bit more long even on some of these tech names that we were not exposed to before.
I want to clarify here and make sure that we're on the same page here. I am not very bullish on Mag 7. I'm not bullish. Google's and Microsoft are very, very small weight.
Oh, shut up. Shut up. Now everybody can talk about the AI bubble and sound like geniuses.
Not at all. We do think that, the fiscal stimulus that we're getting from the new PM should help the economy. We also think that the fact is you're seeing an upward revision to earnings after the deal with the U.S., a trade deal with the U.S. And then Japan companies are also looking to return more capital to shareholders. So we do think that ROE story is still alive in Japan and accelerates into 2026.
We'll see how seasonality treats us in the next 6 weeks or so.
I think that Santa Claus rally could happen.
Thanks so much.
Still to come this hour, the CEO of a chip maker looking to cash in on the recent executive order approving the shipment of advanced chips to the UAE and Saudi Arabia. Sales to the UAE are a big part of its business. That's next.
CEO of trading platform Webull's with us on their quarterly results and this crash in crypto prices, Bitcoin touching lows not seen since April. So stay with us.
FOXX.
Okay, S&P just chomping around here, doing its best to alleviate some of your profits. It's choppy. If you can't recognize chop, you're guessing, right? That's chop. This is chop we're looking at, with a slight downward bias, obviously. But yeah, this is chop. I'm seeing this on a lot of charts. Let's look at IWM, for example. IWM back above the 100 period. Looks like it could go. Okay. IWM looking better. There's IWM, Mondo, looking good. Imagine if we can climb back into yesterday's candle.
MFI may resume in less than a minute.
Hedge flows. Futures are starting to catch some traction here.
LABU.
FOXX.
GGLL.
Okay. IWM, yeah, looks good. IWM. IWM moving. MACD's turning up.
MFI may res in 10 seconds.
Quiet. It's quiet. Why is my Schwab not on?
And that's really driven by what we're seeing in the overall labor market thus far this year and some of these trends that we think will be real impactors in 2026.
And the buzz phrase, I guess, if you will, from the government this year has been low fire, right?
The Trump administration this week approving the sale of advanced AI chips to the Middle East, striking a deal to export up to 70,000 to the UAE and Saudi Arabia. For today's Tech Check, Deirdre Bosa joins us with the CEO of Cerebras, an AI chip maker that works in those Gulf nations. Steve. Leslie, thank you. And Andrew Feldman, thanks so much for making the time. Welcome to the show.
Still range bound.
In general, how do you sell new hardware into a market that's getting increasingly nervous about AI spending?
But it actually hasn't been very challenging for us right now. While there's a great deal of
Hedge flow still very choppy.
there is a huge amount of demand for AI, and our take on the problem.
You can see if we get above 65, 55, where we could go very quickly.
15, 20 times faster than any other solution. And in infrastructure, historically, speed enabled new markets to emerge, it enabled new applications to emerge. And so we are.
Let's see what's going on. BBWI, Bath and Body Works. Bath and Body Works. Not a lot of trading. You notice that there's not big trades. Don't see a lot of big trades right now. This is interesting. TSSI. What's TSSI doing? I haven't looked at that one in a while. TSSI.
G42 and its China connection, but now you're allowed to sell systems to G42. So what changed here?
PACS.
Well, I think the administration changed. We had some challenges with the previous administration who chose not to be particularly pro-business.
Google trying to take the high of the day.
In March, we've been a partner with G42. They've been a strategic partner to us now for 3 years. We've deployed hundreds of millions of dollars worth of
Google trying to take the high of the day. Google.
We've trained interesting models with them. We serve interesting models for them. And so it has been an extraordinary run. Now, we didn't pull our IPO plans. We withdrew the S1, and I published a note saying that we would be posting a new one shortly, given the changes in our business.
Okay, and now with this change and being able to sell systems to G42, does that alleviate some of the concerns or all the concerns that you previously had? Are you ready to sort of share a timeline to public listing?
Unfortunately, I'm not ready to share a timeline, but it certainly, we've been selling the G42 and deploying in the U.S., and that's been to the tune of hundreds of millions of dollars. We now have a new opportunity, and that's to take advantage of the extraordinary commitment they've made to power and data center capacity in the UAE.
The since you're close to sort of these policy decisions, how do you see the strategy that Washington is taking in terms of diffusing American technology abroad? Do you think that NVIDIA should be allowed to sell in China?
Well, there are two different questions there. One is should they be allowed to sell, and should we be free, and is it in our interest to sell to our allies in the Middle East? And I think the obvious answer is we should. Both
Okay, then let me phrase it this way: not just allies. Should we be free to sell to sort of any country that will buy them in the effort to sort of ensure that American AI is spread around the world?
I think they're clearly the policy is right now, and I'm in agreement with the policy that putting our sort of fastest and most cutting edge technology in China is a bad idea. I think putting it in the hands of our allies around the world, making sure that they use the full U.S. tech stack, which includes chips and systems, not just from Cerebras, but from NVIDIA, from AMD, making sure they use U.S.-based models, whether that's from OpenAI or anybody, Meta or others who are building models. I think that is good business sense, and it's good for U.S. companies. I think it's a separate question around our sort of industrial adversaries. And I agree with the current policy. And in fact, at Cerebras, long before the policy was in place, we chose not to sell in China.
Okay. One last question for you, Andrew. How are you looking at this discussion, or I guess you could call it a debate over depreciation? If NVIDIA can keep its chips economically productive for 5 to 6 years, does that raise the bar for the cycle of what Cerebras chips can achieve?
Still chopping around here, S&P.
I think we have adopted a very different approach. You know, our chip is the largest in the history of the compute industry. It's the size of a dinner plate. And we are very confident that our customers will continue to get value from the chips in 4 or 5 or 6 years.
Okay, 4 to 5 to 6 years. So do you buy then the idea that NVIDIA's chips last longer thanks to the CUDA software? Are they still not just economically productive, but valuable as well?
Well, I think for most customers, those are the same, right? They're using these chips to do work, and that work either has to be converted into dollars by selling it, or provide some economic value to the institution using it. I think after you get past 5 or 6 years, the chip technology moves in a direction that it is often cheaper to bring in new equipment because it is not only faster, but also uses dramatically less power. In 5 or 6 years, a very fair way to depreciate this equipment.
Okay, Andrew Feldman, thanks so much for taking the time to be with us. Hope to talk to you again soon.
Thank you for having me. Appreciate it.
Guys, I'll hand it back over to you at the night seat.
Great discussion, Dee, on a really key question right now. That's our Deirdre Bosa. Later on this hour, SEC Commissioner Mark Ayetta is going to join us right here on set. We'll get more on the lasting impact of the shutdown on IPOs, plus the agency's decision to relax its oversight of companies operating in crypto, with Bitcoin now at the lowest levels since April.
Then new filings viewed by CNBC detailing the departments at Amazon being most impacted by recent layoff announcements. The findings when we come right back.
To the upside.
We're one of the last remaining manufacturers of
Looking at broken wing butterflies for early December.
China, which is where most of the world still comes from, and from Italy.
Call fly. Spy, call fly. There we go. S&P on the move. Okay. All right. All right. So early December. Let's go to first week of December.
I've been trying to get a Senate bill that I wrote, introduced into Congress, which basically exempts American manufacturers from paying tariffs on raw goods that we import to make our products. Somewhere between 80 and 90% of all American manufacturers import their raw materials from overseas.
Let's go to 660.
Protect American manufacturing, then they would remove the tariffs from us.
FOXX. EH.
670. 685. Broken wing, 685. Leaning a little bit more to the upside.
FOXX.
FOXX. TNA. URTY.
SKBL.
Okay. Shit. Okay, so that is $4. 660. Let me take a look at this. 660. 660, 675.
FOXX. TNA. URTY. CCCX.
SPY. Let's check out SPY. I'm just trying to put together a broken wing fly for anticipation that the markets will move higher into year end. 670 is 50-day. $670.
URTY. HLF.
SKBL.
LABU. CCCX.
FOXX.
Oh, let's try a different one. Let's try a different one. I'm just looking at where the 50-day is. 670. All right, so 670. All right, we're on the move here. 670. 685. 6. That's 15. 690, 695. 695.
DPST.
Okay, looking at a broken wing butterfly for year end. Okay. That would cost $3. $3 per contract. Prospects of making 3 times that much. Okay. Okay, so I bought that. Why is this not on the screen?
TNA. DPST. LABU.
Trace. All right, hedge flows turning up. Hedge flows turning up. More.
Welcome back. Some new filings reveal the departments at Amazon being most impacted by recent layoffs. Our Mackenzie Segalos joins us this morning with that story. Hey again, Mac.
Hey, good morning, Carl. Amazon's massive round of layoffs last month, 15,000 jobs hit almost every corner of the business. But new filings reveal that the deepest cuts came in one place: engineering. My colleague Annie Palmer out with a story this morning, digging into warn notices filed in New York, California, New Jersey, and Washington. Those are legally required disclosures that companies have to file with state agencies when conducting mass layoffs, and they show that nearly 40% of more than 4,700 reported cuts in those states were engineering roles, mostly mid-level software developers. And we also learned that more than 500 product and program managers were let go, along with senior and principal level staff. It's all part of CEO Andy Jassy's push to make Amazon operate like the world's largest startup. He said the company had added too many layers during the pandemic hiring boom, and that the current layoffs, the biggest in Amazon's 31-year history, were about fixing internal culture and speeding up decision making. Now, Amazon says AI is not the teams, and even Amazon's high-margin ad business. And guys, there's more to come. Additional cuts are expected in January. Yeah, Max, it's hard not to read through the lines here and see that maybe vibe coding is potentially replacing some of those engineers that are required, as you say, 40% of those recent layoffs. Mackenzie Sigalos, thanks so much. It is time now for a news update. Contessa Brewer has that for us. Contessa, hi, Leslie. President Trump's controversial birthright citizenship restrictions go before the
Okay, hedge flows continue to rise.
in private to weigh the
All right.
order declaring that children born to parents who are in the U.S. illegally or temporarily cannot be considered American
Hi,
citizens.
Took Alert plus
The
800.
justices could announce as early as Monday if they will hear the president's appeal of a lower court ruling that struck down that order. The U.S. is reportedly threatening to cut intelligence sharing and weapons supplies to Ukraine.
Yeah, Mondo, sorry, I neglected to say anything. I went long as I was looking at what you were doing. IWM. IWM. 0 day on IWM. Okay, looking much better. IWM. Okay. Shorts.
Extreme high Took Alert.
Extreme.
Three brothers found this incredibly rare copy when cleaning out their late mother's attic. The previous record for a comic book was $6 million. And this is why maybe it doesn't pay, guys, to just outsource it all to junk.com.
And if I hold it down.
For not throwing it away. That was the key, yes. Contessa, thanks. Contessa Brewer. The CEO of trading and crypto platform Webull is coming up next, just reporting results, how this drop in Bitcoin and the fears around the AI trade might impact volumes. Shares are under a little pressure now, down more than 5% in a tape that's been flirting with a flat line, but S&P now up 36.
FOXX.
Okay, I'm back in the 660 calls.
TXG. TNA.
Extreme high Took Alert.
AMKR.
FOXX.
Back in the S&P 660 calls.
BOR.
Average about 95 cents.
ADPT.
IWM doing well. Looking good here, IWM. Nice trade there. Nice idea, Mondo. No, Mondo likes to trade the IWM for reversals. Okay. Let's see. Hedge flows.
FUN. DBLT.
FOXX.
Okay.
LT.
FOXX.
Looking better. Apple's still at the highs.
Shares of trading platform Webull are lower on the heels of Q3 earnings, despite customer assets jumping to an all-time high and revenue growing by more than 50%. Stocks down more than 30% since it went public via SPAC back in April. Joining us this morning here at Post9 is Webull's U.S. CEO Anthony Denier. It's good to have you back, Anthony.
Thanks for having me back.
What's all the volatility doing to the model right now?
Retail loves volatility. So Webull's platform was built for active and sophisticated investors. This is where our platform really shines. We're seeing the volumes hitting record numbers through October, and now we're halfway through Q4. I'm very excited for what's ahead for us.
Do you think the volatility sort of continues from here? It's hard to imagine it smoothing out.
I would imagine there is going to be some smoothing, especially as things quiet down into the holiday season. But short-term active trading platforms like Webull, volatility is really what's key for us.
You've also installed a more diversification, right? Corporate
Switching to the 15-minute on Trace, just to keep an eye on hedge flows. All this red over here is the dealer. Dealer is short. The markets are long.
Corporate bonds and U.S. fixed income. Now that we offer those products, it's a lot easier for us to transfer over large accounts.
Why is it that retail likes volatility? Is that a newer trend, or is that something that has been kind of made possible by companies such as Webull and many of your competitors?
A little bit of both, right? So retail loves momentum. They love opportunity, and volatility creates that opportunity for retail. They're constantly chasing the biggest movers on the day.
High tick alert plus 800.
High tick alert. High tick alert. Here we go.
FOXX.
Strong right now. Why do you think your stock is down 4%?
A couple different reasons. We just went public in April, right? Went public via de-SPAC. October 8th was the full liquidity lockup, right? So all shares are now tradable since October 8th. Outside of that, we've only reported 3 quarters. Mind you, every quarter showed profitability and growing profitability every single quarter. We'll continue to show growing profitability going forward, continue to execute on our goals of expanding geographically, expanding into new products, and we're here for the long term. We're not here for a 1-month run on the stock.
How do you see the kind of competitive marketplace shaping up right now? You mentioned the new product lines you've been getting into. Is it one of those situations where everybody can kind of grow together?
Tesla turning back up. All right, Tesla almost got stopped out of that.
So I've said this before on the show. This is the most
Tesla turning back up.
that I have been in this industry now for 26 years, and I've never seen a regulatory environment being very comfortable with new products, whether it's crypto related, whether we talk about prediction markets. So
That was a good trade, by the way, Mondo.
taking advantage of a new product to attract a whole new addressable market with customers, and using these new products to re-engage customers that may have gone dormant. So I think you're going to start to see some separation of platforms like Webull that are embracing new technology, they're embracing new products. That's going to start separating and leading our upside.
You mentioned
IWM looking really good. Mondo mentioning this one earlier. I'm sorry I didn't post it. Down here at VWAP. Notice MACD. Everything's working.
Virtual trading assistant not only is it able to analyze your portfolio and intraday risk, telling you where potential risks lie, it's also giving you insight into implied volatility in options contracts, right? Where is their opportunity? It's summarizing news from today's retail investor has more information than they ever have, whether they're watching shows like yours on CNBC, whether they're listening to podcasts, whether they're going through Reddit channels. And sometimes it's just like drinking through a fire hose. This AI technology consolidates that information and makes it easily digestible.
Yeah, I have the 232 0 DTEs.
Actual tradable ideas, or I mean, what is insight? We're not to the idea generation yet, right? Skirting the line of recommendation, but I am confident in time you are going to start seeing a bit more AI doing that, and I do truly believe that AI is going to.
All right, here goes IWM ripping here.
Everything has risks associated. Whether you're giving customers the opportunity to look at different bond portfolios, there's risks associated with bond portfolios, as we all know. So nothing is going to be 100% reliable. And what we're working on, we're working with the regulators, we're working with our compliance teams to make sure that the AI returns that customers are getting in their feedback is
Calls working, S&P calls, SPY. Those 660 calls working. Okay, 5, 15, 30, 60 minute, all on buy signals. Hedge flow still rising.
aggressive platform when it comes to sophisticated traders. We're seeing our traders trade a lot more than a typical trading platform, and so our AI model is specifically skewed towards showing opportunity for active traders. How many average trades a day, roughly? Average trades a day in terms of shares, in terms of notional, probably doing about 3.5 billion in notional a day in equities, trading about 3 million options contracts. Flow is coming not only from our U.S. customer base, which makes up the majority of our customers, but we have a global business in Australia.
6,625.
Fascinating, right? Just the environment we're in. It is pretty very exciting. Anthony, thanks as always. Good to see you. Anthony Demir.
Thank you. When we come back, SEC Commissioner Mark Ueda joining us right here at Point Post 9. A lot to get to, including the impact on the IPO market from the government shutdown.
6625 is the first resistance area. Above that, could run.
SEDG. CRCA.
FOXX.
CRCL.
MFI.
PGY. HIMS. MFI halted to the upside. HIMZ.
CIFRW. FOXX. MFI.
CRCA. CRCL.
FOXX.
HIMZ.
MFI.
PGY. TNA.
FOXX.
TEM. TGY. NN. CRNC.
All right, IWM still going here. IWM. I think you got a good one here, Mondo. Shit.
ELAG.
TARA.
IWM. All right, so. All right.
Just yesterday, SEC Commissioner Ueda backing President Trump's executive order to open 401ks to private markets. Here with us now at Post 9, SEC Commissioner Mark Ueda. Mark, thank you for being here. I read through your speech that you gave, arguing that 401k savers need access to private markets. Basically, that regulators shouldn't be gatekeeping, something that fiduciaries can prudently evaluate. I want to ask you, though, against this backdrop, we've seen some pretty high-profile examples in recent weeks of private credit funds where there's maybe some illiquidity expectations that were not in line with.
All right, took half of those 232s off. Let's see how much more we can get out of this. Complete reversal of yesterday's action would be freaking awesome. Why not? We had nothing but puts yesterday. Why can't we get all calls yesterday? Okay, IWM still going. Okay, I took half off. Just banking some profits there. Nice breakout. Go. Go, rabbit, go. Go.
Extended further than it is already. It has extended
Okay, looks good. S&P.
I'm quite sure what the average numbers are, but certainly when I started practicing in the mid-90s, we were in the dot-com bubble. I got to do a number of IPOs at the time, and there was really
High tick alert plus 800.
High tick alert.
crazy events. Here, you know,
Okay, looking good.
after Dodd-Frank, a lot of good intentions and reasons for why Congress put those provisions into law, but when you aggregate all of them, the CEO, he or she says, I have a great idea. I want to produce this product or produce this service. And then you say, let me introduce you to the compliance burdens, not to mention the stress of the quarterly earnings report cycle. They have to really ask themselves, what do I want to focus my attention on?
So I hear you on that point, and I actually asked this to Coatue Philippe Lafont, whether it's easier to get access to pre-IPO companies or just fix the IPO market. Because if you do give greater access to pre-IPO companies, won't they still have to have some sort of...
Okay, we're coming up against some resistance. You can see right here on the left, these red bars denote the dealer is short gamma. The markets are long gamma. So they're long, looking for upside. Then we start to run into some resistance around 66.15, 66.25, 66.30. Okay.
High tick alert plus 800.
Evolution and the notion of changing the quarterly to biannual sort of the reporting structure for publics? Well, that's certainly something that President Trump has said. Look, you should be thinking about this. You know, one of the things when I, at least when I think about quarterly reporting, is you have the earnings release and you have the CEO call, and then we have the official Form 10Q that gets filed with the SEC, which typically happens weeks after the earnings call and earnings release. And very rarely do you ever see a market reaction to when that 10Q is filed. You see a market reaction oftentimes to the earnings release. Yes. And so that, to me, indicates what is the marginal value of that additional information that's included in the 10Q that's already not in the earnings release. It's not irrelevant. This might not be a huge market reaction. You're not saying it's not relevant, right? The Q. Well, it raises the question is how important is it? There's a certain, the only time that you do see
All right, we're on the move.
market reaction is sometimes the Q does not match what's in the earnings release. Right. And that can be in those issues, but a lot of times it's not. So there is, even if we make it voluntarily, I think you're going to see a lot of companies still providing some type of earnings release type information because investors in the markets want it. But there are a lot of other things that go into the 10Q that take a lot of time, effort. Management's got to certify that isn't the highest and best use of their time.
But is that something that could be solved by AI? I know that there are several banks and law firms that are already talking about using AI to simplify, whether it's the S1 or some of these filings or things that ultimately could be cheaper, easier, more efficient for companies, just thanks to technology.
Well, AI is certainly a tool that's going to be used just like
Extreme high tick alert.
40, 50 years word processing was a tool to make it faster and easier to prepare these reports. But ultimately, someone's responsible. A CEO and a CFO is going to have to sign at the bottom of that report that there are no material misstatements or omissions in that. They face civil and criminal liability for that. And they can't simply say, well, I just signed off whatever AI prepared for me.
All right, Mark, thank you so much. Really appreciate your time today.
When we come back this morning, Mike Santoli going to help us look ahead to the market setup post NVIDIA with the NASDAQ pacing for a drop of 3% on the week. Although session highs here as we've bounced off of 65.50 back to 6,600. Stay with us. SCDG.
Oh, I had my headphones were on the
Extreme
keyboard.
high tick alert.
TARA. TEMT.
All right, looking good. Cruising higher. S&P cruising higher.
NTSK.
Nice rally. Wow, Mondo. Holy shit, Mondo.
DVLT. SOXL. DVLT.
FOXX.
Looking good, IWM.
PLAG.
DVLT. SOXL.
IWM.
Tick alert plus 800.
IWM doing really well.
Extreme high tick alert.
SPY is gone.
Welcome back on three major indices bouncing off yesterday's sell-off, now at session highs across the board. How do we think about the downturn here? Let's bring in our senior markets commentator, Nick Santoli. Again, that 6550 proved to be above thereabouts. Look, there was an overshoot, obviously, at yesterday's close, so we're testing the floor of this market that has tentatively held for this 2-month range that we've been in. Once we get under stress, the VIX goes to 25. Remember, 24-25 VIX implies a 1.5% move every day for the next 30 days. The S&P.
Okay, speaking of VIX, let's look at VIX.
Choppy action. And, you know, it's sort of like the market reacting to itself. So if we didn't show forced selling at the open, if we're not going down in sympathy with a still weak day in Bitcoin, and outside of the immediate blast radius of the most aggressive AI food chain type stocks, you saw rotation taking hold. The Bitcoin S&P has been up more than 1% for a while. Regional banks are up on the week. They're up 3% today. Even the alternative asset managers are getting some traction, and consumer cyclicals on an equal-weighted basis also up 2% today. So the market's trying to say, maybe we did enough for now to flush out some of the aggressive kind of speculative and fast money and try to rationalize our AI bets in terms of who's going to win, who's going to lose, what are some more sober expectations for the group.
How much should we be paying attention to those vol numbers that you mentioned as it pertains to some of the more systematic strategies, the risk parity funds that are all tied into volatility levels?
I pay attention to them on a real-time observational basis to try to help
Extreme high tick alert.
I know there's an entire sub-industry that's connected to trying to handicap what the
All right, looks good.
related to that. I don't get involved.
Tesla back up. NVIDIA. That's the second day in a row I got stopped out and it reversed.
not bad pitch that we've seen enough damage done. To me, it's much more about, are they selling Bitcoin every day because they have to, and what else do they have to sell because Bitcoin blew a hole in their portfolio? That's been the game the last couple of days. Moving averages have been powerful. Oracle, a good lesson today, or 193-ish. Exactly. First one handle since the spring. Well, and that's the thing. So people are willing to say, those are the bad actors we're going to stay away from and see if we can insulate the rest of the market from it. Obviously, Williams' comments this morning, it somewhat takes the pressure off this idea that the Fed is going to be stridently hawkish into a kind of December 2018 scenario where the market felt as if it needed the Fed's help, whether the economy told you it did or not, and you kind of needed that dovish pivot to actually put it at bottom. That was a much deeper decline than we've seen so far, obviously. Let's remember, we were 5.5% off the record highs at the lows yesterday. Right. Next week's going to be busy. We'll get retail sales. We're going to get some PPI, specialty retail earnings, Dell, and I think HP as well.
And Black Friday.
And Black Friday, yes. And Thanksgiving. All of it in 3.5 trading days.
Yes. Easily strong though, as Mike mentioned.
Yeah, not slowing down by any stretch. Mike, thanks. As always, fun. Thank you, Leslie.
Thank you.
Let's get to Frank Holland in for the judge on the half.
Thank you, Carl, Leslie, and Mike. Welcome to the halftime report. I am Frank Holland in for the Judge Scott Wapner. Front and center at this hour, playing the pop.
There goes Amazon, looking good. All right, all the New York banks have turned. Nice job. VIX at the lows, UVXY at the lows, SPY. SPY looks good.
It seems like the Williams comments were the start of all this, and the market just kind of ran with it. So is this the answer to the question we're always talking about, whether it's earnings or the Fed that's the market?
Well, it depends on timing. When you're right in front of earnings, going through earnings, then it is earnings. When you're right in front of the Fed, we'll get the Fed decision in a couple of weeks. Then it's the Fed. So look, the first. Look, I'm pretty consistent right now. That we're going to have volatility. That I don't expect to see the January effect, which happens earlier each year, until we get through NVIDIA and then we get through the Fed. Now, yesterday was stark turnaround. Only 3 times the market opened 100 points since 1950s and then finished in the red. Each of the 3 subsequent periods, those 3 times, you've seen major moves in the industry higher. However, I don't know if there was a Fed move in the offing. So right now, the majority of those that are polled believe, and the odds that we see in the various predictions.
All right, took half off of the SPY. We'll see if it can go further. Looking for a little profit taking, perhaps. We'll see what hedge flows are saying. Okay, a little profit taking.
Because I just don't see investors continuing to have a falling knife in big cap tech. And despite the decline in big cap tech, and others have tried to go in, right now, some could say they're overvalued. I think it's a case business basis, and it's not. So I've been staying in positions in those and just putting on the shorts and the Qs, but still have more exposure than I would have liked to over the last month.
You mentioned yesterday's action. Josh, I'm going to come over to you. Obviously, we saw a big reversal in the markets following NVIDIA earnings. Today, we're higher after those comments from Williams. Does the action yesterday, does it matter for today? Does it matter going forward for the rest of this year?
Look, I think it's really healthy in a bull market to have these moments of extreme doubt and uncertainty. I think it's great. You get a big spike to 25. It shakes people out of some trades that maybe they didn't belong in to begin with, or they were too heavy. It makes people second guess some of the more speculative things that they've been doing. And if you want this bull run to continue, you want those moments to happen every once in a while, because it stops us from building these types of parabolic charts and outrageous expectations for returns that put people in a really bad position for the eventual corrections. We really haven't had a meaningful correction since April. But we have had these moments like yesterday. We had one in the middle of October. Some people probably remember. And overall, I really just don't view it as the end of the world. I agree with almost everything that Steve just said, but I have a slightly different point of view on the mega caps. I think they are going to lead us into year end if we get that sort of like melt up environment we've seen.
Looks like we're going to keep going. All right, going to keep some of these. All right.
Be at the forefront once again. And I know a lot of people want to change a narrative and they want to believe like
Okay, what does the S&P big cap look like? S&P big cap options. These could go some more.
I'm just thinking about like the discounts in these shares right now relative to where they were just recently. And I think if people are bullish,
It's 12 o'clock, so it's a bad time to add trades. Just look at what's out there. 66.50. I don't think we get through that. 66.50.
Microsoft both 15% off their highs. I can't escape the feeling that it'll be second verse, same as the first, and they're going to go right back to those names. You have the most liquidity, you have the most familiarity, and you have people that, for whatever reason, maybe they weren't in some of those on the way up in the first half of the year, and they're just going to go to what they know. And so I'm a little bit more constructive in that part of the market than maybe Weiss is, but I agree with the rest of what he said.
Yeah, I am struck in that part of the market. I haven't sold anything, as I said. It's just a time where I think you and I may differ. But I'd love to see what you say come to fruition. All right, Sage, go ahead, jump in.
Yeah, I mean, I think we all have to appreciate how frothy the markets got in September and October, and we may have pulled forward the Santa Claus rally and made it a little earlier. And you obviously had some liquidity scares, you had some deleveraging scares, and there was this Molotov cocktail that was thrown at the market, and yet we're still only off 5% from the highs. And really, where we saw the biggest shakeout is in some of the more speculative names. And from my lens, that's a healthy thing. The key is making sure you're in a position and you have a healthy athletic stance with enough cash to meet liquidity needs, buy into weakness, and not be over-levered. And it's clear that margin balances had built a lot, and so there was embedded speculation in this market. I do think you could see volatility continue a little bit. There was a life preserver thrown this morning by Williams, no question, with the with the kind of dovish stance. I think it was a whole rowboat. It was a whole rowboat. But you have to look at this as a valuation and positioning recalibration.
Okay, let's look at SPY now. Let's check out what MACD is doing right now. So if you buy the high of the day, you're running into momentum slowing. Now this could turn back up, but check money and also check the volume there. There's a lot more selling. So this is probably going to dip a bit more.
Ambitious targets, right? So that valuation is high. But very quick, you just agree with Josh when he said tech's going to carry.
Let's see if we can
High tick alert plus 800.
high tick alert. So they're going to keep pushing this, it looks like.
You have a bifurcation within tech. You got to look at it as K-shaped. You have the haves and have-nots. Look at the valuations on some of these names. They've come in quite dramatically, right? So
Next week, which one of those would you say are on the bottom of the K or the top of the K?
So, listen, I think the best position companies in the Mag 7 are the ones that we are most overweight. It's Google, it's Microsoft, it's Meta.
Got to get that MACD to turn back up.
By far, followed by Meta second. There's some digestion issues in Meta. They have to prove that their spending's making sense from an AI standpoint, that they're able to monetize the AI. But when you have the eyeballs they have, once they get focused on it, I think they're going to be huge.
Let's see if they go with this. Let's see if they can take this a bit higher.
We were having a conversation before the show, if you don't mind me kind of bringing it into the show, about whether there really is a correlation between crypto and mega cap tech. Today we're not necessarily seeing it as crypto's down and we're starting to see the market kind of starting, but it is being led by healthcare in all fairness. Healthcare is the leading sector at a record high. Is that something to worry about for an investor for the rest of the year, especially going into a low volume week next week, a holiday week? The idea of crypto
All right, they're going to take this higher. They're going to take it higher. Need that volume to pick up. Need the volume to pick up. There we go. Breaking out. Breaking out. Okay, let's keep an eye on hedge flows. Okay, rip this sucker higher. Let's go. Let's go. S&P. Next supply is at 66.35. We're still on 5, 15, 30, 60-minute buy signals. Tick cumulative is not bullish. Presently, it's bearish. Just be aware MACD is flattening out. Took a little bit more IWM off. Take some profits. Take some profits. Looking for BNC pivots. Okay, I'm all out for now. Okay, we could go higher. We could go higher. I'm just going to take profits right here. I'm going to go take a 5-minute break. I'll be right back.
So really quick, ahead of this mini rally we're seeing in Williams, Wells Fargo came out with this 2026 outlook. A lot of hope in the first half. They say bubble in the second half. They put out their year-end price target for 26. It's 7,800, about 15% higher than we are today. They say they're going to be overweight tech, energy, financials, and materials. They say AI will ultimately lead the market higher in the second half, kind of playing off the theme you guys are talking about. And also Fed balance sheet expansion starting in April could drive the sharpest rebound in liquidity conditions. Weiss, I'm going to come back over to you. Is that the issue here? We need a little bit more liquidity?
Well, you know, Josh pointed out about the health of this. It's believed that they're more than 50% of trading. And then when you take a look at what index funds own, That's also about 50% of,
Merck continues.
50% of every public equity.
TWST.
So there is
Startup,
somewhat of a
startups.
lack of liquidity in the market under conventional standards, but there's still more than enough liquidity in the market for any
ARCX.
outcome. And it really depends on the underlying equity, where the liquidity is. And the big cap stocks, there's no shortage of liquidity on any day there is, and that's really what we're talking about. So to me,
Okay, we got 457 stocks on the S&P 500 advancing.
DBLT.
And eventually, I think investors are going to realize that while they all have massive capex that they've talked about, up to 100 billion, they're not going to be able to deploy all that because you're not going to have the energy, you're not going to have the skilled labor, the electricians, etc., that are able to build out the data centers, but primarily it's energy. So to me, it's going to be like a massive stock buyback gets announced and never gets filled, and then they announce another buyback and incorporate the prior buyback into that. So once that reality hits, I think we'll be fine.
So that means you should buy energy right now. I mean, the idea that energy
No, I
prices
don't
have
think
to
you
go
buy
up if there's going to be a squeeze, right?
No, because it's electricity. Because it's electricity.
Yeah.
Well,
Yeah,
it's
it's
going to be
it's
everything.
not-
It's going to be nuclear. It's going to be natural gas. I mean,
To build on that point, that Steve is making, there are physical constraints in the physical world that will make it so that every one of these capex announcements isn't as good as signing a contract and sending an ACH wire. GE Vernova is telling the street that they are now fully booked up through 2028. So if you come to them with a project today, that's where that project is going. Think about how long from now, 2028 is. We'll have a new president, maybe, in the White House. So this idea that like somebody could tweet something about the capex of their company and just will it into existence, you need transformers to be built. These are house-sized assets that convert energy into electricity. Like it's a very long game. It's not as simple as, hey, we're going to do this, and then it just gets done. And what that means is it's like a backlog of earnings beats far out into the future, provided it continues. Because you don't know when these things hit, when the money gets spent. We're dealing with atoms in the physical world. It's not Twitter.
You know, the other point is that we're involved in a company that makes linear generators, and that company's been around for less than a decade. But you have no idea for all these technologies, including small nuclear reactors, what it takes to build in that scale. It's phenomenally tough with any CapEx technology, hard technology, or software. So that's where it's going to fall down. Then finally, I think this is critically important. Do you really think that politicians are going to not push back on data centers in their backyard when they've got all their constituents saying, I'm not supporting this through higher electrical prices, particularly when I've been under pressure from inflation going forward. So seeing that play out.
I mean, that is an interesting point. The energy constraints are obviously a very important point. Where's it all going to come from? And then there is some questions about regulatory, especially when it comes to nuclear. We talked about Constellation Energy this week and that $1 billion loan from the administration. But you're right. There's going to be some people concerned about what used to be 3 Mile Island starting back up. And I mean, maybe rightfully so. I mean, after the catastrophe that happened there. By the way, we're about 17 minutes in the show. We're going to talk about NVIDIA right now. It might be a bull market record. We wait 17 minutes to get into it. Everybody owns it. Kevin, I'm going to come over to you. NVIDIA is still lower right now. It's down about 1/3%, 0.5% right now, but the markets are higher. Also, we saw a great earnings report, and the markets moved lower. What does that say about NVIDIA? Is it time to change the way we look at it as a potential market mover on earnings or a bellwether of where the market's going directionally?
How sad is that when you have earnings that were that positive across the board, and when the guidance was so good that the stock sells off? You and I were talking in the morning when the stock was up, and here it is down again for a second day in a row. I would look at this as opportunities to add to it. I think Josh nailed it this morning at the open with respect to all of these companies that are down, that are going to attract money. Maybe there's tax selling. Maybe there's reasons people need to take profits here. You know, you've got wins in NVIDIA. And so to the extent that you're going to take profits there and offset it, kind of makes sense. But from the fundamental and the foundation standpoint, is this the bellwether that'll lead the market higher? Probably will continue to do so until it's otherwise.
See, you feeling bullish on this one? I mean, Wells Fargo came out, maintained a great rating, price target 265. I mean, looking at where the stock's trading right now, it's trading under 180 right now.
and at a 26 times forward PE, it rarely gets down to these levels from a valuation perspective. We've added it 2 times. We could never own this company for so long because it didn't meet our valuation relative to
The pharma stocks look good. Merck at the highs, Johnson and Johnson just off the highs, Lilly.
That's not too long that happens, but you could see there was this desire to deleverage. You had Tom Lee on the show, I think, Frank, and he was talking about what was going on in crypto and the deleveraging there that kind of created an interesting lead for some of these other tech companies, these risk-on companies to follow. I think these are different worlds. I also think there's been too many parallels, and you saw it in these earnings of NVIDIA to Cisco in the late 90s, where they were taking pieces of some of their customers. Vendor financing. Yeah, vendor financing. You know what? This is an important business for them to get this data infrastructure built out. I feel like we are in a very different environment relative to late 99. Sure, there's things that rhyme all the time. However, these companies that are driving this are very profitable, very solid balance sheets, and I think are going to be well supported.
Kevin, I'm going to come back to you in a second and talk about some of the other things that are going on that are kind of reminiscent not only of the .com but also of the great financial crisis. But before we do that, Josh, coming over to you. Week to date,
Yeah. All right. So let me. Oh, it's 12:20 already. Shoot.
I mean, I can't buy it. My average cost is single digits, and I've held it forever. But like, if I were not invested in the stock, I had no position. And
I'm going to step away for 5 minutes. Let me put Bloomberg on.
DVLT.
Vehicles relative to the rating, you're probably getting a little higher yield, higher spread in those because probably because there's a little bit less liquidity in some of the securities. So I don't look at it like that. I look at it more like, are you getting the appropriate liquidity premium for taking on a little less liquidity? But in those securities, you tend to have more diversification. We're pretty involved in the CLO marketplace, and you've seen tremendous demand in the CLOs for that very reason. You can get AAA exposure, AA exposure with underlying high companies do way it's tranched above what you could for a general corporate. That's the nature of it. So
yeah, we see that with the supply really increasing. You see issuance rising at a record pace. The bundled loans are definitely becoming more and more favored bets. Some investors even describe them as bulletproof, Leslie. Although we have seen some before selling after the blow-ups of First Brands and Trichlor. What risks do you see in this part of the market, the CLOs?
I think that's what Joe was talking about before. You've seen a huge amount of inflows to the CLOs and the CLO ETFs. I mean, we still like the CLO sector, we like the high quality of the AAA. But I think with what's happened recently is just, really exemplified the importance of a diversified portfolio, particularly when it comes to adding securitized product to your overall portfolio base, whether it's at CMBS or agency MBS, not just having it on the corporate side.
All right, that's all the time we have for right now, but really appreciate both of you joining us today. Jim Schaefer of Aegon Asset Management and Leslie Falconio of UBS Global Wealth Management. And if you can't get enough talk on credit, do check out the Bloomberg Credit Edge weekly podcast on the Bloomberg Terminal and wherever you get your podcasts. Still ahead, we've got the final spread the week ahead with more U.S. data on deck. This is Real Yield on Bloomberg.
FOXX. And that
has never been more competitive. If you're standing still, you're actually going backwards. We're trying to beat our competitors on the track, but to do that, you need to beat them off the track.
CRCA.
Best-in-class partners in the technology space, established class, and make all our investments bring performance to our race car. Workday is a critical partner of ours to help us forecast and help us run the most efficient business possible.
FOXX.
That guard dog sure is lucky as Simply Safe. Word on the street is that Simply Safe has proactive monitoring. The AI outdoor camera can alert live agents of a crime before it starts, not after.
And
Unlike
NOx.
other security systems.
Stops super safe.
CRCA.
Must be nice. Shh, keep it down. I'm trying to nap here. Simply Safe.
CRCG.
Real security stops crime before it starts. There's no setting like Simply Safe.
BULG. ETHU. ETHU. SOLT.
I'm Scarlett Blue, and this is Bloomberg Real Yield. It is time now for the final spread. The week ahead, coming up, we've got the G20 Summit in South Africa beginning on Sunday. Then we move on to Monday when ECB President Christine Lagarde speaks, and Zoom will be reporting earnings. On Tuesday, a batch of U.S. economic data
SUGP.
released, U.S. PPI, retail sales, and consumer confidence. Plus, Alibaba reports earnings along with Dell, Kohl's, Dick's Sporting Goods, and Best Buy. Now, on Wednesday, the UK Chancellor of the Exchequer, Rachel Reeves, delivers her fall budget, so watch the pound on that day. In the US, the data deluge continues with weekly jobless claims as well as durable goods. Plus, farm equipment maker Deere reports earnings. On Thursday, of course, US markets are closed for the Thanksgiving holiday. We do get ECB minutes, however, and a rate decision from the Bank of Korea. And then on Friday, a short holiday trading day for the US bond market and stock market. And of course, as we were talking earlier, a kickoff, the official kickoff, unofficial kickoff to the holiday shopping season with Black Friday. Also, a number of countries in the Eurozone are reporting CPI data as well. For my final thought, we are off for Thanksgiving next week, but we will be back on air on December 5th. There'll be more data to go through, and of course, we're going to look ahead to the FOMC decision that comes out on December 10th. From New York, that does it from us. Same time, same place next week. You can see yields right now, little change to somewhat higher, although I think we can safely say it's pretty much unchanged. The 2-year at 3.53%, the 10-year at 4.08%, the 30-year at 4.73%. This is Bloomberg Real Yield from New York. This is Bloomberg.
If you're standing still, you're actually going backwards. We're trying to beat our competitors on the track. But to do that, we need to beat them off the track. We need one of the best-in-class partners in the technology space to help us go faster. And we make all our investments bring performance to our race car. Workday is a critical part of our to help us forecast and help us run the most efficient business possible.
As we enter the AI super cycle, latency becomes a currency. And that means that data needs to be processed as close to the user as possible. So if you want these data centers to be near the people, is it just a matter of build more of them?
No, unfortunately, because where the people are is also where there is no space. So we have to completely re-architect the way these networks are done.
So it isn't just about bigger networks, it's smarter that's going to be required.
That's right.
Have you ever wondered why Ireland produces so many horse racing champions? The secrets might just be in the grounds beneath them and the science within them.
SUGP.
A geneticist in Ireland discovered the first speed gene in thoroughbreds. The myostatin gene, MSTN, which controls how a horse's muscles are built. But it comes in different variations. One version knows the muscles with more fast twitch fibers built for short explosive sprints. Another gene variation favors slow twitch fibers, giving the horse stamina for long races. And a third variation creates a balanced mix ideal for the distancing in between. Genetic testing tells breeders what kind of MSTN gene the horse carries, so they can align training and racing to the horse's natural potential. But winning takes more than muscle power. It also demands strong bones. And in match finals, that strength starts in the ground.
The dominant bedrock beneath the soil is limestone. Limestone comes up through the soil, which means there is a lot of calcium in the grass. Calcium, excellent for bones, which is exactly what you want if you're raising a nice, strong thoroughbred.
Backed by the perfect terrain and cutting-edge genetics, Irish racehorses are built to win.
NNOX.
And wherever it happens. I'm Lizzie Bowman in Florence, Italy, and this is Bloomberg.
DBLT.
Welcome to Bloomberg Markets. I'm Scarlett Little. The wild roller coaster ride activities continue.
All right, you can see MACD is continuing to shift lower. So the momentum, we just turned back up right as I was speaking. Eli Lilly, SPY, MACD lower. Okay, so we're probably going to be range bound for a while. If we do break out, I'd be keeping an eye on hedge flows because we'll have all this volume overhead resistance.
Shares of Alphabet. Shares of Alphabet have really been higher here, up about 7% on the week. And this is after we did see its Gemini 3 AI model threatening the likes of ChatGPT's from OpenAI here. So we really are seeing some growth as we look at shares of Alphabet here. And we really are also moving toward the drug space. Eli Lilly here. This is the first healthcare company that we are seeing cross the $1 trillion mark. When we think about market cap, this is really some strength that we're seeing not only from this pill that they are projected to reach $95 billion by 2030. We are also just talking about the fact that we are seeing Eli Lilly and Novo Nordisk having a plan to sell obesity drugs directly to employers. So we are seeing shares of Lilly up about 36% so far this year. And wrapping things up, you mentioned it earlier, looking at everything going on in the crypto space, we are really seeing a lot of these companies moving in a solid, really taking the closer from that move in Canada we did see earlier with equities. We take a look at strategy shares down about 1%. We are seeing a pop up here in terms of Coinbase and Robinhood, up more than 1%. But if you take a look at Bitcoin in particular, we are seeing Bitcoin down for its worst month since the crypto slump that we did see in 2022. So lots to keep an eye on right now. All right, thank you so much. Bloomberg Markets correspondent Laura Melinda. And as promised, we're going to dig a little deeper into Bitcoin because it fell as low as 80,000, to as low as 80,000 overnight. And this week on Bloomberg Crypto, of course, we talked about the price action, and we spoke with Reserve One CEO Jamie Leverton, who's been in this industry for roughly a decade. Here's what she said about the consistent sell-off.
This is not where I think any of us expected to be. I've actually been on the last few weeks saying I didn't think we would see the return of the typical 4-year cycle, and I've never said that on record before. And
and yet somehow here we are. I'm still very bullish on the indicators that we're seeing coming out of the market. I don't see anything structural that should suggest we tip into a typical bear cycle. And so really confusing, I would say, from where we were sitting a few weeks ago.
And since we saw the gain, Bitcoin pullback has really deepened since then. Around this time yesterday, we saw U.S. stocks give up their early gains and take a turn lower. Bitcoin actually led that steep drop off. Bloomberg Intelligence senior commodity strategist Michael Lynn says this could signal a weak end of the year for risky assets overall. And he joins us now from Miami. So talk a little bit about how Bitcoin now kind of trades in tandem as a proxy for the riskiest or growthiest parts of the equity market.
Well, the key thing, Scarlett, is there's been that shift in ETFs. The biggest ETF launch in history, all that money coming into Bitcoin ETFs. A lot of that's equity money, and they're way underperforming their
SPY's about to break out.
market in this highly volatile crypto space. It's not just Bitcoin. So we've seen that big shift. And the overall thing is a lot of that means now Bitcoin's in actually some corporate treasuries. It's entrenched in the stock indices. You mentioned Michael's strategy earlier, Michael Saylor. It's in the market now. It's more significant than ever. And even potential, maybe Mr. Williams, who hinted at potentially easier watching Bitcoin because it's a tremendous risk indicator.
Hedge flows continue to rise. We're coming up against resistance.
The key thing is it's that time of year. You don't want to be looking to buy things that add to profits. You're getting stopped out. To me, that's the risk is if this trickles down the stock market, which is my base case, then the dominoes tumble. That's just normal post-inflation deflation, which we're way overdue for.
So when you look at Bitcoin's price action of late, what's noticeable is that it's hit a lower low for 11 straight sessions. I believe that is a record streak down. What's the significance of that? And other technical factors, technical indicators that we often cite when looking at Bitcoin. Why is that more indicative of price action than anything else?
It's just classic hitting styles. The market got over leveraged long and it's going lower. The key thing is it's the whole space, Scarlett. The whole space was worth around $4 trillion. Now it's below $3 trillion. And people are saying, well, Bitcoin's different. Well, they're finding out it's not. It's just one of millions of cryptocurrencies. It was just first. So to me, that's the key thing out there. Everything's trickling down. As far as how it happens, I don't know, but it's so algorithmically driven and bots. You can just hit stop, you liquidate, you go up. But that's a classic example of a market that just went too far. The key question is where it stopped. Now, it meets really good support around 84, around 80 overnight, but it's what's going to be happening Sunday night. And that's when it broke down on the year Sunday night. So I think there will be a lot of people watching it this Sunday night.
Yeah, I'm also looking at the CRYP Go page on the Bloomberg terminal. You type CRYP and you get kind of an overview, a monitor of all the cryptocurrencies that we track. Not just the original one, Bitcoin, but Ether, XRP, and kind of down the market cap list. Everything's pretty much red, except you have a couple of outliers, US dollar coin, Tether. When you look at this, I mean, does everything kind of depend on where Bitcoin goes? If Bitcoin can't hold on to certain key levels, Dogecoin or Cardano or Solana can't get a bid either.
Absolutely, but some of all those alts, kind of like Dogecoin,
SPY trying to break higher.
wasn't supposed to happen, but it is happening. It's just a fact with the statement and the price is going lower. So you mentioned
Hedge flows rising.
part of that technology. It's the crypto dollars in that space. Now there's a bull market, it's a version of crypto dollars, but it's replacing the need for peer-to-peer cash with Bitcoin. To me, the whole space is just in a normal bear market way. It's way overdue. The key thing is where does it go from here? The key thing is it's basically counter volatility on the stock market. The stock market volatility is very low. Bitcoin usually does very well. The stock market volatility is very low right now, which means Bitcoin has much more room to go lower if and when stock market volatility picks up, which by the end of this year, it probably increase a little bit.
Mike McClone with Bloomberg Intelligence in Miami. Thank you so much. Checking on those Bitcoin technical levels for us. And of course, the cryptocurrency space overall, along with the other commodities. Now, let's shift gears and take a look at geopolitics, because another story that we've been following is the president of Ukraine, Volodymyr Zelensky, says his country risks losing its key partner after the U.S. threatened to cut off support unless Kyiv agrees to peace deal terms defined by the U.S. And those terms include ceding territory to Russia, capping the size of its military, and pledging never to join NATO. Zelensky says he spoke with NATO General Secretary Mark Rutte about potential paths forward. For more on this, let's bring in Bloomberg Washington correspondent Tyler Kendall. She joins us now live from the White House. So, Tyler, how's the White House responding to these comments from Zelensky?
Well, Scarlett, at this point, we haven't heard from the White House so far today, but we know that it has been a busy day of calls for the administration. The Army Secretary Dan Driscoll is overseas having meetings with Ukrainians, and reportedly Vice President J.D. Vance also had a call with Zelensky earlier today. Now, we heard from White House Press Secretary Caroline Leavitt yesterday that said that both sides have been engaged when it comes to ending the war in Ukraine, but according to a document obtained and reviewed by Bloomberg News, this U.S.-Russia-led proposal that could potentially end the war would offer significant concessions to Russia if followed through on. Now, you mentioned some of them at the top there. This would include Ukraine fully ceding control of the Donbass region, despite still holding on to about 15% of the territory. It also would include Ukraine abandoning its NATO ambitions, holding elections within 100 days of any potential agreement, as well as significantly decreasing the size of its military. The stakes here, of course, are being raised, as Bloomberg News is reporting, according to people familiar with the matter, that the White House is prepared to withhold intelligence sharing as well as military supplies to Ukraine if the country does not commit to this plan. We'll see where negotiations go. It is important to mention in terms of what Ukraine would be getting here. The firmest security guarantee put on the table to date from this White House. It would include something that includes a Article 5, similar to what we see in votes with NATO, as being a potential protection for Ukraine.
Love to see a run in the evening session after 1 o'clock or so.
Yeah, and we've all seen that as well. Thank you so much, Tyler, for that. Now, the president will be meeting with New York City's mayor-elect, Zohran Mamdani, later on this afternoon. This will be, wow, it's going to be a humdinger because both have been very, very clear about where they stand, but both are also very skilled politicians.
Right, exactly. It definitely feels like a made-for-TV moment. As of now, this closed press, we are expecting it to open up. It would be an understatement to say that this
WOK may resume in less than a minute.
There is a lot at stake here. The president has threatened to withhold federal funding from New York City, which for fiscal year 2025 received about $10 billion and is banking on an additional $7.4 billion for fiscal year 2026. Also, take into account that the Trump administration has already frozen about $18 billion worth of broader New York State infrastructure funding when the government shutdown began. Now, the White House Press Secretary Caroline Leavitt was asked yesterday directly whether or not the pair would discuss unfreezing these funds, and she said that we'll just have to wait and see how the meeting goes. It is our understanding that Mamdani requested this meeting with the White House, and the transition team says that it will focus on affordability as well as public safety. Scarlett, as you well know, this White House has been trying to recontrol the narrative when it comes to potentially there could be some room for cooperation here. I did speak to one Democratic strategist who told me that we shouldn't underrate this in terms of cleaning New York City, but as you alluded to, there has been a lot of criticism and a lot of threats from this White House.
All right, good stuff. Bloomberg Washington correspondent Tyler Kendall, and of course, she will keep us up to date later on this afternoon when the president and the mayor-elect of New York City do meet. Coming up on Bloomberg Markets, once a symbol of corporate excess, Walmart has reinvented itself under the CEO.
Let's see what Walmart does. Walmart back down into yesterday's price action. S&P looking for the breakout, looking for hedge flows to continue rising. We're up against resistance, so wouldn't be surprised to see a little reversal here. Good way to watch it is to keep an eye on MACD. Keep an eye on your MACD. It might have a chance to turn back up and start trending. If it starts trending on a breakout, that would be pretty good.
when we tease this one, you're making a move in the energy space. Tell us what move that is.
Yeah, but let's keep it as boring as humanly possible and stay away from the Mag 7 crypto and everything else that's going haywire this month. We added to our Marathon Petroleum position. We haven't owned this stock since 2022. In 2022, it was
Meta,
for us at the time.
higher, Tesla, trying to push higher, Tesla. NVIDIA, second day in a row, this one stopped me out. NVDX shares. That's good. If it keeps doing this, we'll have a nice little bounce area.
See the trade come back within the petroleum space, we want to have at least more than one name of Chevron.
Well, I got one other move. This relates to TJX. Walk us through this one.
The important thing with this trade is just looking at what happens with options around an earnings report. So on Tuesday, we sold a covered call on TJ Maxx.
S&P looking for it to break out more. We do have resistance overhead. Be nice if we cleared all of this 0 day out of the way. 66.30. We're right at 66.30 resistance right now.
Moving on to some calls and some stocks. The move shares of Joby Aviation. So that company is accusing its rival Archer of using stolen information from a former employee to, quote, one up a partnership deal with a real estate developer. In the lawsuit, Joby says this is a quote, corporate espionage, planned and premeditated. Archer calls the suit baseless. Josh, your take.
All right, so I'll let the lawyers handle that. I have no idea what went on, but it seems like there was one guy who took some files on his way to join Archer from Joby and left some files unlocked. They're alleging that allowed him to access it. I don't know. I don't care really. I own both. I have a bigger position in Joby than Archer, but they're both small positions. eVTOL 101. Basically, these companies are a few years away from commercialization. There's no revenue here yet. However, Joby did acquire the Blade business, which does bring in some revenue. It's not eVTOL revenue yet. They're still operating the heliports on the Hudson River and the East River in Manhattan. But the idea is ultimately they'll replace the helicopters with the eVTOL. That's an electric vertical takeoff and landing vehicle. Basically, Joby is in the lead here. I think most people would acknowledge that, but it's very early. They were all at the Dubai Air Show over the last week, and we got to look at the product itself now operating in the United Arab Emirates, and they're signing deals in Saudi Arabia, and you're going to see these things. I just don't think you're going to see a lot of them. So if you're investing here, you have to be patient, and you have to tolerate high volatility. Last thing on this. Toyota owns 15% of Joby, and Toyota will be their manufacturing partner. I think they spent like $900 million to invest in the company, and that's a really key relationship. One of the largest mutual fund shareholders is Baillie Gifford. If that name sounds familiar, these are the Scottish lunatics that made a huge bet on Tesla like 15 years ago and turned that into $29 billion or something, like one of the biggest home runs ever in the history of investing. They own 6% of Joby. So they know a lot more than I do, and I'm following some smart money into these names.
Yeah, by the way, you can call it an EVA too, like an electric vertical aircraft. So you don't have to eVTOL, it's so clunky. But by the way, Weiss has been waiting to respond to everything that you just said. So Weiss.
No, I'm not waiting to respond. It's just funny. Industrial espionage is alive and well. And the idiocy of these employees, we're involved in a lawsuit where an employee downloaded all our proprietary information, and during discovery, we found it on his new employer's server. So, complete moron, who doesn't realize there's a digital trail. So it's always
I'm going to let the lawyers handle this one too.
I'm a lawyer. Don't forget I'm a lawyer.
All right, coming up next here on Half, Mike Santoli joins us with his midday word. We're back right after this.
S&P looking for that push, but I have to say we're right at resistance. So kind of hard to get through this level. If we do 66.50, then 67.50. That'd be insane if we did see something like that. Right up against resistance. I would exit a bit more. If we do get a breakout here, this could cause some serious short covering, a break above this level. $6,660. Yeah, we're right up against resistance. You can see supply right overhead. If we were to break through this, that'd be a big if. We're still in the lower half of yesterday's candle, so the bulls had a nice run. Many are attributing it to, I'm not sure, some Fed governor or somebody said something. Fed Williams. Okay, Trump's meeting Mondami at 3.
WSHP may res in 10 seconds.
MFI.
And we're back on halftime. Senior markets commentator Mike Santoli joining us with his midday word. Mike, we're seeing the markets higher after those Williams comments. We were asking earlier, does that mean the Fed's the driver of the market, at least right now? Why said, well, at least now. Earnings sometimes it's the Fed. You're taking what we're seeing.
I think it's always everything in different proportions. I do think that it helped take some of the pressure off. Williams' comments helped take some of the pressure off. If you went
Okay, we're pulling back in a little bit. Yeah, all right. So we're at resistance. At resistance. Take some profits. If we get a follow through, it might be after 2 o'clock. Right now, I'm not seeing much. You have an opportunity to reduce your risk. Apple, did I get...
stuff that was away from the damaged, semis or the busted momentum plays. And so you have regional banks doing great. You got even the alternative asset managers have a bid. Consumer discretionary and industrials. Industrials looked ugly yesterday and they're firming up. So I think it's really much more about, okay, maybe the afternoon portion of yesterday's decline was a little bit overdone. We'll see if this sticks right here. It's still a wounded market, though. It's got to rebuild. It's got to prove itself.
Yep, I would agree with Mike Santoli 100%. So wounded market, a lot of broken charts. Many of you subscribing to that idea as well. Merck, the pharma is doing really well. Merck, one of my larger positions is Merck. Breaking out.
ACU may resume in less than a minute. ACHR. ACU may res in 10 seconds.
Disney, nice bounce on Disney. Give me a chance to roll those strikes out. Merck is doing really well. Merck doing well. S&P still flirting with these levels. Keep an eye on trades. If this gets above 66.30 here, this could run. Okay, if it does get above 66.30.
FOXX.
All right, S&P. $66.30. Yeah, we're up against resistance. Consider taking some risk off. Okay, if you got profits and you are straining to get above the levels currently trading at, here's a good example: IWM struggling to get above this level. Google, okay, can't get above VWAP. Apple trying to grind higher, but not able to get through this 271 area for some reason. SPY stalling. I would take profits. Take profits while you have them. If we dip and start to go, you can always buy them back for 50 cents more, whatever. Gap. I took this one off.
What was that accent? Easter. Pittsburgh accent, a city of winners. I'm going with
Gap. Okay, it's a good thing I took this off this morning. Okay, we took it off as it was dropping. Perfect. Got out of that one. Now, what's Goldman Sachs doing? Goldman Sachs. Goldman Sachs. Big wick on this one. Really like to get out of Goldman Sachs. All right, so Josh is looking at Zoom. Okay, remember we could take an Iron Condor on Zoom on Monday. Okay, NVIDIA seeing some resistance, so you want to be taking some profits off, my guess. Okay, so here we are with NVIDIA, Tesla. I'd like to reduce some exposure here.
In a speech in Chile, where he said, quote, I still see room for a further adjustment in the near term to the target range for the federal funds rate to move the stance of policy closer to the range of neutral. Near term is what everybody got.
Boyle, Bloomberg, natural gas ETF, Bloomberg, natural gas ETF, Boyle. Looking for that to push higher.
December cut, and that talk continued today when I sat down with Boston Fed President Susan Collins.
My baseline says that maintaining mildly restrictive policy is appropriate to ensure that we get that disinflation. And then over time, I would absolutely expect to normalize further. But I think doing so cautiously, gradually is appropriate.
Now, Krishna Guha, he works at Evercore ISI, follows the Fed. They worked also for Williams for a couple of years. Suggested Williams' comments would have come with a, quote, sign-off from Fed Chair Jay Powell. Guha called Williams remark a leadership steer in a divided Fed. And now the question, Contessa, is how many voters on the Fed follow the leader?
Well, that's a great question. Also, what data do they even have to work with ahead of the next month's meeting? And what won't they have? All right, we've got a frozen Steve Leisman, but this issue of the debt.
Oh, how lucky we are.
What they have to work with, are they going to have CPI or not? And it looks unlikely at this point. Steve, we were just talking about the debt and what they have to work with and what they don't.
Yeah, if I'm unfrozen now, I can answer the question, but I can't control what. Here's the thing: they don't have a lot of the main data points. They have a retail sales data point. They have a JOLTS data point. The big data comes.
Look at Boyle, the Bloomberg, the Bloomberg natural gas ETF. Notice the change in direction.
downside. But right now, I think there's going to be 3-4 descents whichever way the Fed decides come this December.
All right, Steve Leisman, frozen or unfrozen, it's great either way. When you're frozen, you know what we just say: let it go, let it go.
Oh,
It's
please.
lawyers call and there's trademark issues, blah blah. My next guest says the economy
Oh my gosh.
resilient and any pullbacks are actually buying opportunities for mid to long term investors. John Stolfus, Chief Investment Strategist at Oppenheimer, is joining me now. Okay, so where are you looking for the opportunities amid all this bubble talk and, excuse me, but the roller coaster that is the market right now?
Well, great to be on the show with you today, Contessa, especially on really where the Fed has been so kind to us, Great to hear
Into the winter.
today and see the market rally the way it is. We think, where we stand right now, it really is opportunity, not so much to buy the dips wildly, but rather to focus on the babies that get thrown out with the bathwater, those really great stocks that for the moment get thrown down like hot potatoes onto the floor by the traders, the short-term aggressive investors, on any excuse to sell without FOMO in a bull market that continues to appear to be very much intact. So we continue to like infotech, communication services, we like industrials, we like financials, and yes, we do like consumer discretionary. We have been, for a long time, we recommend cyclicals over defensives. That's worked out now for years as well as for this year itself. We think volatility, part of the story. The big issue is, will the Fed indeed cut in December? We think it does 25 basis points. We call it another down payment by Jerome Powell to let both Wall Street and Main Street know that indeed the Fed is in the process of ending the Fed funds hike cycle that started in March of 2022. So far, what we have 3 cuts from last year, 2 cuts so far done this year, with 1 more likely to go. We can't help but think that this will, in effect, just lets people know that it may not be lowering rates as fast as many in the market want, particularly leverage players on Main Street, whether it's real estate or people just looking for lower mortgage rates. But we think overall, the resilience in corporate earnings is shown by the S&P 500. Thus far, remarkably good, powerful, with a domination of earnings growers versus, I think, just 1 or 2 negative earnings growers among the sectors, among the 11 sectors. And there, to be expected with energy, based on the fact that we're awash oil around the world. But the rest is very good, and so we think stocks have time to move up and heal from the wobble that it had over the course of the last 10 days.
You mentioned consumer discretionary. In all of the focus on whether the Fed is going to cut or not cut, what gets lost is how that affects how consumers see the economy. The University of Michigan just out with its consumer sentiment index, which basically was in line with expectations, and they saw a little bit of a pop, just itty-bitty, post-government shutdown when that ended. If you like all these sectors, infotech, communication services, industrials, financials, and consumer discretionary, what's there left not to like?
Well, I think, for example, we're not hot on real estate at this point. We think that's more a granular story where you want to look at the individual properties. We would also think that related to materials, not quite yet. It's beginning to warm up and gain some favor. I think earlier today it was seeing some favor. But we do think some that have been in the shadows sort of for a while here. Utilities are looking good. If the Fed is in the process of reducing interest rates, that trend should help reduce the typical what they call the bond market proxy of the utility stocks. When interest rates are high, their yields aren't as attractive typically, but this would be much more typical, would be much more attractive for their yields. In addition to that, the inter to long-term story for utilities, especially the regulated utilities of the S&P 500, looks good with prospects for.
Okay, we continue to move lower. So there you go. You had your resistance, 66.30.
All right, John Stolfus, they're seeing that
given you opportunities to exit some of these positions. If you bought anything today.
Good to see you. My next guest says defense lines were breached in yesterday's whipsaw actions. This morning, there is a new key level to watch in the S&P. And if we close below it, we could be in for further declines. Let's bring in Jessica Inskip, who's the Director of Investor Research at stockbrokers.com. Jessica, what are you looking at in terms of your market signals that would indicate we could be in some danger?
Absolutely, and great to see you, Condessa. The trading cycle, even though it's bullish, it's at risk. So we say it's bullish when the 13-week, the 26-week, and the 40-weekly moving averages are sloping upwards and they're acting as support. The 13-week is that first line of defense because it represents 1 quarter worth of prices. Despite beating earnings and that broad-based, we've actually breached that, and now that has become resistance. Right now, that's 66.50. It is a moving target. So I want to make sure that the S&P 500 market cap weight closes above 66.50. We're so close today, but consistent closes are extremely important. So meaning I need to watch the 13 weekly moving average on the S&P 500 in order for us to resume that bullish trading cycle. Otherwise, we did see a weekly MACD crossover. We haven't had a weekly MACD crossover, Contessa, since December 26th of 2024. That led to the major decline that we had starting in early March to those April lows when we did breach the 13, 26, and 40. But before that, there was a pullback to the 26 weekly at that time, to that ceiling of uncertainty, and then of course Liberation Day is what pulled us further. So that's why it's important is we have a MACD crossover and we've breached the first line of defense.
Okay, so when you're talking about these crossovers and your break even point, 6,600, right? Okay, does that indicate to you a short-term correction or something more structural?
Short term. So technical analysis is very much a if this then that type of statement. So it's constantly shifting and moving, and if we add moving averages, those two are moving as well. So the 13 week is at 66.50. That is going to adjust. So if that breaks 66.50 supported by a MACD crossover, we risk going to the 26 weekly moving average, which is around 6,400. So it's lines of defense. As those get breached, either they're going to act as support or they're going to turn into resistance.
And what is the breach signal for broader market trends?
So that's where we'd like to look at the equal weight. This has been less aggressive, but as history has showed us, there is a rhyme or an echo, and the equal weight has been breaching these lines first, but they've also really failed to maintain higher highs. Now that to me doesn't mean that we're into a more aggressive fall down, but it does mean that the rally would be rather narrow if these aren't supported or overcome. So support for the equal weight is around 7,300. This is important because that's an area that was created in October of last year. That acted as resistance for a period of 7 months. So we haven't declined below that, but if we did, that's where that if then statement, that would be very bad. We would risk a decline much lower, but it would be ever so hard to go above that line because there's so many points where that acted as resistance for 7 months. And it's psychology. If you owned stocks at that price, you're break even, you might want to get out of it at that point if you're incurring losses. So it's the equal weight is struggling, but that doesn't mean that we're necessarily in for a rally. I see it as more range bound and then using that as a signal to watch the market cap index.
That's what she's talking about. 13, 26, 40, 13 weeks, 1 quarter's worth of data. This is the 3rd week down. We haven't seen a 3-week decline since February.
I completely agree. So the big ceiling of uncertainty, and I like to match them up. Where is the ceiling of uncertainty on the market cap? Where is it on the equal weight? So on the market cap, it's actually 61.47. I call it the ceiling of uncertainty because it's when the first tariff was actually introduced. And until we overcame and got tariff clarity, we did not overcome that ceiling of uncertainty. That's where we can line technical analysis with events, because technical analysis is really telling us investor sentiment. What's the mood of the market? And the market does not like uncertainty. It creates volatility. And we see that volatility spikes. If we look at the 1-day VIX or even the 30-day VIX, there's very many volatility products coincide consistently with uncertainty of some aspect. As of late, it's if we do not get any Fed rate cuts, or it feels like the Fed is going to be a little more restrictive. We have a volatility spike, and then we start testing all these levels.
Jessica Inskip, thank you for the great explainer there. Appreciate it. Coming up, the first wave of retail earnings behind us. If there's one big takeaway, it's that value does win people's wallets. We'll tell you why. We're talking with Morgan Stanley analyst who's turning bullish on the sector as the XRT retail ETF tries to snap a 6-day losing streak. NVIDIA shares trying to bounce back after giving up yesterday's early gains. And while Citi says the AI bubble has not popped, they're ready to take some risk off the table. Their head of global macro strategy joins us.
Yeah. We continue to fade. So if you took the puts at the highs, if you took the Q and took some at the highs, all right, got a lot of people probably questioning whether or not they should have taken any trades today. We're starting to roll over again.
Low tick alert minus 800.
Okay, we continue to drop off. Trace is rolling over. You saw the resistance. Whenever you see this, either above or below, pretty good odds that you're going to see an inflection point.
The first big week of retail earnings in the rearview mirror. Home Depot, Lowe's, Target off to a bit of a rocky start, and then you've got Walmart, and it's like laying down the gauntlet, raising its full year guidance for a second straight quarter. TJX followed suit, and now the theme of the week is value retailers are winning wallet share regardless of income level. Joining me to talk more about it, CNBC.com retail reporter Melissa Repko. Why now? Why is value the thing that all consumers, even if you've got lots of money, after?
The recurring theme that I hear from a ton of different retail CEOs, I spoke to like Marvin Ellison at Lowe's, he was saying, it doesn't matter what your income is, you're reading the same headlines. You're reading about things like the prolonged government shutdown and layoffs, and all those things catch consumers' attention regardless of what salary they make, and that makes them think a little bit about how they're spending their dollars and how much they should be scrimping too.
Well, the interesting thing, and we sit close to each other in the newsroom, so I heard you talking about Old Navy and what stellar performance Old Navy had for Gap, and even though they come in at lower prices, they are not having to put their stuff on discount. Why not?
Well, they are sharper if you compare them to a lot of other players in the field, and they're known for value. When you think about the reputation of retailers, Walmart and TJ Maxx and Old Navy, they're the companies that come to mind when people say, I'm looking for a deal, I'm looking for a strong price point. And so those are the players that are really winning so far.
who's losing? And for instance, there was a mixed report from Target.
Yes.
Why is Target struggling so much?
Target has a lot of its own self-inflicted problems. When you think about even retail fundamentals, if you go into a lot of stores, the thing I hear from so many shoppers is that they're noticing out of stocks, they're noticing short staffing, long checkout lines. Those basic things are things that frustrate people, especially during a busy time of year. And that's been really plaguing them for the past 4 years, where they've had roughly flat annual sales.
The other interesting thing when we're looking at Walmart and its stellar performance is the way that it's been able to come back and give Amazon a run for its money in the e-commerce sector.
That is really one of the big stories. They put up 28% growth in their e-commerce business for the US. And for some categories in their marketplace, they're seeing north of 40% gains. Automotive, toys, apparel. And so those general merchandise categories tend to be higher margin, which means they can offer really compelling deals with milk and eggs and things like that to draw people into their stores and find that balance.
Melissa, it's a great story. Thank you so much. And you can read the full thing on CNBC.com. Full story. I don't mean to call it a thing. Thank you, Melissa. Morgan Stanley is turning more optimistic on these retail stocks. The firm issued a rare double upgrade on the consumer discretionary sector on goods. And it says that softline retail will be the next winners. Joining me with her stock shopping list.
Okay, can we run back up?
Alex Straighten. Alex, nice to see you today.
Good to see you too. Thanks for having me.
Give me a sense of what drove the double upgrade. What were you looking at?
Yeah, so I want to be clear here. This came as a part of our U.S. equity strategy team's 2026 outlook. They issued a pretty bullish forward look with above consensus EPS on the total market. And a part of their call was we're moving to an early cycle environment. And that's where, as you called out, they double upgraded consumer discretionary goods to overweight. Super rare, I think. What really matters for me here is that they've been underweight this sector for the better part of the last 3 to 4 years. So this is certainly a meaningful change in view from them. But to put it in a nutshell for you, they think that Liberation Day represented this key capitulation moment, marking the end of a 3-year rolling recession, and that many key ingredients of an early cycle environment are now evident. That matters to me because softline stocks are typically early cycle winners.
Okay, so basically what your team laid out is that there's compressed cost structures that have enabled some operating leverage, that there's a rebound in earnings revision breadth, and that there's been pent-up demand across constrained sectors.
All right, looks like we're going to get a bounce.
Discretionary goods sector that you look at. Where do you see?
Looks like we'll get a bounce here.
And especially, this would be important ahead of Black Friday, this all-important holiday.
Hedge flows turning back up.
Where might you see companies benefiting from that demand?
Nice bounce.
It's a great call out, and you're talking about the 3 key items that they're seeing of an early cycle type of environment, and one is that compressed cost structure. We saw a lot of COVID related reduction that's now starting to potentially enable margin expansion.
Entire story, but for now we are kind of sitting at the verge of a potential upside tipping point here. We have our moving averages here. They are continuing to diverge farther apart from each other and accelerate to the downside. These are lagging indicators, though.
We saw this yesterday too, if you recall. We had the move lower, more profound, but we had the move lower, and then we had that bounce, more profound on the S&P. S&P was more profound. This is Friday. Okay, yesterday we had the move lower, then a big bounce. Okay, similarly, we got the move lower right now. We got a nice bounce so far. See how far they can take this.
For some upside, as we haven't gotten its earnings event yet this quarter. We've seen a lot of big moves in tech, and unfortunately haven't been able to say it's been hugely positive, but obviously different market could have naturally, of course, see some different results. We'll be watching those numbers as they release
Tuesday after the close, of course, next Tuesday. But now, as we do think through an example trade here, Alex, I mean, HPQ has been very much punished by this market, but always areas of opportunity if you're, again, a supporter of some of the hardware return to this market.
Yeah, definitely the more hardware element of Hewlett Packard. And I must say, although the chart is relatively volatile, given the low implied volatility relatively, and also given the lower stock price, there's just not a lot of premium in these options, just objectively. So kind of changes the strategy playbook just a bit. And I looked at something a little bit more fun. Buying a call. Hey, it's a simpler option strategy, just a single leg. But you know what's fun about it? Unlimited profitability. If this stock really takes off to the moon, as they say, this example could do quite well. But it expires at the end of next week, so it's going to be November 28th expiration. It is an in-the-money call, so it's a 22.5. It's meant then, of course, it doesn't represent stock, but of course it's a derivative that potentially gives the owner of that the right to exercise to buy 100 shares. So with it being in the money, that increases the likelihood of it potentially being economical to exercise that. It's going to trade with a little bit higher delta, as they say, and perform theoretically a little bit more like stock, especially to the upside. So this is a way to get a risk-defined strategy, Jenny, that has performance to the upside, much like 100 shares of stock, risk definition to the downside because it's an options trade. So $1.50 debit means you have 150 at risk. Now, the stock isn't quite trading for 24. You'll notice that's the break even. You add the debit spent to the strike price, you'll get 24. So for that
S&P trying to push a bit higher.
That risk definition, you pay a little bit of a premium versus the current share price, which makes sense. That's the idea of options and why there's time value. But if you get a big move post earnings next week and this thing gets off to the races, chance to really see a quite substantial return potential because of that unlimited profitability that's uncapped by it not being a spread.
Yeah, and I think that really great breakdown on, a more simple strategy. Obviously, this is pretty much what you learn, I feel like, when you're learning to trade options. But obviously, simple sometimes works and does have that unlimited upside potential. So we'll leave it there for Chartmaster today. Coming up next, we will dive into banking, specifically banking trends we're seeing out of Gen Z consumers and how they're overall shifting and changing the banking landscape. For instant reactions, earnings breakdowns, and hot takes that teach you about stocks and markets, follow me on X at npedalides and connect with me, Nicole Pedalides, on LinkedIn, Facebook, and Instagram.
Trading at Schwab is powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim Desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute user insights. Trade brilliantly with Schwab.
Live from Chicago, this is Trading 360. I'm Marley Caden. We track macro forces, market trends, and company news that shape investor decisions, all with expert analysis and actionable context. From inflation data to sector rotations, earnings to policy, it's a comprehensive view of the market every trading day. Trading 360, in-depth market coverage straight from Chicago. Weekdays at 11 a.m. Eastern on Schwab Network. Stay connected to what moves markets. Download the Schwab Network app and get live coverage wherever you are. Hey, Dad, I have a question for you.
Sure.
When did Granddad first start investing?
Granddad had an account with Schwab before there were branches in the area. He really started with nothing. He worked hard, and after he passed away, the torch has been passed to me, and my advisor, Jennifer, she was with me with the journey, helping with the estate distribution. The two grandchildren planning for their college educations. Someday it'll be their turn.
Welcome back to Next Gen Investing. It's now time to discuss some of the trends we're seeing amongst banking, specifically with Gen Z consumers. Joining us now is Gentry Davies, CEO and founder of Crew. So Gentry, thank you so much for being with us on this Friday. Now, I will say we've seen an overall shift in the financial world. I mean, there's no doubt about that, especially with more and more of these fintech players becoming very relevant. What are you seeing?
TYG may resume in less than a minute.
Odds for a December rate cut climb and yields fall. The home construction ETF, ITB, is on pace for its best day since August.
All right, so CNBC finally caught on.
Hovnanian, LGI Homes, and KB Homes. You've got Hovnanian up 11.5% right now. That iShares is up 5%. LGI Homes up 10%. And the consumer trade higher today with hotels, cruises, and gaming stocks all in the green. I'm going to highlight some of them here. Wyndham is up 4.5%. Hyatt following suit. MGM Resorts, Royal Caribbean. I've just checked. Caesars is up 6% right now. And you've got DraftKings up almost 4%. We're seeing this across a slew of travel, leisure, and gaming space. The latest reading of consumer sentiment shows the outlook for economic conditions, while still low, did improve after the government shutdown ended. And inflation readings also improved. The biggest winner in this group is the Wyndham, Hyatt, MGM, and Royal Caribbean. Let's get to Bertha Coombs now for a CNBC News update. Hi, Bertha. Hi, Contessa.
S&P trying to turn the corner.
Jordan is reportedly asking major U.S. banks to hand over communications and other materials related to former special counsel Jack Smith's election interference probe of President Trump. According to Politico, which reports that Bank of America, JP Morgan Chase, Citigroup, and Morgan Stanley are among dozens of financial institutions that received letters from the committee. No comment yet from any of the banks. Democratic Congressman Eric Swalwell is entering the race for California governor. Swalwell announced the run of
Okay, looking like we might be reversing here. 6,600.
Grammy-winning rapper Pras Michel of the Fugees sentenced to 14 years in prison. He was convicted of illegally funneling millions in foreign contributions to President Obama's 2012 re-election campaign. The rapper has vowed to appeal.
Bertha, thank you for that. Coming up after NVIDIA was unable to reignite animal spirits in what has been a rocky market, Citi says the risk-reward for stocks has officially deteriorated. We're going to talk to the company's head of global strategy about how it's reallocating positions into year-end.
All right, I just took a quick long here. Not straight calls. 66.10, 66.15. Filled at $1.92. Dollar stop.
ACHR.
Okay, looking good so far. S&P back to the highs. S&P, I bought a vertical. 66.10 at the money. Okay, this is going to move in the opposite direction pretty quickly, it looks like. All right.
APLM may resume in less than a minute. MUU. ACHR.
At 66.15. All right, if we get to 66.15, that would be maximum profit overhead. Let's see if we can get there.
APLM may rest in 10 seconds.
I'm not looking for a home run. I'm just looking to chip some out of the market. I'll sell into 66.15.
TYGO may resume in less than a minute.
Well, this is a lot more fun today covering the stock market because the shares are rebounding. We saw yesterday's major market reversal as bets of a December rate cut jump back up. I mean, it was
Tesla
yesterday.
at VWAP. Tesla at VWAP.
Funds rate saying 70% chance of a rate cut in December. That is pretty significant about face.
Hedge flows turning back up.
The bull's inability to take charge has my next guest cutting his tactical equity risk. He says the risk reward market is deteriorating. Dirk Willer is the head of global macro strategy and asset allocation at Citi Research. Dirk, great to have you here today. Give me a sense of how you put these wild reversals into some perspective to come up with a strategy about your position.
Yeah. No, I think what happened was that the whole world bought into the Santa Claus rally, really, right? Which is, by the way, super reliable.
Super.
Especially when there's
Get down. There's a bomb in there.
Positioning stronger and higher into yen. And there were two fundamental underpinnings, of course. There was the AI.
66.10. Let's see if we can do 66.10.
The Fed story, I think, was a very important reason to be long because essentially the story was AI is cutting into it. So that's extremely bullish. And then I think what happened yesterday was really that, or over the last weeks, is that the market got nervous on whether we will really get this Fed cut in December. And secondly, people got nervous on the AI story. And there are very nuances to that, and we can go into that, of course.
Come on, S&P. Let's do it. Let's do it.
But no one gave up on Santa Claus before NVIDIA, right? And so NVIDIA came with a very strong quarter. I mean, our analyst raised his target and so forth. And the market couldn't hold.
The market. Love that accent. Okay, going to take some profits into 66.15. Okay. All right. Here we go. Here we go.
Really that the market is doubting a little bit the quality of some of the numbers that are floating around, right? And a lot of stress.
There we go.
The start of the derating of some of the AI names came really when people started to question OpenAI and whether a company with really a very small revenue base can really put 1.4 trillion of orders into the market, and that's at the very least extremely ambitious, of course. And so I think that is what caused the beginning of this downgrading expectations, and then. You know, do you believe the numbers that you hear? Is that the question to ask?
Extreme high took a
All right, trying to get out of this S&P going here.
On the table in December, and then you see how the market reacts here. What's your expectation?
Yeah, so Citi still has a rate cut for December and for January. And before Williams, it was dicey. I mean, I think the market had it right to be careful on that call, just because we don't get the data the Fed really would like to see to make that assessment whether another cut is necessary or not. But I think even if you wouldn't get this cut, we still would have expected it to be a dovish pause in the sense that the Fed would probably have said, listen, we wait for a few more data points, but then we could always cut in January if the data really this week. And our economists make the case.
Okay, looking good. Try to get out of this now.
I guess then the January rate meeting really.
When you're looking at the potential for AI and big tech to be
extreme high took
are
alert.
you looking at historical comparisons to try and analyze that? How are you trying to weave your way through whether this is or is not a bubble?
No, exactly. I mean, that's really the key question because the bubble word gets used extremely loosely, I would say, right? And it's very important to have some structure around that. And so we use a definition that we have used for quite some time, which is if something goes up by more than 2 standard deviations against a long-term trend in real terms, it's a bubble. And the interesting part of that is when you enter bubble territory, you are not supposed to get bearish. You're supposed to be bullish.
All right, I'm out.
Because they can last quite some time. The difference between a bubble and a normal bull market, though, is that it usually ends badly if you're in a bubble and you give back most of these gains eventually. So for us, that means we are not calling for the end of the bubble. We're just saying you have to always have some hedges on as well, because eventually the bubble will turn.
Well, and then you have one of the biggest players in the space is OpenAI, which is not publicly traded. There's not a stock
Hi,
that's
took
moving
alert
on it.
plus
So then how do you
800.
factor that in?
Yeah, that is the biggest complication to make the comparison. To
Okay, looks good. S&P still going. Maybe some straight calls on S&P. See how far they go with this.
SoftBank has, of course, invested a large amount in OpenAI. They own around 11%, and we did the math and we stripped out all the other holdings that they have to the extent we could. Some things we don't know, but they're, I think, smaller. And you find that the SoftBank price moves very, very closely with our estimate of the value of OpenAI. And so, if you want to know how does this private company at the heart of this whole AI debate really trade, how is the market assessing its prospects, you really can look at the SoftBank equity price, and that, of course, has not been trading overly well over the last
Is
weeks.
anything about what's happening
All right, right back up to supply again.
in the market today changing your thoughts
Apple going.
about repositioning risk?
I think the AI story has not changed. What has changed today is that we got this Williams comment, and so the market has repriced the Fed. And of course, it's actually in line with Citi's call for a Fed cut. But then you might still prefer to own different type of stocks, right? I mean, then it's more interest rate sensitive stocks that benefit more if the AI story is still a little bit on the back foot.
Jordan, it's great to have you here. Thank you so much for sharing your insight.
Thank you very much.
Coming up, Alphabet has gone from laggard to leader when it comes to AI. Not only is it the only Mag 7 name higher this week, up nearly 8%, but the latest version of Google's Gemini has OpenAI's Sam Altman telling employees he expects rough vibes for a bit. His company's trying to play catch up.
NVIDIA, nice.
To pull ahead. That's next. And a reminder, you can get the most out of CNBC by checking out CNBC Pro. You'll get
Okay, note the Bollinger. Note the below. On that crossover, we had a nice MACD crossover. We moved above L2, 1 day estimated move, back up towards the highs. And hedge flows also confirmed. So hedge flows confirming. I'm your host, Cousin Vinny, coming to you from the closingprint.com. If you took that trade, I'd be taking some profits off into strength. It is Friday the 21st, 1:41 p.m. Got a little over 2 hours and 18 minutes to go. So we'll see what they do here. Maybe they're going to run this. I'm sure there's probably some stops overhead. Stops above. Most likely got some stops above here. All right, we're looking for a pop here. Can we go some more? S&P, another cheap trade on S&P. Wow, this would be something else if this goes. 66.50. Can we get to there? Can we pop through this? Hit the shorts? Let's see if the shorts can take this higher.
The only Mag 7 stock positive on the week, and its renewed AI momentum is worrying one of Google's biggest AI rivals, according to new reporting. Deirdre Bosa has more in today's Tech Check. Tell us all about it, Dee.
This is a good one, Contessa. So, according to a memo obtained by The Information, Sam Altman told his employees that he expects, quote, the vibes to be rough out there for a bit, as Google's recent progress could create some temporary economic headwinds for them. Now, that line, temporary economic headwinds, it gets at this emerging narrative in the AI race.
Okay, we're about to go here.
And Google's numbers, they are first in class. Gross margin of 32%, cash reserves $112 billion, free cash flow over the last quarter, $24 billion. Now, OpenAI, on the other hand, isn't even profitable. It's burning cash fast, and it has to raise again and again just to keep pace with a company that can fund its entire AI strategy out of search profits. Put another way, if I need to, Google can weather a downturn, but the bubble bursting or even maybe deflating could be existential for Altman and OpenAI. So when you hear Google's leaders, Contessa, start talking about a bubble this week, like we have from Sundar Pichai and Demis Hassabis, you got to wonder who that really hurts and who it could help. But a very interesting change and dynamic over the last few months.
And the other interesting thing, and we had briefly touched on this yesterday, Dee, when we were talking, is that Google has a lot of experience in consumer-facing products. And so the idea that you would be able to use your AI in a way that is accessible to people, whether they're small business owners or factory workers or entrepreneurs or just, my mom, that they would be able to give those products in a way that's accessible.
You're hitting at really the core of the bull thesis around Google right now, and that is the full stack. It has the distribution, the ecosystem, the chips, the models, the products. I mean, even with the Gemini 3 release this week, they didn't just release it to subscribers or to people who are looking for AI chatbots. They released it across AI mode, so that's potentially billions of users who aren't even necessarily looking for a chatbot. They're getting the power of, the best model out there right now. So even your mom is maybe using a ChatGPT, a Gemini. I don't know if she's using a number of them. I told my mom that she has to. She might be using, Gemini 3 and thinking this is the best one, and then that may be sticky because she's using Google or she's
All the New York fangs are pointing upward.
certainly flexing that. It's funny to go back to Contessa, Satya Nadella's comments from not all that long ago saying that he wanted to make Google dance. They're dancing, and I think they're having fun doing it.
So fun fact here. I went on to Gemini after we talked about Nano Banana yesterday and asked, can I use Nano Banana right now? And it told me that you can't actually eat Nano Banana, that it's not a fruit, its own product. So I said, no, that's not it. Okay, let's try again. Deirdre,
all right, there's some work to do.
Thank you. Coming up, Bitcoin hit its lowest price since April this week. That's
Okay, can we take out some stops over there?
Bitcoin, emerging tech, those shares down 24%. Look at that. What will it take for crypto to regain its footing? We'll discuss that next.
PT and Baltic.
Hi, took alert.
Okay, here we go. Stop run here. Stop run.
Extreme high took alert.
SOXL. NBTS.
Holy moly. All right, that was a good one.
SOXL. MVLL. NBDX. MUU. NBDL. TIG TYGO may resume in less than a minute.
Okay, that's breaking news. That's got to be something going on with Trump.
Extreme high tilt alert.
Selling NVIDIA H20 chips, H200 chips to China. Okay, that's a big deal. Okay.
MVLL.
NVIDIA. Okay, shit. Let me get the NVIDIA. Damn it. There we go. NVIDIX. NVIDIX. Buy market.
WSHP may resume in less than a minute. TYGO may res in 10 seconds.
NVIL.
SOXL. NVDX. NVDU. VNET. NVDU. WSHP may res in 10 seconds.
What a difference a day makes. Here we're seeing session highs now on the Dow Industrials up almost 2%, S&P 500 up the same, NASDAQ up the same, and you're seeing the yield on the 10-year Treasury sinking 4.081% is the yield right now. But we're looking at a down day for crypto as Bitcoin hits the lowest level since April. It's now on pace for its worst week in 3 years, stands at 84,911, down 1.8% today. What's driving the downside move? Mackenzie Sagalos is following Bitcoin and the move lower. What's happening here?
Hey, Contessa. So Bitcoin briefly tested that critical $80,000 support level this morning, dropping to a 7-month low before bouncing back. A sign of just how fragile this market has become. $2 billion in liquidations in the last 24 hours, and institutions aren't showing signs of buying the dip. Thursday saw the second largest outflows ever from U.S. spot Bitcoin ETFs, and CoinGlass's Fear and Greed Index just hit its lowest level since the 2022 meltdown. Now, crypto winners in the past have come during year 2 of that Bitcoin halving cycle, where we are now roughly, and have been associated with drawdowns of 80% or more. At this point, we're only down around 30% from last month's all-time high for Bitcoin, but the worry here is fading momentum. Citi flagged in a note this morning that large wallets are reducing positions and dormant coins are starting to move, a sign of whales losing conviction in the trade. There's also the broader macro gap.
Beautiful.
Get a Fed rate cut in December, and a rising correlation between crypto and the AI names. Both are getting hit as investors rotate out of speculative trades and into defensives like gold. The digital asset treasury stocks are really taking the brunt of it, especially Strategy, the biggest corporate holder of Bitcoin and the most liquid proxy for the asset. It has become a pressure valve for hedge funds shorting the space, now down more than 33% in a month, Contessa.
All right, Mackenzie Sagalos, thank you for bringing us up to speed there. Still ahead, stocks shaking off yesterday's wild reversal as hopes rise for a December rate cut. But the Dow is still on pace for its first monthly loss since April, while the NASDAQ is set to snap an 8-month winning streak. What options are revealing about the market's next move on the exchange? Right back.
VNET.
All right, so we took the stops out there. Beautiful trade. Nice job. Nice job. Whew. That was nice. That was nice. NVDX. Okay. Wow, we got 2 hours left. It feels like 3 o'clock already. I don't know why. All right, take profits up here. Apple, nice follow through on Apple. Good job. Okay, we did the 272.50s. Apple, the calls from earlier, 272.50s. Nice job, Frano. Opportunity to take some things off the table if you need to. All right, just for the record, consider taking some things off the table.
Stocks are rebounding, but today's gains not enough to turn things positive for the weekend. My next guest says, while yesterday's big reversal could be seen as a healthy correction of October's speculative excess, the options market reflects intense demand for downside hedges, with SPY put volume surging to its second highest level ever. Joining me to discuss what's happening in options, Chris Murphy, co-head of derivative strategy at Susquehanna. It's great to see you today, Chris. Great. Give me a sense of what the options are telling you.
Sure. I mean, just as you mentioned, we look for a lot of those, highest put volume all time, shifting and skew, which just means a lot more demand for downside options than usual. VIX term structure inversion, that's when you obviously you're looking at the VIX and see how that shot up compared to the rest of the VIX curve. We often look to those as capitulation indicators that all the kind of bad news is being priced in the here and the now. And we saw a lot of those elements yesterday. So those metrics may look scary, but a lot of times we think of those as contra indicators because all the bad news is being priced into the options market.
And some of these frothy names have really been squeezed. You've got Robinhood, Palantir, Coin sinking more than 7%, Bitcoin down about 10% just over 10 days. How do you read that?
Well, we're watching the options trading for a turnaround there. Unfortunately, in Bitcoin today, the Bitcoin ETF, by far the most notable trade was a bearish collar where they bought 100,000 December 43 puts. So looking for more downside there versus selling the 53 calls, comfortable with less of a chance for a rebound. So, we're always going to be looking for the options. We're not seeing a ton of bullish flow there. We are seeing unwinding of hedges in other speculative areas like the ARK complex and, in something like software that's been hit hard. We're seeing investors closing their puts there, but not so much in the Bitcoin ETF right now.
We have a nose alert right now, Chris. Stay with me here on NVIDIA. The stock is at session highs on reports that U.S. officials are having early discussions about letting NVIDIA sell its H200 AI chips to China. That is a move that would mark a major win for NVIDIA. You heard a lot of analysts and even Jensen Huang on the earnings call talking about optimistic expectations for next year, even without China, if suddenly the White House were to reverse itself and allow these chips to be sold to China, that could really boost NVIDIA's bottom line. And there you're seeing the stock reacting now a full percent. Chris, back to you. These AI plays have been sort of the theme that is driving all the other market action. Is that true for puts and calls as well?
Yeah, it's interesting you bring up NVIDIA. Of course, we're talking about NVIDIA every day, but we've been talking about since the earnings yesterday and since the reversal. Similarly, in the options, usually you see a lot of FOMO in the NVIDIA options, a lot of bid to the upside options, less people reaching for downside protection. That's kind of flipped a little bit since yesterday's reversal, and over the course of the last week, we're seeing more demand for downside, less demand for upside. And that's why something like the news you just mentioned is a little bit of a surprise, and that could change things. We'll have to check out how the Nvidia options react to that breaking news.
If you're looking at an aggressive demand for hedges and some poor liquidity that might indicate some caution, then do you see this as sort of a fundamental breakdown, or is it something that is maybe just more sentiment driven?
I don't personally. I think that kind of as you mentioned at the very beginning, what was really probably mispriced was a month ago when the most short baskets were outperforming the S&P by about 25%. People are still up on the year. The S&P's up 11%.
Nice, 800%. Got to start trading those more often.
It makes sense to start seeing an increase in hedging. 5% peak to trough pullback for the S&P, given everything that was going on in October, froth-wise, seems pretty standard to me. Of course, we're seeing more protection right now, but it doesn't seem like panic mode.
Chris Murphy of Susquehanna, thank you so much for joining us today. Again, you've got all the indices at session highs right now. Brian will have more for you on that ahead on Power Lunch. Thank you for watching The Exchange. We head to Power Lunch right now.
Okay, Apple. Let's take a look at Apple. TTM squeeze.
Going out strong on a weak week. Welcome to Power Lunch, everybody. I am Brian. Kelly is back in 2 weeks, and despite some gains today, stocks overall headed for their worst week in months. Yes, mostly green on the screen, but a lot of the recently red-hot AI-related names, they're getting sold again. Also sliding right now, some crypto and crypto-related stocks. At one point, Bitcoin hovering just above the 80,000 mark. Tom Lee yesterday telling us crypto prices down after like a software bug at a crypto exchange triggered margin calls. We've got a guest all fired up to challenge that thesis. Jan Van Eck says that could be a bunch of BS, and he knows why he thinks there have been big-time selling. Plus, a big-time sports league for women and why some investors are all in. We have got a lot to do. Welcome, everybody, to Power Lunch. Happy Friday. Stocks are actually soaring right now. In fact, the small caps, the SML, is up 3.5%, one of the biggest gains of the year. But those gains on the screen, that green bull, doesn't mean the coast is clear, especially for Bitcoin and crypto. Because if you missed it yesterday, it was a fascinating interview with Tom Lee where he made some comments about maybe why Bitcoin and crypto are going down so much recently. Listen.
On a specific exchange, a stablecoin's price varied from other exchanges. It actually, stablecoin should stay at $1. It dropped to 65 cents. But that only happened within the exchange quotes, within this exchange because of liquidity. This error is actually essentially a bug, a code error.
Now, basically, Tom was saying that software issue can trigger automatic.
Okay, Google looking really strong here. Google. Okay, quite the reversal. Yesterday was a bloody mess for a lot of people that were just strictly long.
Some people strongly disagree. Your first guest today firmly in the latter camp on that one. Let's welcome in Van Eck, CEO Jan Van Eck. Jan, good to see you. Are you, I'm sure you like and respect Tom Lee very much, but are you discounting that software bug thesis?
Well, I approach Bitcoin in the following sense is, should Bitcoin be in your portfolio, number one? And how
What's
do you...
the answer to that?
For sure.
Okay.
But, at least now for sure, but we've been saying that since 2017. Number one, and then what are the drivers to think about, whether it should be added or decreased in your portfolio? So there's two things. There's sort of mainstream global liquidity reasons to buy Bitcoin, just like you think about gold. But then there's on-chain reality, things that you have to know by looking at kind of the crypto ecosystem. And if you ever did a Bitcoin 101, everyone knows that every 4 years, there's this thing called the halvening cycle, right? Where Bitcoin miners get half the amount of Bitcoin as basically
the same work.
The same work. Thank you for making the simple phrase, right? And so we know that's happening. And every 4 years for the last decade, Bitcoin has had a big negative year. And guess what? 2026, it's scheduled to have a big negative year. So now what investors have been doing is pre-positioning for this bearish move. And Thanksgiving is such a funny time because literally Thanksgiving of 2017 is when Bitcoin came to a lot of people's attention. And so this is a funny time to think
Spy
about
still
it.
going.
We have probably peaked in October and having
So you
of a bear market.
you X'd out or tweeted out that you thought that you were itching to come on, by the way. Hopefully you're not actually itching, you know what I mean? Go see somebody about that. But that you wanted to come on because of that. So what you're suggesting, what you're saying, not suggesting, you're saying it, is that this idea that because next year is likely going to be a tougher year for Bitcoin, some of the selling that we're seeing is just people getting ahead of that?
Yes. Look, this has happened. It's a 4-year cycle. Now, every cycle is different. What's obvious to everybody is that Bitcoin has gone up less this cycle, and so there's many people think it will go down less in the correction. But that's just sort of one of the fundamentals. Now, there's something else going on within the Bitcoin community that kind of non-crypto people need to know about, and that is ultimately VanEck has been around before Bitcoin. We will walk away from Bitcoin if we think the thesis is fundamentally broken. We don't right now, but you always have to look at the underlying technology. And the Bitcoin community has been asking itself about, is there enough encryption in Bitcoin? Because quantum computing is coming. And then secondly, is there enough privacy in Bitcoin? And so a lot of Bitcoin OGs or maxis have been looking at Zcash.
What's that?
Zcash is a token sort of related to Bitcoin with a lot more privacy. Because the kind of garbage that we got about Bitcoin 4 years ago is it's like used for all bad illicit behavior, but now everyone kind of realizes when you move money around on the Bitcoin blockchain, you can see it. You can see it move from one wallet to another, and a lot of people are looking for more privacy.
So by the way, Jim Cramer kind of alluded to this yesterday morning on Squawk on the Street, where he talked about quantum computing and crypto. So going back to that, is there a thesis then or a school of thought that quantum computing, super duper computing, is going to eliminate Bitcoin in some way? Well, because it renders it less safe.
Right. So Bitcoin relies on encryption, but just everything relies on encryption.
It's like war games at the end of the movie where they're trying to find the code to launch some missiles. Take that to the nth degree, and if quantum computing can do that like that, are you suggesting that eliminates that safety of the ledger?
I'm just saying that's a risk. It's our job at VanEck, right, to explain to people why do you allocate to Bitcoin, right? Going back, there's these big global liquidity reasons. Again, think of gold. That's the one reason an investment committee would look at it. But they have to be informed by the realities of what's going on. It's a technology. I'm just saying it's a risk. And I think it's really the 4-year cycle that's getting priced in right now. And as with everything in investing, you don't want to chase bull markets like some people do. We at VanEck say, do dollar cost averaging into bear markets.
So this is, let me just go a little broader, because some people at home might be watching going, man, I'm interested, but I'm not sure of all the language. And to be, folks, I'm not sure I am. Hey, I want to be very clear, this is complicated stuff. Gold is not complicated. Gold you dig out of the ground, right? I can own it. I can turn it into jewelry. I can buy an ETF if I want. It's heavy. It's pretty. I can store it. It's not a complicated story. I know you've got Bitcoin ETF. Is there, hold on for dear life, is there an element of the Bitcoin story that because we're having to have these conversations alone, people stay away from? Because they don't understand it, right? It's like Warren Buffett talked about the internet stocks 20 years ago.
Absolutely. Right. And what's happening in the wealth community, Brian, is a lot of people are saying, I don't know how to allocate to Bitcoin. We actually do that for clients. So we have model portfolios. All I'm trying to explain right now today is that there's 2 components in our analysis. Again, one, macro global liquidity. Is there a lot of money around in the world? If so, then people will like a hedge to that, like Bitcoin. And then number 2, what's actually happening to the technology? Because it has to work. The Bitcoin network has to work. And we're just trying to simplify.
Well, this kind of stuff might chase us, but this stuff might chase people off if they feel like they don't understand it, or like, you know what, I'm not going to own something that every 4 years goes down 50%.
Look, every asset has unique things about it. If you're going to invest in NVIDIA, you better understand something about the fundamentals of that company. And we just try to do that as best we can, as best we can.
Well, sit tight, because you mentioned NVIDIA. I want to ask you about Oracle in a second. We actually have some breaking news now. Sit tight on on NVIDIA. Christina Wallace joining us with this newest alert.
Yeah, there are reports coming from Bloomberg that people close to the president, as well as President Trump, were discussing possibly giving the green light to NVIDIA to sell H200 chips to China. Recall, and this is where it gets a little confusing, that NVIDIA originally had H20 chips for China. These are China-specific chips. This latest story is saying that Trump is considering NVIDIA selling even more advanced chips that have more memory, but are slightly older, from 2023. NVIDIA has just responded with a statement saying, quote, the regulatory landscape does not allow us to offer a competitive data center GPU in China, leaving that massive market to our rapidly growing foreign competitors. Recall that Jensen Huang in the past has said that this market is worth about $50 billion. And this past quarter, the earnings report was very recently, we learned that they only sold about $50 million worth of H20 chips. These are the chips that did have the green light that were geared specifically for China. So now this report is talking about an even more advanced chip that is not specific for China. It's called the H200. It was made in 2023, so it is slightly older. If I were to just speak on behalf of sources and stuff, the goal for NVIDIA is not to sell older chips. They want to get their last 12 iterations into China. So this is almost like an olive branch from President Trump saying, hey, I'll let you sell an older but more advanced chip to China. We'll see if that actually happens, though.
You ever go to the grocery store, Christina, and like there's bread, and the bread expires tomorrow, and it's 50% off because tomorrow it becomes stale? This feels like that. The alternate headline would be, White House considers letting NVIDIA dump old inventory on China. Is that fair?
That is very fair. That is very fair.
This is what I do. This is why I'm me. Christina Porcellos with the breaking news on the H200. We get to the Blackwell chip. That's going to be the news. Christina, thank you very much. Appreciate that. Let's go back because Jan Van Eck, the SMH ETF, I don't know if you've heard about this ETF, semiconductors. Oh, it's a Van Eck. It's actually owned by you guys. You put it together. What's your take? I was being a little tongue-in-cheek there because I know Christina rolls with it on the NVIDIA news. 2-year-old chips. Is that news?
No, I think it's not news. And I think Jensen Huang is trying to sell chips into China. I don't think China wants them, right? So I think there's been this tension. He's been very clear on his earnings calls that their projected earnings do not include China in those numbers, and I think that's a wise. But we underwrite NVIDIA. We do not add potential China demand in there. And I think most of that optionality is out of the stock. And I don't think the stock's going to react to it.
Yeah, and the SMH headed for its worst week since April. But you got to kind of and I wish Christina was here so she could play off this a little bit more. Maybe she's still there. But these chips, because I know 2 years in like the real world is not a long time. But for semiconductors, it might as well be the Model T.
The compute cycle, he is dropping compute costs 90% a year. So he's joked that he would be happy to give away.
That's what I said.
Other customers' chips, and he would.
Christina is still there. Christina, and I know you roll with the snark, but like 2 years, it's like a dog. 7 years is 1 year. 2 years in the semiconductor, particularly the GPU cycle for NVIDIA, I got to imagine is a technological fundamental difference of eons.
Yeah, and especially when you have Jensen, the CEO, saying that they're coming out with an annual cadence at least for their chips. But to the conversation, you were just speaking about China. 100% spot on. China doesn't want these older chips in their country. They want companies to use domestic, local chip providers. There's 3 issues that NVIDIA still has to overcome. There's a Mellanox antitrust case. So this is thing when Mellanox was acquired by NVIDIA back in 2020, but China, for some reason now, has decided to go after NVIDIA for it. The second issue is concerns about backdoor options on chips, meaning that they can be opened somehow through software or anything like that. And then the third issue is more of an environmental issue in terms of energy use on some of these chips. Perhaps this is called posturing from China, but these are 3 issues that NVIDIA has to deal with directly with China. With maybe a few weeks ago, recall President Trump was speaking to reporters on his aircraft, and he even said this is between Jensen and China. They have to deal with it. So perhaps this is like you said, the president saying, hey, we're allowing them to do this, but really it's not going to move the needle that much because China needs to say yes first, and then number two, they got to say yes to more advanced chips. I wonder. A lot of backlash.
You ever see the great movie Silence of the Lambs? There's a scene where they're trying to make a deal with Hannibal Lecter, and they say, we're going to send you to Plum Island, and you get a view of the birds, and he's like, oh, Plum Island, biological weapons thing. And I wonder if China's sitting back going, you're going to offer us 2-year-old NVIDIA chips. To your point, that's not what they want. They don't want to go to Plum Island.
No, of course, everybody wants the latest and greatest, but then you have the argument that from CoreWeave or NVIDIA on their call is that these older chips are still valuable. They're still able to rent them out. They're still able to sell a lot of them because there's such demand across the board. So maybe that's one argument for still being able to sell the H200 into China. But it's not a strong enough argument given how many more advanced chips there are.
Final take, Jan Van Eck, Mr. Semiconductor.
I don't think the story is NVIDIA in China. The story of the week is a rotation amongst the Mag 7 or the Mag 8 with Google's Gemini coming out with a great new model and putting some heat and pressure on OpenAI. And we've seen that Meta hasn't had a great year. So it's this leapfrogging cycle. But
I don't want to give too much away because Alphabet may or may not be our stock of the week at the end of the show. I'm winking. There's something in my eye. But everybody said that AI was going to kill Google search. Apparently Google search has killed that meme. Like, that's not true. Google's the hottest stock in the Mag 7 because Gemini is rocking everywhere. What did people get wrong about Alphabet?
This white hot competition in the AI world right now to get, because it's sticky and it's a scale business. So you just want as much business right now. Market share in that world is cheap. And that's why there's going to be a leapfrogging in this technology.
Like I said, may or may not be our stock of the week. We still have time to change it in 35 or 45 minutes. So Jan Van Eck, great stuff. Thanks for rolling with it. Christina Partsinevelos, always the best, coming on with great news. Thank you very much. All right, by the way, bond markets, Treasury yields slipping today after New York Federal Reserve President John Williams renewed investor hopes that the Fed would again cut in December. Rick Santelli with the bond report. Rick, it appears that John Williams may have saved Christmas.
Well, I'm not sure about that. It certainly seems to me like there's a lot of other moving parts here, but it definitely moved the probabilities on the E's, and the probabilities have gone from basically 30% up into the close to 70, and it's backed off, but right under 70%. But I think the real story is how the interest rate complex is shadow boxing the equity side, and mostly when it goes higher. Now, if you look at a 12-hour S&P and 2-year yields, you can see what I mean. When the equity markets seem to go down, they treasuries follow, but not closely. But boy, when it goes the other way, it's right on it. You can really see that on the week-to-date chart. Now, if we look at a 1 month of 10s, and do keep in mind, 2s are like near unchanged on the day right now, hovering right around that 353 where they closed yesterday. They're down about 8 basis points on the week, but 10s, they would have a close under 407. Will be breaking out of the November closing range. That's the low, but it's hovering a little higher now following stocks. And finally, the dollar index. Nobody's talking about this enough. It's virtually at a 6-month high close. Should it close where it's trading now? And the Japanese are talking about potentially intervening in the FX market. Pay close attention to that. Brian, back to you.
Nobody can accuse you of not talking about it. You brought up every day this week. You brought up Japan in the right way, and you've been spot on. Rick Santelli, thank you very much. Right after the break, consumer sentiment down to near record lows. But what does that mean for retailers with the holidays, I'm told, right around the corner? Seems like kind of an important time for retailers. How are they doing? Talk about it coming up.
Only less than 10 seconds. WULX. MUU. DBLT. DTN may resume in less than a minute. DBLT. PTN may res in 10 seconds.
High tip alert plus 800.
Okay, here goes the S&P. S&P taking off. S&P going.
We are just 1 week away from one of the biggest shopping days of the year, but Target stock is not bringing up the wins. Despite stabilizing traffic and a cleaner inventory picture, shares have consistently disappointed investors, lagging peers, and questions kind of swirling around Target's recovery. Let's bring Melissa Repko here to talk more about it. I don't want to pick necessarily on Target, but if you're going to take a national big chain and look at the stock price decline, the market is telling the story for it. I know you've written about it. What's fundamentally the issue with Target?
When you look at Target, a lot of it boils down to the fundamentals. If you talk to shoppers and you talk to investors who go to the stores, they see stores are not in as good of shape. They're sloppier than they used to be. Things are out of stock. Checkout lines are long. A lot of those things that cause shoppers to go elsewhere.
Well, I mean,
Okay, we're above these levels here.
each store has a general
We could run.
general managers and
Could run a lot higher.
anytime there's kind of a breakdown in the process, it comes down to leadership. I know that the CEO, Brian Cornell, is swapping out, right? What do we know about the new CEO?
So I actually went to Minneapolis and I met with him recently. And incoming CEO
6,700 looks like it's doable now.
the former CFO, current COO, and he's laid out 3 priorities. One is strengthening their style and design. Second one is cleaning up their stores and their customer experience. And the third is adding technology, AI, of course, but other things as well to speed the business along, make it more efficient.
Yeah, what role is AI going to play in Target or other retailers? What are they going to do with it?
This week, Target announced that it's launching a new feature with OpenAI's ChatGPT where customers can engage with this app and search through products, ultimately getting personalized recommendations. May come in handy for people looking for gifts this season. But that's really what everyone is looking towards. Walmart also is working with ChatGPT, and they're trying to kind of lay the groundwork. It's still very early days. I think this holiday season it's more experimental. But again, it's a bit of an arms race because they know that investors want to hear they're moving in this space, and they also want to be where the customers are going, and they're shopping differently.
But if you look at the difference between Walmart and Target, I know they would disagree. People in Bentonville and Minneapolis cover your ears. But they probably sell 95% of the same stuff, right? Bounty paper towels, whatever it might be. Man, the stocks have gone in really different directions. What is Walmart doing right?
You know, Walmart in a lot of ways is replicating the Target playbook. What is different about the companies is that Target was known for a lot of private label stuff, things that were kind of the dupes in some cases, or its version of styles for less. So having apparel, having toys, having a lot of different things that you could only find at Target, Walmart has done that too. They've launched a lot more fashion-forward brands. They're expanding them
Their
to
own brands.
their own brands that are more trend-forward, but trends for less.
And it works. Like they've got the dog food. I think it's called Old Sam.
Yes.
That's a Walmart brand.
Exactly, and they're doing more of that. They launched a new food brand, and a lot of those
Not the dog food brand.
Yeah.
They're not related.
people.
Okay, okay. Just making sure you don't know.
And they're more chef-inspired things, frozen empanadas, things that are more, TikTok friendly. People might talk about like wings, for example. They have frozen wings that are part of this new brand. And they get people talking, they get people more excited, and frankly, their labels look a lot like what might be in Target.
We're going to leave it there, but I think the headline of this segment should have been Frozen Empanada Discussion Powering Walmart. You never know.
Hey,
if Old Sam, just don't combine the two. If it works, it works. Melissa Repko, great stuff. Thank you very much.
Thank you.
All right. The call of Blue Owl. Guess what? There's a stock. It's up today, but it's had a really rough month. We'll talk about why you should be more focused on something called private credit. Make sense of it. Promise. Next.
RGTU.
FOXX.
Looks like we're going to go.
RGTX. SOXL.
FOXX.
CWAN. NVDL. NVDX. SOXL.
I hear the semi ETFs being bought, SMH and SOXL.
STUB. RGTI. RGTU. STUB.
Alternative asset management, private equity, venture capital, etc. Those stocks, the ones that trade publicly, they've been hit hard over the last couple of months. Names we don't talk about a lot, but probably should. Blackstone, KKR, Ares. They're down double digits going back to late August. And look at shares of a firm called Blue Owl. It's down more than 25% in the past 2 months. Despite the rather, shall we say, unique name, Blue Owl is a massive finance firm. It's also been the one that's been hit hardest on concerns about what they call private credit and credit quality. Your next guest believes there are a number of significant risks currently facing that market. She should know part of what she does for a living and has for over 20 years. We're joined now by Maria Boyazny, founder and CEO of MB Global Partners, somebody I've known for more than 2 decades. So it's great. Finally, after 20 years, I got you on TV.
I'm trying, Brian.
Well, thank you for coming on. So, in a layman's term, what's been going on in the private credit market?
STUB.
Interesting that you ask. Private credit has really been an expanding asset class since the financial crisis. With very low interest rates at the time, negative in most of the world. Free money. Institutions were looking for yield. Managers smartly responded and created a whole massive asset class that has us here talking about it.
Made a lot of people really rich too, by the way.
And talking about it on Friday afternoon, absolutely. And hopefully we'll make more people rich. And it refers to non-bank lending, right? All the different vehicles that address various dislocations in the market and provide a whole different market of liquidity for companies. However, all that lending that has grown over the years, naturally they've been positives, that it's expanded access to many more businesses, including middle market and lower middle market, that historically have been underbanked by banks. It expanded access, but it's created a whole list of risks.
So what's something that's happened? And Blue Owl, a company we never talked about a month ago, down 25%. That's a huge company. What's happened that's causing this rattling of the market?
What's been going on is that we've been levering, right? So the private credit space has grown from virtually non-existent to between $1.5 to $1.8 trillion now, right? So naturally, you have the good assets that got funded and maybe not so good assets that got funded. This market provides little liquidity typically, although now you have more and more public vehicles, but the overwhelming majority is privately traded. As a result, you don't have a lot of transparency in pricing. And when there are credit events that everybody reads about and you talk about,
If I'm talking about it, it's already happened, bro.
you talk about it ahead of time, always. But when people read about it and naturally start questioning some of these businesses, have they taken on too much leverage? And that is being reflected in current.
When I hear those words, though, I think to myself, there's got to be opportunity somewhere, because sometimes when things get too hot, they get dumped, and that's kind of where you find the value, right? In that sort of mix. Is there a lot of opportunity that we're not looking at right now in the right place?
I think absolutely. So I think the issue has been that a lot of leverage went on at kind of the senior level. But what historically senior has been a smaller part of the capital structure has now grown and grown to overtake the capital structure, right? When assets were, say, levered 3 or 4 times their cash flow, now they're levered 6 times, 7 times, etc. So
it sounds dangerous.
That is dangerous, and you have to avoid those assets. But the big opportunity for all of us is to help recapitalize those assets. Those assets need more capital. So you could potentially provide interesting, flexible capital solutions to those companies that help them deliver and readjust their capital structure to what's actually happening in the underlying business. They've gotten ahead of themselves, putting on a bit too much leverage.
We'll leave it there, but I think I'll say it so you don't have to. The short term, it sounds like they got a little bit greedy, and some of that stuff isn't paying off. But you know what I love about the segment, Maria? You made me smarter. Thank you.
Love watching you. Thank you.
I feel like I learned something, and that's a good day. A day you can learn something. The long overdue September jobs report showing softness in the labor market, but are we getting another read of a more current type? Yes, we are, and that's going to be with the CEO of ASGN, who's got a unique view on the economy, both the public and government sector, and it's next. Stick around.
All right. All right, S&P coming back down now.
STUB. DBLT. DBLT.
Oh.
DBLT.
All righty. Hope everyone's having a good day. It's only 2:35. Feels like 3:35, doesn't it? I thought it was after 3 o'clock already. Brian Sullivan usually comes on at 2. And then Judge, or hopefully it's Frank that comes on at 3 o'clock. So
Let's get now some more unique insight into a real critical part of the American economy through both the private and governmental sector lenses. ASGN is embedding its
can we go some more?
digital transformation of Fortune 1000 companies, also transitioning to a new parent company called Everforth. With us now is the CEO, Ted Hansen. Ted, good to have you on the set here again. I know you're based outside of Washington, D.C. You got kind of unique view on how the economy is doing. What's the ASGN Ted Hansen view of where we are right now?
So first, Brian, thanks for having me. I'm excited to be here today and talk about a range of things. Our view of what's going on right now, it's been a very interesting year for our customers. We work with over 70% of the Fortune.
Okay, we're up above these levels. There's not a whole lot overhead to slow everything down.
Tariffs and concerns about the economy, trying to manage expenses and all the rest of it.
Wow, this could run. You see, the stability is at 45%. That's telling you could see a fast move here.
From that, look, I think this administration, and hopefully together with the rest of the politicians, are going to move from we were in shutdown, now in a continuing resolution through the end of January, to a new budget for the fiscal year. With that comes a double-digit increase in appropriation from the Big Beautiful Bill, which is really pointed at advanced technologies in the Defense Department, Intel, and national security areas. In our government business, the government part of our business, over 70% of our work for the government is in those areas, serving cybersecurity, AI, data, and other advanced technologies. So there's a real possibility here that in the first half of the year that we get past this to a new budget, much more productive marketplace in the government. What if we don't tell? Well, if we don't, we're going to kind of struggle through some more continuing resolutions. And that doesn't mean everything stops. It just means the government can't pursue fully all the things, all the initiatives that they wanted to do related to the preparation. And
you've got a new product called AI Factory, and it's basically designed to, help companies get from A to Z and do what they need to do. Is that going to kill jobs, or is that going to help jobs, or is that just going to shift jobs? Everybody's trying to figure it out right now, Ted.
Yeah.
What's AI going to do to my job? Not me, maybe me. Who knows? Right? You understand my point.
Right. Our view is AI is going to enhance productivity and rise up the knowledge worker to do higher value things. So what customers are struggling with right now is the complexity of their own organization. For decades, they've been putting in big systems, oriented by department, siloed, data spread all over the place. And now they have AI opportunities, but trying to get to that based on the technical depth that exists in their organization is
S&P looks like it wants to do some more damage. Did a lot of damage to the bulls yesterday. Unless you were short or took those puts from the highs at 10 o'clock, that reversal. How do we see that reversal anyway? Were you paying attention? Were you paying attention to what we talked about? How did we see what did we see to give us a reason to go short or to buy puts yesterday? Aside from the gap up and the inability to make new highs, look at what MACD did. MACD rolled over. We bought the 6,700 puts. Those went from $5.20 to $155. Crazy day. Probably won't happen to us again in the next 10 years. But if it does, we'll be sure to let you know. So we had stops above this level. And what happened? MACD went up again. MACD started turning higher. So that was a nice long setup. That agreed with the rising hedge flows on the S&P. Now we're above these strikes right here, and there's nothing overhead to slow us down.
Lawyers for former Brazilian President Jair Bolsonaro are asking the country's Supreme Court to allow him to serve his sentence under house arrest. They say he has health problems.
Okay, S&P rolling over now. S&P rolling over a bit.
And English Premier League teams agreed today to introduce spending caps next season. Plus, spending will be restricted to 85% of their soccer revenue and net profit or loss on player sales. Teams will also get an allowance of an extra 30%, but once that runs out, penalties. The league says new rules will make the league more competitive. Ryan, you need an accounting degree to cover that.
You really do with the NIL money in college football and this with soccer, the other football, it's amazing. Bertha Coops, thank you very much. Speaking of money in sports, guess what?
66.90. That's where we stopped the other day. 66.90. What was that, yesterday? 66.90, and we rolled over. All right, too much to hope for. Okay, what's NASDAQ on NVIDIA doing? NVIDIA hanging out at the highs. Okay. All righty. All right, PTN, the MACD is trying to turn down. So I would just take that off. MACD is turning. Okay. Puts are starting to gain a little bid right here. Apple stalling at the highs. We mentioned the 172.50s early this morning. Hopefully you took them. I'd be taking some profits off. Those were Friday, so those expired today, unless you want to get assigned.
NFL and NBA franchise prices keep rocketing higher. Another sport is quietly catching the eyes of savvy investors. So what is it? Well, let's answer the tease that we had before the break. Here's a clip from our game plan conference.
Other than football and basketball, name one sport that you feel at the collegiate level will be the next breakout sport for revenue generation.
Volleyball. I'd say volleyball and softball were the two on my list.
I'd say volleyball too.
Yes, women's volleyball. It is booming. Record ratings, a new pro league. Investors are taking notice. You're putting capital, aka money, into one of the fastest growing sports in the country. Joining us now with one of the volleyball rallies, the man that was on stage, and it felt a little like Jeopardy or like
S&P still pulling back.
Which sport? But they did not answer in the form of a question. They all get what is fine. But this was
Okay, MACD's rolling over.
big names there. Believe it or not, Brian, there are 3 different pro leagues now that have all popped up in recent years for women's volleyball. Well, they need to get one. So, well, maybe that's where we're headed eventually. The one I focused on in my newsletter, which came out yesterday, that you can sign up for, cnbc.com/sport newsletter, is League One, cheap plug. League One volleyball. So this started last year, and its new season is coming out next year. They're already attracting some big name investors to their team. The McNair family owns the team now. Alexis Ohanian is going to own the LA team. David Blitzer, who's part of the larger conglomerate that owns the Sixers, other teams, already is a part of an ownership
Candace
group of
Parker,
the team.
Lindsey Vaughn, Kevin Durant.
These are investors in the league
I'm just
itself.
making up
Fine,
names.
so there are two different things. So there's an interesting story where the league started last year as an owned and operated league. So the league came out and said, we own all the teams. Now we're going to find bidders for the individual teams. They started with 6. They're already going to add 2 that start in 2027. One in LA, like I mentioned, Alexis Ohanian leading up that group. One in Minnesota. They still haven't announced who the ownership group of the Minnesota team's going to be in. So why is everyone interested in this? Well,
It's exciting. It's a great sport.
they turn to the collegiate level, and y'all, the collegiate volleyball has been a ratings winner and an attendance winner for several years now, and investors are seeing volleyball as maybe the next version of the WNBA, a sport that blew up in college that's now seeping into the pro level.
So I got a text from my friend here says Wisconsin women's volleyball program legit. You know what's cool about volleyball? People are tall. I mean, when I say tall, I'm 6'4". I would have been the shortest person on the women's volleyball team at the University of Wisconsin.
Yeah.
These are all-star, superstar athletes.
If you go to a game, the environment tends to be electric, similar to women's basketball too at the collegiate level. A lot of similarities there, but this is a lot cheaper to get into. So if you're an investor and you want to invest in sports, right now it is exactly. So that's why the money is.
All right, another little bounce.
They think maybe this could be, as you heard in that clip.
All right, I'm done with S&P. We got an hour and 12 minutes to go. Hour and 12 to go, but I don't feel like doing anything else with this. It's been a really good day. Up about 500% on those. IWM did really good. Disney, nice bounce on Disney. Going to give us a relief rally, Disney.
will get the movies and HBO Max, the streaming service plus HBO. The rest of the company, which is all the cable networks, CNN, TBS, TNT, and the digital assets, Bleacher Report, and others, that they're not interested in. Only Paramount wants to buy those too. So all of those assets, if Warner Brothers Discovery decides one bidder, is not two, three bidders, there's one. Well, there's one bidder for the whole company. I'm selling you a two-story house. Yeah. I want the first floor. But here's the deal. I don't want the second floor. Let's say you own that house and you already said, I'm going to split this house into two floors. The chainsaw. The first floor and the second floor, and they will both trade publicly as public equity.
Open Door, just watching this one. Open Door. Notice the MACD down below. If this does break out, watch the volume. If this starts to go right here, oops. Okay, that, and we're looking for this to turn up. Watch for a break above this level. Open Door.
Merge and then buy a company called Time Warner. Then you got the great irony here. This is the result of that deal. This is the 25 years ago. David Ellison is watching this broadcast. David Ellison wasn't alive 25 years ago. AT&T bought Time Warner, was a disaster. AOL bought Time Warner, was a disaster. Warner Media and Discovery came together. That has not been a success in the publicly traded markets. But this time it will work when Paramount buys Warner Brothers Discovery. Do I sense? I mean, just a touch of cynicism. Look, like a drizzle of snide. I'm here to be proven wrong, as always. Well, we're gonna wait and see. What do those bids do? The bids are in, and an announced winner and an announced direction around Christmas. Fantastic. I feel like I gotta set you up. First round bids are in. There will be another round of final round. There you go. Alex Sherman, appreciate it. Thank you very much.
All right.
Heck of a rebound here. We got to show you there. Look at that. All the markets are up, and pay attention to the very bottom. The Russell 2000, the small cap stocks, the Russell's up 3.2%. That, my friends, one of the biggest gains of the year. Heck, it may be the biggest gain of the year. I'll spend the commercial break looking through the data, and after the break, we got our stock of the week. Stick around.
You looking at GRAL, Karen? GRAL. Yeah, it does. Grail. Yeah, I like it a lot. Let's see. MACD. RSI bullish. GRAL, watch it.
Low tick alert -800.
All right. MACD looks really good. Grail looks good. Okay. Let me just annotate this one. Be good for some credit spreads, I would think. Looks good. 103.
ONDS. ONDS.
MNDR. MNDR.
All right, so here's where we stand in the stock market. Unbelievable reversal from the weakness the last couple of days. Yesterday, the story was a reversal from top to bottom. Today, it's a pop. The Dow is up more than 1%. The NASDAQ up 1.5%. But the Russell, small cap stocks, up more than 3%. Unfortunately, crypto not participating in that turn. Bitcoin and Ether, they're both down. If I took the opposite side or the upside, I would say this. Bitcoin is basically at 80,000 earlier today. It's at 84,146, more than $4,000 effectively off its low. Still down, still been a rough couple of weeks. In fact, off about $40,000 from its highs of mid-October. All right, your stock of the week, we kind of teased it earlier. This is Alphabet. Why is it our stock of the week? Number one, it's the only Mag 7 name that is headed for a winning week. But overall, Alphabet up 9% this week and kind of killing the idea that AI will kill Google search. All right, let's talk more about semiconductors. Christina Partsinevelos, strong finish to the show.
Thank you. In regards to Google, the reason you're seeing strength is twofold. One, it's the strength of the TPUs, their own individual chips in their Gemini 3 model, really showing that they can do this on their own without possibly the help of NVIDIA. And the second maybe is more inside baseball, the fact that there was an internal leak from OpenAI talking about the fact that Google is a real threat to OpenAI and the fact that Google has more access to a lot of infrastructure and chips, etc. But overall, it's a nice reversal that we're seeing at Google. We wanted to talk chips, though. NVIDIA, we talked about it earlier in the show, the fact that President Trump, and I can confirm that is true, was considering sending more advanced chips to China, or allowing NVIDIA to send more advanced chips to China, and that's helping the sector as well.
There you go. Christina, I know we'll see more of you at the 3 o'clock hour. I'll see everybody at 4 p.m. The bell starts right now.
And welcome to Closing Bell. I'm Mike Santoli in for Scott Wapner. This make or break hour begins with a relief rally to end a choppy week as the bears take a breather and investors attempt to rotate away from danger and some AI plays and crypto and toward more stable stocks. A less hawkish tone from New York Fed President John Williams taking some of the pressure off the tape.
That was this morning, alongside some dip buying in consumer plays and a continued bid in healthcare. So take a look at the key indexes right now. The S&P 500 up about 1.4%, recapturing just about half of that steep intraday drop from yesterday, while remaining down more than 1% for the week. The Nasdaq is pretty much keeping pace there. It's up 1.5% as well, although it is farther from its high than the S&P is. The small cap Russell 2000, as well as the equal weighted S&P 500, both up more than 2%. In fact, the Russell up more than 3% on the day, which takes us to our talk of the tape. Has the market had enough of a flush this month to reset positioning into the home stretch of 2025? And is today's rotation worth playing or fading?
Looks like Open wants to go.
Vantagerock co-founder and CIO, and it's good to see you. Great to be here. So we had this sort of 5-ish% pullback in the S&P. A lot of the more aggressive speculative parts of this market really got purged. Market making a bid that was enough right here. How do you see it?
So I think it depends on the stocks. So I think in those more speculative stocks, the market was taking out some froth that maybe should have never been there in the first place. Along the way, it did also take money out of cyclicals that if the Fed is a bit more lenient, if there's any weakening, actually could set up for a really nice 2026.
Many things going on at once, as there usually is when the market pulls back like this. This rethink we're having of the AI trade, I mean, it's interesting because you go back a month and a half and all the talk was it's a runaway AI bubble and all that talk got people worried about what that might mean. And now you have a lot of stocks down a ton and people are trying to figure out winners and losers. How do you think about that?
Yeah, so I think that what's different now is that there is visibility to potentially there being winners and losers, whereas before it was considered to be all winners. And, I was at a dinner last night and we were talking about like the AI bubble, is the AI bubble bursting? But if you actually look at the stocks under the surface, it's maybe the open AI bubble that's bursting, right? Google is near all-time highs, and the whole Google ecosystem is actually held up much better. So I think the market is making a call that maybe, one player, multiple players might do better than others and rewarding them accordingly.
What does that mean? I don't know if this is an area you play. I mean, we just heard about maybe the administration is going to allow NVIDIA to sell its newest generation chips to China. But the whole AI food chain kind of got hit yesterday, despite a pretty, what seemed reassuring quarter from NVIDIA.
Yes, I think here what we have is like the law of large numbers, right? It had phenomenal results. But, Jensen Huang had already put out the $500 billion of revenue by the end of next year. He said, there's upside to these numbers. But these numbers are so astronomical that it's really hard to have confidence that that's going to continue forever, right? So 2026 looks to be absolutely in the bag. 2027, maybe a bit more of a question mark. Even if the demand is there, is the supply chain actually able to catch up? And I think there are some question marks about that. And then also, next year, we're going to, at some point, there might be more questions about the significant cash burn that you're seeing by some players like OpenAI. And so if investors in those companies are questioning the free cash flow generation, 6 months from now, they might not be willing to fund the next round of capital. And so you might be limited to more of those very cash generative companies buying chips, which might mean demand doesn't accelerate at the same rate moving forward.
So do you think that the market in this last period is roughly getting it right as it tries to sort of navigate those issues?
For now, I think it's moving in the right direction. Yeah. I think the one thing about AI that's clear is that the perception of winners can change very quickly, right? So right now we have a perception of Google being a potential real leader with the Gemini 3.0 model and them putting out a price that suggests they have real pricing power and technological superiority. But should you have, for example, OpenAI come along and present, an advertising model competitor to Google, like people's perception might change. But for now, I think the market is reacting to the realities.
Uh-oh. I lost the feed there.
Does that become an upside catalyst for the markets? Because there's been a lot of talk that as the Fed starts to cut rates, obviously that's supportive of lower rates, but it's also an indicator that maybe economic conditions were worse than we thought.
Yeah, so I would say, the market and the economy, they're of course related, but they're more distant cousins versus siblings. So how the economy goes, yes, that is very important for the market, but the market largely pre-trades that. So I think once we do see more of that Fed action, then the market is going to say, okay, let's start trading in a bit more of an early cycle way. We actually recently upgraded small caps overweight versus large caps. We do think that there is going to be more risk appetite as we get into the first part of next year. But I think it's really, you're going to see some choppiness until we get that December decision.
Well, talk us through that small cap overweight versus large caps, because that seems pretty bold. Not just that you're going to see small caps maybe perk up a little bit, but that they're actually going to outperform large caps, which includes tech. How much of that comes down to rates? And as such, how much is at risk if the Fed isn't able to deliver those 3 cuts that you're expecting?
So I think a lot of it is due to earnings revisions. So we've seen small caps really struggle over the past couple of years. The market and investors have really been focused on the highest quality parts of the market. It's been all about AI. It's been all about large cap stocks. That's really a quality trade. But if we look under the surface and think about how earnings revisions breadth is performing, and that's how analysts are revising estimates up versus down, small cap earnings revisions breadth is actually
All right.
I think that small caps under the surface are starting to think about this transition from a rolling recession into a rolling recovery.
So an up arrow for small caps. I want to talk about the other leg of that thesis, which is what happens with large caps. Do they
Markets are just, it looks like people just took the rest of the day off.
How does this happen? Is this a bad news story for big techs and the big names that make up the large cap indexes, or is this really more about small caps?
Yeah, this is absolutely not a large caps cashing down. This is more of a small caps cashing up. Their performance has been so poor over the past couple of years that I think there is a lot of room to close that gap. We recently, though, came out with our house forecast for the S&P 500. We think we're going to end next year around 7,800. So quite a bit of upside still for large caps ahead, and that is a pretty out of consensus view. But it's more of a small caps cashing up versus large caps cashing down.
I do want to go back just to broader economic conditions, particularly given the holidays and all the expectations for consumer spending. How much of a factor will that be in the market's reaction? So, I mean, not just the aggregate level, but obviously when you adjust that for inflation, are we going to get a real sense here of just exactly what that spending condition?
Yeah, so I do think we're setting up for a softer period into the holiday season, but I think the market understands this really well. So you could see, if we have results that are better than feared, the market react quite positively.
All right, welcome back to CNBC, everybody. As you probably saw, we had a couple of just minor technical issues there. Not a big deal. You know what's not having a technical issue? The stock market. Yesterday, obviously, we popped at the top, and then we saw the market.
I like Brian Sullivan. He reminds me of somebody I'd have a good time with.
Overall, we are seeing markets today in rally mode across the board. Nasdaq's up 1.5%. The Dow is up 1.4%. And really, maybe the most interesting part of the stock market are the Cindy Brady's, right? Or the Bobby Brady's. That is the small cap stocks. You look at the SML, you look at the Russell 2000, up more than 3%. These are some of the largest gains that we have seen for small cap stocks. And maybe the small cap stocks are doing so well because of some changes in the way we think about interest rates. And on that topic, we got some very interesting comments today from Fed Governor John Williams. Let's send it now over to CNBC senior economics correspondent Steve Leishman, because I feel like these Williams comments, Steve, they really turned a lot of thinking around.
It sure did, Brian. It's a really good observation. I'm calling this on second thought. A week's worth of hawkish speech from Fed officials gets ripped up, torn up, thrown out, and today by a single line in a speech by the influential New York Fed president. Williams making just one comment about Fed policy in a speech in Chile saying, quote, I still see room for a further adjustment in the near term is what I'm emphasizing, to the target range for the federal funds rate to move the stance of policy closer to the range of neutral. Near term could mean January, but it could also mean December, which sent Fed fund futures soaring to 60% probability of a rate cut from 33% before Williams spoke. And of course, likely played something of a role in this market rally, which looked to be more concerned about a quarter point cut than it appeared to be, at least earlier this week. Krishna Guha, I suggest Williams' comments would not have come without a sign-off of, Krishna says, from Fed Chair Jay Powell. We don't know his views specifically on a December cut. Guha called Williams' remarks a leadership steer. And now the question is how many voters, quote, follow the leader. As you know, Brian, as a musician, I'm skilled in what to do with technical difficulties, and the answer is you sing louder.
Well, you say louder, you say look over here, but let's go back to your band reference before I send it back to Mike Santoli, who is there. And because you've got the lead singer, you got the lead guitarist, you got the bass players kind of in the back. I would assume because John Williams is moving the market to this effect that he is seen as maybe not lead vocalist. That's Jerome Powell, but he's got to be up there because this is one of 9 whatever voting members. Why is John Williams moving the market with those comments?
DGXX.
It's a great question, John, Brian, and the answer is this. Sometimes the chair will send out a vice chair, or in this case, the president of the New York Fed. We don't know this to be true, but this is something that's happened in the past. Call it the intellectual pulling guard for the chair, where what his job is to do is kind of clear the defense out of the way, set things right, and be in front of the chair carrying the ball, and kind of create the opportunity for the Fed chair to come in and redirect the markets. We haven't heard from Powell. I don't know if we hear from Powell before the next meeting, but I think that's what's happening here. It could be that John Williams is speaking on his own for himself, and that others don't follow. And I don't know if we have that board available, Brian, but we've had a lot of hawkish bets. We've been on your show how many times this week talking about it, watching those probabilities fall. And the reason is because John Williams is part of the leadership of the Fed. And the thinking among many is that he's really speaking, or at least clearing the way for the Fed chair to try to implement that December cut.
Well, I love it. And Steve Leishman, I feel like you're the Grateful Dead in 1977 because every other day you're somewhere else. The epic tour of the Federal Reserve, rockin' Cleveland, rockin' Boston. Steve Leishman, thank you very much. All right. Mike Santoli has replugged in the wire he apparently tripped over. Right. We're going to send it back to him at the NYSE.
You will be able to buy a cassette of all this in the parking lot someday, Brian. Thank you very much. Appreciate it. Meantime, Vantage Rocks, Avery Sheffield, still with me. Let's bring in Newburger Berman's Shannon Secoshia and Hightower Stephanie Link as well, both of them CNBC contributors, of course. So let's just, Avery, just quickly react to this idea that the market was tensed up about the idea of a Fed mistake if they go on hold in December, maybe some softening up of the labor market. Is this enough to reassure things?
I think that comments of Williams today do suggest that if the market has too much of a sell-off, they'll probably come to the rescue as long as the economic data is softening. So that does suggest some support, especially to these cyclical names.
Yeah. And Shannon, I mean, just more generally, the market obviously dealing with these compound issues, a bit of a growth stock, overshoot to the upside, getting unwound, and now the market figuring out what happened to the fourth quarter rally. So how are you thinking about that?
Well, we're getting a lot of questions from clients, Mike, about what is driving this.
Yeah.
And I think that the challenge is now is that there are just a confluence of factors, unlike this year when we had a confluence of sort of positive tailwinds. You're just getting a lot of wind in the face right now. If we look at positioning, there's always a drive in this fourth quarter for portfolio managers to really look to buy some of these winners. But at these valuations, it doesn't feel as comfortable. We're also going into 2026, and many of us, including Newburger, we're looking at 2026 as an opportunity to Avery's comments around cyclicals, small and mid-cap names, looking to find those AI adopters rather than AI enablers. And so you're looking at sectors much like healthcare, financials, industrials, wanting to position your portfolio for 2026. And so that has to come from somewhere. We talk a lot about cash on the sidelines. If you're an equity portfolio manager, though, you're probably pretty close to fully invested. And so you're trimming off some of those names, particularly if they feel like they've run a little bit and gotten a little bit long in the tooth this quarter. I think the rate story will help. I think that getting some more clarity around how many cuts we get and where that neutral rate ends will certainly benefit those cyclicals. But I think it's just a number of things at this juncture.
Sure. And Steph, we come into this period after a very good earnings season, right? Where essentially that piece of the puzzle fit in pretty well. As a matter of fact, we now roll forward our 12-month estimate of S&P 500 earnings, and with the stocks pulling back, magically we're down under 22 times earnings again on a forward basis. So I guess in a sense you've de-risked the market a little bit, but within the market, where have opportunities surfaced? I'm looking at equal-weighted industrials up 2.4% today after they looked pretty tenuous yesterday.
Yeah, I mean, first and foremost, you mentioned earnings. Earnings are up about 12%, and they're probably going to do that this year and maybe even next year as well. And a lot of that has to do with, though, Mike, that it's driven by a stronger economy. The Atlanta Fed tracker today came out at 4.2% for the third quarter in GDP. And I know that a lot of it is AI related, probably 70% or so is AI related, but it's throughout a number of different industry sectors, companies that are driving this. That's number one. And that's one of the big reasons I don't think you're seeing a bubble in AI. But number two, the consumer is hanging in. The consumer has been resilient. Yes, they're being choosy on where they spend and what they spend, but they are spending if you have the right products and the right services. When you add all that up, I don't even think we're kind of obsessing about the Fed and cuts in December. I don't even think the Fed needs to cut. We would like the Fed to cut. But if you see higher inflation because you have higher growth, that actually is positive for earnings. And that's why I feel good about earnings. I think the fact that we are still up 30% from the April lows, even though we've had a 4.5%, 5% pullback, that's still remarkable. That's remarkable in terms of what we have seen. And at the same time, you have very negative sentiment. You know, you have the fear and greed at 7. You have the S&P oscillator -4. You have the VIX up 41% in 10 days. So any piece of news to turn the narrative around, you're going to see rallies like this.
For sure, yeah. I mean, we came into the day looking a little bit stretched to the downside, at least on a short-term basis. Although, Avery, I guess when those conditions take hold, the question is always, are we going to see something even messier? Do people have to just continue to shed risk? Bitcoin has become the fixation, if only as that kind of risk appetite tell how much portfolio stress is out there. Can we maybe get some comfort in how the market's acting today around that?
So the more speculative areas of the market might continue to see weakness. I'm not sure because liquidity is very tight, right? Even if the Fed cuts 25 basis points next month, like I don't know that
AMD.
meaningfully increase liquidity. So
I haven't looked at AMD today since that NVIDIA news. I got a hammer on AMD.
winners out of speculative stocks that are really priced in too much and going into companies that are undervalued that really have some interesting catalysts ahead.
Shannon, I'm kind of one of those out there saying everyone says they want a broader market. This is sometimes how it looks in the process of it becoming broader, right? You have 35% of market cap in 7 stocks. Almost everybody agrees that's too much. It comes out all at once, and the indexes don't always take it easily.
Well, interestingly, we came into this year, Mike, thinking about the potential deterioration in earnings growth for the hyperscalers, for instance. And so really looking to close that delta, if you will, between the earnings that we were seeing in tech and every other sector. Instead, what you've seen is everything sort of move up to the right together. And I think so we were concerned about this. And I think we were better positioned for this in terms of narrative early in 2025 than we feel right now. But it's not different than maybe what we had talked about earlier. There needs to be some rotation. There needs to be opportunities for this repositioning.
Sure.
And yes, it's going to feel a little bit difficult. I think more importantly, though, it might be able to wash out some of this really speculative AI adjacent exposure that many people have probably let build up a little bit too much in their portfolio. So I think that for us, in our outlook, this is what we were expecting. We perhaps expected it earlier this year, but I think again we've also given an opportunity where if you look at small cap stocks, for instance, the earnings outlook for 2026 looks a lot stronger.
Yes, that is coming through for sure. And Steph, there has been a lot of distinction even within the Mag 7, as everybody knows by now. I mean, Meta's had it rough. Alphabet is now larger than Microsoft in market cap as of today. And we were just talking a little while ago about how if the market decides Alphabet is kind of got the pole position, it might not be that great for the whole infrastructure food chain, but then of course the pendulum can swing in favor of somebody else along the way. So I know you own Meta and think about the space, and how would you position around all that?
Yeah, well, I think with an RSI of 23 at Meta, I think it's way overdone and way oversold. At the flip side, I mean, Google goes up every single day with an RSI of 64. So it's getting a little extended. I think there are plenty of winners in this space. I think all the Mag 7s, all the technology companies that are spending $431 billion in CapEx, they will see monetization, number one, return on their investments, number two. The reason I've chosen to buy more Meta is because we are seeing it with impression growth of 14%, time spent up 5%, NVIDIA time spent up 30%, and you're seeing better pricing of about 10%. That's monetization. And I can't believe that people are willing to sell that, and they've sold this thing now down 25%. In terms of your question to me earlier that I did not answer is where else am I going? Honestly, I think you still want to be in financials. I am watching the industrial data center companies and the build out of the grid. Those companies are winners as well as the NVIDIAs of the world, the semiconductor companies of the world. So I'm absolutely keeping my eye on Quanta Services, Vertiv, Eaton, Rockwell. Those are winners
Somebody.
as well with double-digit backlogs, which is really important, good visibility.
All right, we will leave it there. Really appreciate the conversation to wrap up this week. Avery, Shannon, and Steph. Appreciate it. All right, let's go over to Christina Porcenello. She's got a big corporate story that we are watching right now. Christina.
Did you get anything done on your rocket?
The valves don't work, so I think I'm gonna just do that from scratch.
Just check all your connections and stuff. Use a voltmeter to see if you got current. Might be something simple.
Yeah, I'll triple check, I guess.
You keep moving stuff around, you know, to come loose.
A company spokesperson told me, quote, the regulatory landscape does not allow us to offer a competitive data center GPU in China, leaving that massive market to a rapidly growing foreign competitors. Translation, CEO Jensen Huang has called this market, China, a $50 billion opportunity. But just last quarter alone, NVIDIA only sold about $50 million worth of these China-specific H20 chips because of export controls and because China blocked some of the entrance of those chips. But even if the Trump administration approves a more advanced H200 chip, China itself is the bigger hurdle. Why do I say that? Because Beijing is pushing domestic semiconductor companies to a lot of the hyperscalers over there to use the domestic chips. And Chinese buyers may not actually want chips that first shipped in 2023 when there are newer, higher spec versions from the Blackwell lineup available elsewhere. So it's really, if they get the green light, it's really up to China to see if it goes through. Mike?
Yeah, you can get permission to sell it. You still need buyers. Christina, thank you very much. All right, up next, Mohamed El-Arian of Allianz. He tells us if he thinks a December cut could be back in play and what it might mean for the market into year-end. He joins us after the break. We are live from the New York Stock Exchange, S&P 500 up 1.4%.
S&P pulling back a little bit. All right. I just get the sense that people have left the market, pushed away from their computer screens, and got open. I guess open is starting to go now. Open's running. So I just sense that people have left for the day. Okay. Open. Yeah, that's pushing higher. Open.
UANY. UANY.
Welcome back. Stocks rebounding a bit after New York Fed President John Williams implied the FOMC could cut rates again at the upcoming December meeting. My next guest says markets shouldn't overreact to those dovish comments, though. Joining me now is Allianz Chief Economic Advisor Mohammed.
All right. Things are slowing down into the close.
Incomplete economic data and clearly different ways of looking at things. So how does it net out to you?
It nets out as uncertain. It nets out as whatever the outcome is going to be controversial, it's going to be messy, and it will
S&P pulling back.
The market is all over the place on this, Mike. As you know, in the last 3 weeks alone, the implied probability of a December cut went from the 90% to the 30%, and now to the 60s. Those are
Low tick alert minus 800.
That is on December.
Okay, so they're taking profits.
It reflects what you said, and this is what's going to remain uncertain. The data isn't going to resolve this.
S&P. Let's see what kind of run we might get to the downside. Okay, so it looks like somebody is probably selling this position right here. Let me see. Let me just scroll back. Okay, see these positions right here? These positions are coming off. So that's pushing, making downward pressure on this. See that? You see how this is coming off? All right, we're probably going to drop back below this level.
Distinctly or another, it might be up to how the market behaves between now and then. I wonder if that even is going to be the deciding factor. And then the question is, just how high are the stakes for the economy itself, in your view, as to whether we get a cut or not?
So I think it's remarkable, as Steve said, that Fed officials have put out so explicitly their views. This would not have happened before. Secondly, yes, where the market goes may have an influence. Thirdly, the Fed has a basic problem. In an AI-led economy, GDP growth is decoupling from employment. I mean, when else have we spoken about a weak labor market when the Atlanta Now estimate of GDP is at 4%? These are historically inconsistent elements. And it speaks to the fact that the consumer sector is relatively weak. We saw that today. People are worried about unemployment. But we have another engine which accounts, depending on how you measure the wealth effect, 60 to as high as maybe 90% of the drivers of GDP. So this is a really rough, tough position for the Fed to be in. And it's one
S&P dropping off.
Is going to be with us in future Fed meetings as well.
It's true, although, at one point, and maybe in the abstract, those conditions might lead you to believe that a cut would be more likely than not, simply because the Fed is meant to be targeting employment levels, not GDP, right?
Oh, absolutely. But the strong economy is also keeping inflation up. And we saw in the UMich data today that inflation expectations are at 4.5%. Look, if I were on the Fed, I would cut, but I would cut not on the basis of the current state of the economy, but on a strategic view of the economy. I think that AI and other innovations, robotics, life sciences, are going to contribute to a significant increase in productivity. The speed limit for this economy is going to go up. There will be employment issues to deal with. So if you look at whether you have the ability to cut, is yes. Whether you have the willingness, it should be yes, because the labor market is weak. So if I was there, I would cut. But I started by saying it's just about a strategic vision. This Fed has not taken a strategic vision. It has been overly data dependent, and that's why they're in the mess they're in right now.
Yeah, I mean, I know there's certainly not been an articulated strategic vision about the AI investment cycle and what it's going to mean in terms of reshaping the economy or employment or anything like that. What do you think we should expect on a longer-term macro basis from this? I mean, it's one of those things where bubbles are very dangerous if you buy near the top, but they tend to have positive longer-term effects in terms of kind of helping to build the economic future.
Yeah, you know, I put up an op-ed yesterday in the New York Times saying it's okay if we are in a bubble, and I think there are elements of a financial bubble. But what is behind the financial bubble, Mike, as you know, is a tremendous amount of capital enabled by the U.S. capital markets to fund innovations, research, etc., that will make us better off over the long term. So if a financial bubble is a byproduct of this major shift of capital into a sector that has such promise, I'm okay with that. We as a whole will be better off. There will be some investors nursing some pretty big losses, and we can go through the areas of excesses, but the economy as a whole will be better off.
Yeah, as it was with railroads and the internet, I guess. And electricity. Take some comfort there. Yes, Mohammed, I appreciate it. Thank you very much, and have a great weekend.
You too, Mike.
All right. Well, stocks have been surging, although they have lost some altitude to end a volatile week. Up next, HSBC's Max Kettner tells us how he is playing these big market swings. Closing bell. Be right back.
Okay. There's a little profit taking there. Now they're going to run in the other direction. This end of day stuff is pretty wild. Watching these S&P options going back and forth. Okay, what are we going to do here? We're going to jump. All right. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It is 3:34, 3:35, with a little bit more than 24 minutes to go. Let's see what they're going to do here. A couple of positions came off. You can see those very clearly here. These positions came off. Now the hedge flow is turning back up. 66.30. This is all gone now. If you look back earlier, whoops. If you look back earlier, you can see how much was there at 66.30, 66.40. Okay, we're running back up now. High tech alert. They're running it back up.
I may resume in less than a minute.
Okay, we're running here. We're running. Head back up. Heading back up. All right.
Welcome back. Stocks in the green across the board as the index is trying to rebound from this week's steep sell-off. My next guest is aggressively overweight stocks, calling recent concerns around an AI bubble overblown. Joining me now is HSBC's Max Kettner. Max, great to catch up with you. So even if the concerns about an AI bubble being dangerous and imminent or overblown, I guess it doesn't mean
S&P equal weight index looks okay. Junk bonds. Looking for that to bounce. Junk bonds. Junk bonds look a lot better. All right, so not too bad. Not too bad. Junk bonds look better.
Starting with the early primaries against some very tough people, very smart people. And he beat them, and he beat them easily, and I congratulated him. And we talked about some things in very strong common, like housing and getting housing built, and food prices, and the price of oil is coming way down. Anything I do is going to be good for New York. If I can get prices down, it's good for New York. And we've got them down, way down from last year. As you know, I've been saying to a lot of people, Walmart said that Thanksgiving this year is exactly 25% less than last year. So that's good for New York, good for everybody. But I just want to congratulate. I think you're going to have hopefully a really great bear. The better he does, the happier I am. I will say there's no difference in party. There's no difference in anything. And we're going to be helping him to make everybody's dream come true, having a strong and very safe New York. And congratulations, Mr. Mayor. Thank you, Mr. President. Thank you. I appreciate it. Please.
I appreciated the meeting with the president, and as he said, it was a productive meeting focused on a place of shared admiration and love, which is New York City, and the need to deliver affordability to New Yorkers, the 8.5 million people who call our city their home, who are struggling to afford life in the most expensive city in the United States of America. We spoke about rent, we spoke about groceries, we spoke about utilities, we spoke about the different ways in which people are being pushed out, and I appreciated the time with the president. I appreciated the conversation. I look forward to working together to deliver that affordability for New Yorkers.
Thank you very much. Any questions?
Watch. We got a live conference here with Mamdani and President Trump. So this could go either way really quick. If there's anything said that's controversial here in the next few minutes.
First came to office, it's now quite a while ago. It's quite a while. My first term was great. We had the greatest economy in the history of our country. We're doing even better now. We're doing much better now than we did even the first term. And I can tell you, some of my views have changed. And we had discussions on some things. I'm not going to discuss what they were, but that I feel very confident that he can do a very good job. I think he's going to be. I think he is going to surprise some conservative people, actually. And some very liberal people, he won't surprise them because they already like him.
And Mr. Mamdani, it sounds like you had a productive discussion, but just days ago, you referred to President Trump as a despot who betrayed the country. You said his worst nightmare and accused him of having a fascist agenda. Are you planning to retract any of these remarks in order to improve the relationship?
I think both President Trump and I, we are very clear about our positions and our views, and what I really appreciate about the president is the meeting that we had focused not on places of disagreement, which there are many, and also focused on the shared purpose that we have in serving New Yorkers. And frankly, that is something that could transform the lives of 8.5 million people who are currently...
Well, at least he knows not how to bite when a reporter throws a zinger out there.
Again and again to what it could look like to lift those New Yorkers out of struggle and start to deliver them a city that they could do more than just struggle to afford it, but actually start to live it.
And that's been called much worse than a despot, so it's not that insulting. Maybe I think he'll change his mind after we get to working together. Yes, please. Good.
I would like to ask you a question about the Middle East. You said that Lebanon is not in a good position. And Lebanon now...
S&P just kind of fading a little bit more.
Given your assessment, like what you say for the race today is the state of Lebanon, and what is your next move to push for disarmament?
Sure. Well, we are pushing for total disarmament of Hamas and, frankly, everybody else. And we actually have peace in the Middle East. As you know, the King of Saudi Arabia just left yesterday. We had some great meetings, and he's made a contribution toward the United States of more than $1 trillion. We have now over $20 trillion coming in. No country has ever had anything like that, not even close.
Got 16 minutes to go. President Trump is speaking with Mamdani standing to his right. Trump sitting down, just talking to reporters right now. Market's pretty calm. Decent comeback from yesterday's shellacking. I honestly don't see really bearish signals.
Strongly about peace in the Middle East. Because
we desperately want it, and that's something that I shared with the president, that when I spoke to New Yorkers who had voted for the president last November on Hillside Avenue and Fordham Road, I asked them why. I heard again and again two major reasons. One was that they wanted an end to forever wars. They wanted an end to the taxpayer dollars we had funding violations of human rights, and they wanted to address the cost of living crisis. And I appreciated the chance to discuss both of those things.
You said a lot of my voters actually voted for him, and I'm okay with that.
Mayor-elect of New York, Zohran Mamdani, talking to President Trump in the Oval Office. Let's send over to Eamon Javers for more on what was a pretty friendly exchange, it seems.
Wow, fascinating, Mike, right? I think a lot of political insiders on both sides of the aisle were kind of spoiling for a fight today.
Yeah, I thought there was going to be a fight. I definitely agree with that.
As we watch this unspool here in real time, it's clear that both leaders are committed to sticking to this commentary that they both have a shared agenda focusing on affordability in New York State. New York City. They both love New York City and want to improve it, and that is some common ground that they can build on here. And what a stark contrast is. You see one man standing there, one man sitting there, whether it's party, ideology, generation, religion, approach to the world. These guys could not be more different than they are, and yet the nature of the American system is we see them sitting in the same room at the same time. And there is, I think, Mike, here an element, both of them very active on social media, both of them inspiring passion among their followers. There is, I think, a political element here of game recognizes game. And it's very early days, and you heard the president say there, we'll see if he changes as he takes office. I've changed since I've taken office. So, this is early, but both men clearly at pains to be on their best behavior here, Mike.
Yeah, for sure. And yeah, as you allude to, both having won elections when nobody really initially thought they had much of a shot to do so the first time. Amy, thank you very much. All right, up next, we are tracking the biggest movers as we head into the close. We'll be right back.
Okay. Starting to rally a little bit into the close. S&P trying to go a little bit. A few minutes left to go.
High tick alert plus 800.
High tick alert.
In his numbers in New York City that came back to the same issue: cost of living, cost of living, cost of living. And they spoke about the cost of groceries, the cost of rent, the cost of Con Ed, the cost of childcare. And too often politicians are looking to lecture to New Yorkers what they should care about as opposed to listen. And when we spoke to those voters who voted for President Trump, we heard them speak about cost of living. We focus on that same cost of living, and that's where I am really looking forward to delivering for New Yorkers in partnership with the president on the affordability agenda.
And I think we have to work a little bit. We talked about Con Edison. We have to work a little bit on getting the prices because, we've gotten fuel prices way down, but it hasn't shown up in Con Edison. And we're going to have to talk to them.
Uh-oh. You're going to talk to Con Ed.
Much lower price than it was a year ago, which is true. We have to get Con Edison to start lowering their rates.
Absolutely.
Con Ed. Edison International? Not much reflection here.
UK, I like him. He's a fine person, and I think they have some big energy problems. They've got windmills all over the place. They're gonna have to start
Con Ed.
other methods because they're
Off the highs.
talking about in the UK is out of control, and he's got that problem. He's got a big immigration problem, as you know. He's got a big energy problem, and we talk about it. He's a good man. Prime Minister's a good man. I haven't spoken this way. Who? I've spoken with their people. We have a plan. It's horrible what's happening. It's a war that should have never happened. It would have never happened to Vice President, and it's a shame. And I thought they should have acted quicker. But it's a cold winter.
All right, we got 10 minutes left.
A lot of talking about utilities, but a lot of the big energy producing plants have been under attack, to put it nicely. We have a way of getting peace.
Make sure you check your options if there's something that's expiring today that you don't plan on getting assigned to. Make sure you check in. I'm going to go through that right now.
I don't want to predict. I would have said that would have been one of my early ones. I did 8 peace deals of countries, including India, Pakistan. You could even go, in fact, they're coming here in a week or two, go to the Congo and Rwanda. That was 10 million people dead. And work something out on that. There's so many, but what I thought would have been, for me, because I have a very good relationship with President Putin, I thought that would have been maybe quicker. But it does take two to tango. And now you see all the death. And it doesn't affect us other than the fact that we don't want to see all those people that really. So the other side of the ocean, that's a war that should have never happened. It did happen. I blame the person also sitting right behind this desk. This is a war that should have never happened. And it wouldn't have happened to our president. But we're trying to save a lot of lives. They're losing 25, think of that, 25,000 lives over the last short period of time. That's Ukrainian and Russian. And it's a shame.
Resolution just passed overwhelmingly to condemn socialism, including with 86 Democrats, all of House Dem leadership, and the minority leader, Jeffries, despite his endorsement of you.
I have to be honest with you, I focus very little on resolutions. Frankly, I've been focusing. I understand. I think the focus is on the work at hand. I can tell you I am someone who is a democratic socialist. I've been very open about that. And I know there might be differences about ideology, but the place of agreement is the work that needs to be done to make New York City affordable. That's what I look forward to.
Your answer to Stephen Nelson, he asked about your comment calling the president a fascist. And your answer was, well, President Trump and I care about our positions and our views. Are you affirming that you think President Trump is a fascist?
I've spoken about.
That's okay. You can just say. Okay. It's easier. It's easier than explaining it. I don't know.
And I wanted to ask you also about this Ukraine plan.
Yeah.
President Zelensky said today that his country would risk either giving up his partner or giving up his dignity. There's no criticism of this deal.
Even if he doesn't like it.
It's unclear. He was sort of defending.
He'll have to like it, and if he doesn't like it, then they should just keep fighting against it.
The suggestion you made though was that if he doesn't accept it, that the U.S. would pull back its support for Ukraine.
Well, at some point he's going to have to accept something. He hasn't accepted. He was never right in the Oval Office not so long ago. I said, you don't have the cards. Don't forget, I inherited this war. This war never would have happened. I inherited this war. And I thought you should have made a deal a year ago. 2 years ago. The ultimate deal would have been if it never started. That would have been a good deal. That could have been done too if you had the right president, but you didn't have the right president.
Seem to agree on, right? Democrats have run New York City for a long time. Do you see Democrat policy specifically as being a problem?
Look, I think that there are many things in our city where we have to own the responsibility of it, things that existed long before the president was the president. And those are also part of the message of our campaign, was to take on a broken politics of the past. And I ran against a number of candidates who represented different versions of that past. And what we found time and again is that working people were left behind in the politics of our city. And what we're looking to do is put those people right back at the heart of our politics so that we don't have a situation where we're in the wealthiest city in the history of the world, and yet 1 in 5 can't even afford $2.90 for a Metro card.
We had some interesting conversation, and some of his ideas really have the same ideas that I have. But a big thing on cost, the new word is affordability. Another word is just groceries. And it's sort of an old-fashioned word, but it's very accurate. And they're coming down. They were, we had, both of us, we had the highest inflation in the history of our country in the last 4 years under the Biden administration. And we've got inflation down now to a normal number. It's going to go even a little bit lower than that. Katie, do you have something?
Covered by international law, and all international law, the talk about the U.S. Constitution. What is your response to this?
Well, I don't know what you refer to in terms of it can be covered by international law and local law. It's covered by a lot of laws. And,
less than 5 minutes to go.
Are you referring to anything in particular?
Strategy just keeps dropping.
I think what I've shared with the president is our desire to not only follow the laws of our own city, laws that protect New Yorkers, but also a desire for consistency in our politics across the board, and that's something that we've talked about and something that I know many of you want. We discussed ICE and New York City, and I spoke about how the laws that we have in New York City allow for New York City government to speak to the federal administration for about 170 serious crimes. The concerns that many New Yorkers have are around the enforcement of immigration laws on New Yorkers across the 5 boroughs. Most recently, we're talking about a mother and her 2 children, how this has very little to do with what that is.
We discuss crime more than ICE per se. We discuss crime, and he doesn't want to see crime, and I don't want to see crime. And I have very little doubt that we're not going to get along on that issue. And he said some things that were very interesting as to housing construction, and he wants to see houses go up. He wants to see a lot of houses created, a lot of apartments built, etc. You know, we actually people would be shocked, but I want to see the same thing. Jack.
One of the policies as well that Mayor Adams talked about a number of times about on the campaign was shifting the tax burden for property taxes from what he called minority communities to white-based communities and putting more taxes on white people. I also noticed that in your acceptance speech, you didn't mention anything about America or Christians or white people in general. And so I didn't know if that was one of the policies that you guys were talking about.
We focus on affordability, we focus on cost of living crisis. What I will say is that I am very much interested in property tax reform, because what we see right now in New York City is a system that is so inequitable that it can't even stand up in court. And the president and I spoke about the importance of not only building more housing, but also making sure that regulation of housing is something that is manageable to actually get through and not the cause of yet another wave that we see.
Continuing this idea of race-based property taxes.
No, to be very clear, no, the use of the term was a description of neighborhoods, not a description of intent. No, we intend to create a fair property tax system because we want a New York City that is not only fair and equitable, but also one that every New Yorker can afford.
Protesters just targeted a synagogue in New York. I'm concerned that Jewish New Yorkers would walk in safety. President Trump, are you trying to involve that with New York City?
Got less than 2 minutes to go.
Well, I think if we didn't get along, whether it's cut off or just make it a little bit difficult or not give as much, and we want to see, I use the term, we don't want good money going after bad. We don't want that to happen. I don't think that's going to happen. I did say that, subject to what policies are being said. We had a meeting today that actually surprised me. He wants to see no crime. He wants to see housing being built. He wants to see rents coming down, all things that I agree with. Now, we may disagree how we get there. The rent coming down, I think one of the things I really gleaned very much today, we'd like to see him come down, ideally by building a lot of additional housing. That's the ultimate way. He agrees with that, and so do I. But if I read the newspapers and the stories, I don't hear that. But I heard him say it today, and I think that's a very positive step. No, I don't expect. I expect to be helping him, not hurting him. A big help, because I want New York City to be great. Look, I love New York City. It's where I come from. I spent a lot of years there. Now I'm right here. We took a big setback with the mayor that we had, named de Blasio. I thought it was a tremendous setback for the city. I think this mayor can do some things that are going to be really great.
Mr. President, I'm not saying Mr. President.
Okay, how about you? Go ahead, please.
You have different addresses nowadays than you used to call New York City home. Would you feel comfortable living in New York City under a Mamdani administration?
Yeah, I would. Especially after the meeting. Absolutely.
What makes you comfortable?
We agree a lot more than I would have thought. I think he's.
All right, folks. Kind of a slow ending to the day, but pretty decent day. What I will say is, markets don't show me signs of a meltdown. There's a couple of warning signals, but other than that, markets look okay. All right, so I'm your host, Cousin Vinny, coming to you from theclosingprint.com at the closing bell. It is Friday the 21st, 4 p.m. straight up. I'll send out the watch list and the weekend video on Sunday, of course, regular times. So make sure you check your inboxes for that. Otherwise, enjoy the rest of your weekend. Take care. I'm signing off. I'll talk to you then. Ciao.